Good morning. We are back on our home turf for the first public hearing of the Finance, Revenue, and Bonding Committee meeting. I will double check the other leadership of the committee to see if they have anything to say. Seeing shaking heads, I will just remind everybody of the procedures that we use for public hearings in this committee and in many others in this building, which is that each person, there is a speaker order published, of course, and each person will be limited to 3 minutes of testimony, followed by questions from committee members. We also want to note there are a number of people who are signed up who are from the same organization. We want to encourage you heartily to form a panel. If a panel of 2 or more speakers from the list join up, they will be given 5 minutes to testify. At the end of that 3 or 5 minutes, depending on whether you're an individual or a panel, our good committee clerk, Ali Kaif, will give you a polite but firm reminder that you have hit the 3-minute limit or 5-minute limit. And I just want to remind everybody that the reason we do enforce those limits is we have 153 people signed up to speak today, and we want to give the same level of respect and attention to those at the end of the list as those at the beginning of the list. So Mr. Administrator, do you have any other reminders you want to share this morning? Or are we good to go?
We're good to go.
We're good to go. Okay, with that, we will call our first speaker, President of the Senate, Martin Looney.
Thank you so much, Madam Chair, Representative Horn, Senator Fonfara, distinguished members of the Finance, Revenue, and Bonding Committee. I'm Martin Looney, State Senator from the 11th District, representing New Haven and Hamden. It was my great honor and pleasure to be the Senate Chair of this committee for 6 years, from 1997 through 2002. I believe most of the current members of the committee were at least born then, if not necessarily very old. But in any case, this is one of the key policy committees of the entire General Assembly, and it's always an honor and pleasure to be here to testify. And I wanted to bring to the committee's attention, I appreciate raising these bills for a hearing, Senate bills, proposed Senate bills 101, 102, 103, 104, and 115, all of which urge ways to increase our tax fairness in the state of Connecticut. And we have made great strides in making our income tax structure more progressive over the years. It is now progressive for low and moderate income people, but it is now not sufficient to raise the revenue that we need because of the lack of adequate resources being raised at the upper end. The fact that we face such a challenge because of the federal attacks that we face are so painful. We know that under the Trump proposals, people making over 1.2 million a year saw their taxes decrease last year, while low-income people will see their taxes increase. We are faced with the state consequences of these federal policies. So Senate Bill 101, an act establishing a statewide property tax on certain residential real property. This would provide a 2 mil tax on taxes on properties that are valued at over $3 million. That's the assessed value. Market value would be approximately 4.2 million for those properties. And that for properties between 5 and 10 million would be 3 mils. For properties over 10, it would be 4 mils. So we often hear that the very wealthy are, of course, able to avoid taxes and very sophisticated strategies, but the ownership of property is transparent. And we would hope that the committee would consider this as a way to raise additional revenue that could be targeted for property tax relief. According to an OFA estimate last year, the statewide property tax would generate approximately $70 million in new revenue were we to adopt it. And it could be used to give back to cities and towns and in the form of an increase in the foundation grant for ECS or other forms of property tax relief. Senate Bill 102, concerning the distribution of the sales and use tax imposed on meals sold by an eating establishment, caterer, or grocery store. This in 2019, This meals tax was established on prepared meals. We would propose that this surcharge on the tax would be kept in the municipality where the sale is generated as another form of municipal relief. It would generate over $118 million in fiscal 27, again, to offset local property taxes. Senate Bill 103, an act establishing a refundable child tax credit, would propose phasing in of the child tax credit starting in the next fiscal year at $150 per child up to 3 children, increasing over the next 3 years to $600 per child up to 3 children. This would, as we know, be the kind of targeted relief that would make such a tremendous benefit and assistance to families. It would build upon the earned income tax credit, which helps the working poor. This would provide some more relief extending into the middle class. We saw the great impact of this during the brief existence of the federal child tax credit a few years ago during COVID. So I think this is a key way of focusing where the need is greatest. Senate Bill 104, an act establishing a capital gains surcharge. The committee actually reported out a bill last year that would, in effect, do this, would establish a new capital gains surcharge on filers only in the top 2 income brackets in the state. That is, those who are in the 6.99 and 6.9 brackets, so that their capital gains who would be they would be taxed an extra 1% if you were in the top bracket, only on the capital gains income, and 0.75% for those in the second bracket. It's estimated by OFA that this would raise about $190 million a year in additional revenue. Senate Bill 114, eliminating the qualifying income threshold for the personal income tax deductions on Social Security benefits. We know that there are approximately 225,000 seniors in the state who still pay Social Security tax on, still pay income tax on part of their Social Security tax. There are another 500,000 or so that are already exempt. This would exempt the remainder. The cost of that would be about $54 million. The reality is that would help us to retain retirees in Connecticut, and it would also recognize the fact that older people, even some who might be more well off than others, do have extraordinary expenses, often for medical care and assistance that they have to provide and pay for. And this would help us join the states that do exempt all of this, because unfortunately, when you look at many surveys, the fact that we only tax a portion of Social Security is not often recognized, but we're listed among those that tax Social Security. So I would propose that we remove that. And so thank you again. Would love to take questions or dialogue with the committee, but would recommend those 5 bills to the committee this morning. Thank you.
Thank you, Senator. As usual, you've covered a great deal of territory in a short period of time, but I know these are all long-held principles for which you have fought for many years. Any questions from the members? Representative Farrar.
Thank you, Chairwoman. Senator, great to see you today. Thanks for opening our long hearing. We appreciate you coming. I appreciate all of your comments on the proposals. I did want to ask, because you have been for many years, at the forefront, especially of advocating for and putting in proposals around the child tax credit, a specific question around that proposal. This last year, through the budget process, we, wonderfully, not only focused on building upon our earned income tax credit with a boost for families of $250, but we voted out of the Finance Committee a child tax credit. And one of the things I wanted to ask you was, because thanks to so much work on providing that EITC boost, we have in front of us this year still the child tax credit. And I was hoping you could speak to, in your opinion, why that's still needed, even though we did the boost for the earned income tax credit families.
Well, I think it's needed because families above the threshold of eligibility for the earned income tax credit still need some help, and the child tax credit would benefit families who are somewhat more resources than those who are eligible for the EITC. The EITC was critically important. We were the last state in our region to adopt it. States having a state income tax, and we finally got it across the the threshold in 2011 with Governor Malloy, and it does recognize that people are working. They're working in low-income jobs, and almost every dollar that they make goes into is spent again in the economy, because they are often living on such a thin margin that they're not in a position to save or hoard resources in any kind. And it's proved over the years that since we've been able to get it up to the level of 40%, it is now pretty substantial. It's one of the leading rates in the nation. It was initially established at 30%, was reduced, unfortunately, for a period of time, during our crisis in fiscal and after the fiscal 17 year, or the summer of 17 budget. But then we were able to work it back up to 40%. I thank Governor Lamont for his partnership in that. But I think as I said, the child tax credit is a way of targeting relief to families who have all kinds of additional expenses just because of the fact there are children in the household.
Thank you, Senator. Because as you said, the more we kind of think about families across the continuum of working and middle class families, the more the benefit is for all of us. So thank you for speaking to that. And again, thanks for your ongoing leadership and coming before us with all these proposals today. Thank you, Senator. Thank you, Chairman.
Thank you, Representative Farrar. Online, we have Representative Butler. Representative Butler, I believe you're on mute. There we go.
Yes, thank you. Thank you, Madam Chair. Thank you, Senator Loney, for all your financial initiatives that actually address the families that are in great need in the state. I just wanted to ask about one of these, and that's the initiative for Social Security. It's been my belief that Social Security earners that have their only income are exempt from federal taxes. Could you just talk a little bit about how this initiative would impact the Social Security recipients, both in that category and those that are still working, but also collecting Social Security?
Well, Representative, which is just mean that the remnant, or the portion of Social Security that is currently taxed in Connecticut, would not be in the future. So there are some Social Security recipients, I believe, whose family income is $100,000 or $150,000 a year, are still taxed on their social, or portion of their Social Security. This would remove that. So as I said, I think there are about 225,000 people in Connecticut who do pay some tax on their Social Security. There are another 500,000 or so that are already exempt.
Okay, thank you very much. And Madam Chair, I'm going to respect your wishes for us to actually talk to some of these folks we know offline, so that we don't actually have this prolonged kind of public hearing, and let everyone have a chance to ask their questions. Thank you, Madam Chair.
Thank you, Representative Butler. And if I didn't say so at the beginning, I will remind everyone that we do have a 2-question limit. So thanks for noting that. Senator Fazio.
Thank you, Madam Chair, and thank you, Mr. Senate President, for your testimony. It's good to see you.
Good to see you, Senator.
I wanted to ask, as we all know, Connecticut has high taxes cumulatively compared to other states. And the Tax Foundation says that we have the 3rd highest tax burden of any state, and most rankings put us in the top 5. All rankings put us in the top 5 or the top 10. So I have a natural disinclination to any net tax increases. I appreciate the efforts to maybe make the tax burden overall more progressive, but I wonder, why not focus on cutting middle class and working class taxes to reduce the aggregate tax burden, rather than increasing the aggregate tax burden on all taxpayers, as these proposals, I think, add up to, especially because the other states in the Northeast that have very high top marginal tax rates, like Massachusetts, New York, and New Jersey, saw much lower economic growth than the country as a whole in the last 5 or 6 years.
Well, Senator, I don't agree that we have a very high aggregate tax burden across the board. I think we have a a high tax burden based on the local property tax. The property tax is really a regressive tax in Connecticut. Our state income taxes are not high. We've made them increasingly more progressive over the years. We started with a flat 4.5% rate and have built progressivity into it by creating the tiered structure we've had since then. And then we lowered the tax a couple of years ago on the two lowest tiers. So I believe we have quite a progressive and moderate income tax on low and middle income people in the state. The problem is I think our income tax doesn't raise enough revenue at the highest end. That 6.99 could be somewhat higher. There's a tremendous amount of wealth at that level. And that I think that it is problematic for our state's fiscal health that someone whose earnings are $1 million a year are the same percentage of their income as someone who's making 10 or 20 or $50 million a year. And that's I think there is room there, and at the same time keeping our tax rate quite moderate for the others. Now it was your predecessor, once removed, Senator Nickerson, who was responsible for the income tax that we initially adopted in 1991. I was in the House of Representatives at the time, and we had the votes then to pass a more progressive income tax. The Senate was one vote short of being able to pass any when Senator Nickerson stepped forward and said that he would support a flat rate tax. At the time, people often don't recall that we had a partial income tax then. We did have a tax on capital gains and dividends and interest that was higher than what people are paying now on their aggregate income. But there was not a broad-based tax on earned income. So for many people in the wealthiest parts of the state, their income tax liability or their total tax liability came down when it was all taxed at 4.5% rather than what they were facing before. So I think Senator Nickerson really both helped solve a problem, but also provided a great benefit for the wealthier people in the state. So what we've done for the last 35 years is build greater progressivity into the income tax. And I think we have succeeded in that. But the real problem in this state is the sales tax, and that is a problem in regressiveness. But it is the property tax overall that is the worst, because if you look at statistics that point out that Connecticut's middle income people pay a higher rate of taxation than the very wealthy, you say, how can that be when the wealthiest are paying 6.99, middle income people are paying a blended rate of 4 or 5? Yet how is it that the very wealthy are paying less in the aggregate? And the answer is that their property tax burden is so much less, that the people, even if they own valuable homes, their wealth is so great that their property tax is much less burdensome to them than it is to lower income people. So for instance, one example that we researched, an $875,000 home in the city of New Haven, which is a pretty high-end house in New Haven. The owner of that property at 38 Mills pays about $23,000 a year in property taxes. To be paying $23,000 a year in property taxes, someone in Greenwich would have to own a property valued at $3 million, taxed at $2.1 million. Again, that exclusion of 30% also is something that provides a windfall for the owners of most valuable property, because $900,000 of the value of that $3 million home is excluded, but only 200 and something thousand of the home in New Haven is excluded. So there are all kinds of inequities built in. So our property tax is high, both as a percentage of the value of the property taxed, and also as a percentage of the income of the owner of the property as well. And there have been many statistics that have examined that. And that is really, I think, the core of our problem, and that the inadequacy of our overall tax structure to meet that need is what leaves us struggling. And it's also the problem we have is that one study showed that cities like Waterbury have an effective property tax in excess of 4.21%, but others are, like Greenwich and some others, are under 0.8%. So that's the gist of our problem. Again, a recent study pointed out the net grand list per capita in Greenwich is now over $1 million, which is why the mill rate can be under 12 and provide a rich array of services. In cities like Hartford and New Britain and Windham and Waterbury, the net grand list per capita is under $90,000. Hence the inequities.
Well, I appreciate the answer. I think we have some disagreements. That's why I think focusing on reducing the aggregate burdens of government on the state and local level should be the focus. The property tax burden is too high, and that's part of the reason I voted against the e-certification bill 2 days ago, because CCM pointed out that it would make it higher because of the municipal mandates imposed. I want to ask, one final question. And, there is a very, very large hedge fund in the state with, I think, $40 billion of assets under management. And it doesn't have to pay any capital gains or dividends tax. And it also doesn't have to pay much tax at all on its real estate. It's called Yale. And I was wondering if you thought that it would be more equitable, for instance, if we could raise a few $100 million just by taxing their capital gains and dividends at a normal rate in order to alleviate the tax burden on the middle class.
Thank you for that question. That is certainly something that I would consider under normal circumstances, except for the fact of the Trump administration. I think that the tax on endowments that has been imposed on universities like Yale and that has had such an effect on them that now would not be the time to add additional tax burdens to those universities that are under siege. In fact, right now, Yale is already contemplating perhaps backing off from the commitment that it made 5 years ago to the city of New Haven to extend its annual contributions. There was a kind of a global agreement reached 5 years ago when the state of Connecticut revised the pilot formula to create a tiered structure based on net grand list per capita. New Haven's pilot payments went from $45 million a year to $95 million a year at the time, because New Haven and Hartford, of course, are the most tax exempt property. At the same time, Yale made a deal with the city to up its contributions from about 13 million annually to about 23 million. They're in negotiation now with the city, and some in the Yale administration are saying they won't be able to sustain the level of aid they're giving the city right now because of the cost of the endowment tax that the Trump administration has proposed. So that's certainly a conversation I think I'd like to have, Senator, but under different circumstances.
Well, maybe we can continue the conversation. I certainly wouldn't say they're under siege when they're paying 8% on $40 billion and regular taxpayers are paying over 20%. Thank you for your time, Senator.
I don't think that the fact that they're looking to use the endowment tax as an excuse to lower their payments to the city, I don't think that's really valid either.
Thank you, sir. Thank you.
Thank you, Senator.
Thank you, Senator. Representative Paolillo.
Thank you, Madam Chair. Thank you for the opportunity. Great to see you, Senator. Thank you for your testimony today. Most of my questions have been answered, but I just wanted to give you a chance with the proposals that you have put forward to talk a little bit about, you've mentioned the net equities around the property tax burden, and certainly the over-reliance. But with your proposals, it's creating additional revenue streams, but also consistency. And if you can talk about that, and you just mentioned the Yale voluntary payments, when there is not that consistency from the outside, having those alternative revenue streams to be able to fund education and other worthwhile initiatives that are in discussions here and throughout this building, to be able to provide for those very, very important needs.
So thank you, Representative, and of course, in representing New Haven, you're always sensitive to the issues regarding what Yale does or does not do to support the city. But again, it comes down to, in cities like New Haven and Hartford that have half of their property tax exempt because of the private college or hospital property there. That is a burden that they bear. We partially make up for it through the pilot payments. We've improved that over the last few years by creating the tiered pilot based upon need, but still the overall property tax burden remains. And of course, the property tax is highly regressive because it is based upon the value of the property and not on the income of the people owning the property. So a two-income household that's managing to afford their property taxes, all of a sudden, when one of those incomes is lost through illness or layoff or whatever, the property tax burden is not adjusted because of that. Their income tax will probably go down because they'll have less income. Their sales tax spending will probably go down because they'll be living on a restricted budget, but their property tax remains the same. And that is really the problem that we have, is that property taxes are just so high in Connecticut because we have not been able to develop a robust enough revenue stream through the income tax to provide the degree of property tax relief that we should.
Thank you, Senator. Thank you, Madam Chair. And thank you for your leadership also on pilot and being able to transform pilot. Thank you.
Thank you.
Thank you, Representative. Vice Chair, Representative Constantine.
Thank you, Madam Chair. Thank you, Senator Looney. It's been a pleasure to listen to you just for the last 2 years. I kind of feel like I'm in a college class listening to you on taxes, which is very informative. And because I know you have all this information, going to the SB 104 on the cap gains tax, you said there's $190 million in revenue if we do those increases. Could you let us know, since they've done the analysis, could you let us know, like, who would be bearing that increase? Is it W-2 earners, pass-through entities, partnerships? Did they break down where the burden would actually fall on? What type of earners?
Well, we're talking about those who pay the highest current rates of the income tax. So those are people whose all of their income is now taxed at 6.99 or 6.9%. So we just people at that level of wealth of over $500,000 or $1 million would see an increase of 1% on the capital gains portion of their overall income. So it would be again, so most of their some of their income would be taxed at 6.99, and in effect, some at 7.99. We had a study that OFA did a couple of years ago that pointed out that for most people who are earning under $100,000 a year, over 90% of their income taxes are paid through their payroll withholding. But when you get to the level of about $2 million a year in income, almost 80% of the income in many cases is paid in estimates and finals or quarterly, so that the earned income portion of someone's overall annual income decreases as people get more wealthy, and the increase and the portion of it that is accounted for by investment income, non-earned income, grows. So that I think that was pretty stark about people under 100,000. Almost all their taxes are paid through their payroll withholding from employment. But when you get to that $2 million level, employment income is a significantly smaller portion of their overall income, and investment income grows.
Thank you.
Thank you, Representative. Mr. Co-Chair, Senator Fonfara.
Thank you, Madam Chair. Good morning, Senator Looney. It's great to see you.
Morning, Mr. Chairman.
And in the spirit of honoring the 153 people, or 52 who will follow you, I can say with confidence that this committee is always honored to have you here and beguiled by your massive knowledge of this subject and so many others. And I don't have any questions for you today. I could easily, as I think everyone here would as well. And we enjoy the back and forth that you always provide for us. But just know that we could be here until probably sunset just listening to you today. But I'll refrain, and hopefully others will as well, until we all have an opportunity to speak to you privately that folks in the public do not. But thank you so much for your testimony today. Thank you, Madam Chair.
Thank you, Mr. Chairman. Thank you for your leadership on so many of these issues over the years, as well as Representative Horn. So again, it's having chaired the committee, I always value its work and just cherish every opportunity to come before the committee for a dialogue.
And I take this opportunity to echo the sentiments of my co-chair. We also learn a lot from you, Senator. So thank you for being with us. And seeing no further questions, we will let you move on with your day.
Thank you so much. And I hope that you'll get out of here at a reasonable time tonight.
Next up, we have Senator Harding. Okay, we will return to Senator Harding, and we will go next to tiny writing on my list. What'd you say? Rob Burrell. Burrell. Sorry if I'm mispronouncing your name. Oh, I'm sorry. You are here. Excuse us. We will move to the Minority Leader, Vin Candelara, and his panel, exemplifying for everyone in the room what it means to form a panel. And if you are tempted to join them in that, please approach our administrator. And again, please ensure that everyone on the panel introduces themselves. Good morning. The floor is yours, Mr. Minority Leader.
Thank you, Chairman Horn, Chairman Fonfara, Ranking Members Fazio and Paletta. You have my testimony, so I am not going to reiterate it, but I'm here with Scott Dolch with the Restaurant Association and Hospitality. to testify on House Bill 5010. And also we have Michelle Nicholson from Hebron, who operates the Flower Girl in Hebron. Thank you.
I really want Michelle to speak about her bakery and what she's been doing, but also on this bill. So Michelle, the floor is yours.
Thank you. So thank you so much for having me here today. This is my first time ever testifying, so hopefully this goes okay. But my name
Pause
is
for just a moment, and I just want to make sure everyone's adequately introduced themselves for the purposes of the administrator. We're good. Okay, sorry, please.
No
Go ahead.
So I am the owner of the Flower Girl Bakery and Cafe in Hebron, Connecticut. And we employ about 35 people across my bakery, cafe, country store, and event space. I am a board member for the Connecticut River Valley Chamber of Commerce and also the Connecticut Restaurant and Hospitality Association. And I'm here in support of Bill 5010. And really, what I'm here to say is that I would like to ask for everyone's support of this bill. It rewards the work that we depend on as an economy and as a state. In hospitality, tips are not a bonus. They're earned compensation for work that is fast-paced, public-facing, and physically demanding. An overtime shift isn't a windfall. It is what happens when someone stays late, covers a shift, or shows up when the schedule is tight. Those are the hours and the earnings that keep our communities running, and they keep restaurants and cafes staffed. They keep hotels operating, and they keep deliveries moving. Our overtime is how nurses, first responders, and utility workers respond when demand spikes as well. I understand the question of why tips and overtime and not all wages. And the reason is that tips and overtime are the marginal dollars tied directly to taking on extra shifts and extra strain. HB 5010 is designed to increase the take-home value of that extra shift so that it's more likely people say yes to coverage of the shift and the late night and the double. HB 5010 is also clear and transparent. It applies to the income that is already reported and declared, reinforcing compliance while delivering relief in a way that people can understand and utilize. And when working people keep more of their earnings, that money tends to move quickly through our local communities to pay for gas, groceries, childcare, and spending at other small businesses. The local circulation supports the regional economy and generates even more revenue for the state. Employers and workers most affected by policies like this often can't be here to testify in person, which is why I'm here before you today. In the hospitality industry, people aren't sitting at desks tracking bills and legislative agendas. They aren't reading long email threads. They're looking at order tickets, serving restaurant patrons or hotel guests. They can't pick up the phone because they're up to their elbows in dishwasher water or in the line trying to get food out the door. Many business owners and workers are performing essential work and helping keep the doors open. And that's why we're asking for your support. Thank you.
Thank you. Go ahead. Did you?
No, I listen, I think she said everything that's there. Obviously had a press conference with Representative Kindler this morning, just talking about how much this impacts this industry. But it also doesn't just impact hospitality, it impacts industry. It's not just tips. I think questions were asked this morning about overtime as well. Many other businesses also, offer overtime to employees. So this in our industry alone, we have over 75,000 service employees. But we also have many people working in the back that have overtime opportunities, as well as other industries that we could talk about. So I'm very appreciative to be here today. Obviously, I don't need to read through my testimony. The only other one I know, to talk maybe later on about, but the 1% with this group, as I'm always here on the meals and beverage tax and how to back support the industry. But in regards to this is a common sense. It's a pro-worker, pro-business bill. And not only would help the workers, but it also helps with retention and helps how important this is for the hospitality industry that realistically, to be honest with everyone here, we've had a very tough, last few years, but even the last few months. If I don't want to be a weatherman anymore, but obviously the snow has played a huge burden over the last month and a half, and the impacts it's having on our small businesses. So appreciate being here today, and thank you for allowing us to testify.
Thank you. Representative Rutigliano.
Thank you, Madam Chair. Good morning, everybody. I just want to go over a couple of things real quick. tips are fully taxable income. My understanding is, right? Employer pays the employer part and the employee pays their part in taxes, both Social Security, Medicare, the whole thing, and federal income tax. Who benefits from this tax reduction? Is the employer still paying their portion and this just applies to employee, or is everybody getting a tax break?
I'm happy to answer the question. This is an employee. The employer still has to pay all of their taxes and their side. So this is actually speaking on behalf of the employees of the industry. This directly benefits them. And I know, many owner operators have called me about this and speaking to the same point that Michelle testified. This is an opportunity to speak out for how hard their teams work. This is, families in this hospitality, but this would benefit them. But obviously the tax breaks would go to the employee.
So I think it's good that we clarified that it's just for the employee and not for the employer, because that might turn some people off. My last question, because it's two, right, Madam Chair, is on the overtime portion, it's just the half time, or is it the full time and a half extra, or is it just that half extra?
It is that half extra. That's above when they go over 40 hours. Like I said before, not just the hospitality sector, but any sector. Once they reach that threshold, they would be the tax relief would be on that half portion. Not on the 1.5, it would be that half.
Thank you, Madam Chair.
Thank you.
If I could just interject really quick, another point that's really important there is that when our employees are in overtime and that time and a half, it often is pushing them up into the next tax bracket for taxes. So having that extra half not be a part of the taxation is really important, because it's not just the taxes they're getting back, but it's also not holding them accountable at that bracket, which is not where they're normally located.
Thank you. Ranking Member Representative Paletta.
Thank you, Madam Chair. And I would just, first of all, like to thank the chair and the leadership of the committee for allowing this bill to be heard today. They know how passionate I am about it. And I would like to thank Leader Candelora and Scott Dolch and everyone from the Restaurant Association that has reached out and spoke or at least expressed their sentiments in favor of this very important proposal. When we talk about giving people a break in this committee, a lot of times, we talk about different subsets, population, who could use it, who couldn't. And I think everyone is worthy of a tax break. When I think of people in particular that are employed by the hospitality industry, and I think of people that are working for tips, sometimes it's a single mom that's working the second job to put food on the table, or sometimes it's a dishwasher that's going in that's getting unfairly taxed on their overtime that could otherwise be using that money to pay down some other debt or their electric bill or their grocery bill. I know in my district, and I'm sure many of the people sitting up here know someone that works a job for tips. These are not wealthy, uber wealthy individuals that are driving around in Corvettes and, living on the beach all summer or, living the high life. These are individuals that are oftentimes working that second job. So I thank you so much for shedding some light on this, how much it would mean to the industry that was decimated under the pandemic, what it means for retention, which is important, what it means for morale for the workers. We all know that it's very difficult to retain workers in just about every industry, from hospitality to the trades all the way down. So if we can do something to boost these workers, many of which are middle-class folks, I think it would be a big help. So I thank the committee for at least listening to this proposal, and I'm optimistic that we could advance this session. Thank you.
Thank you, Representative Farrar.
Thank you, Madam Chair. Thank you all for being here. It's great to see you in person. We always enjoy seeing folks in person on this hearing. I just would love to follow up based on some of the comments and questions that were already offered for me to understand this proposal a bit more. Are there income requirements related to this proposal for folks to benefit?
I think it's open for discussion. As you know, on the federal side, when the no tax on tips and comments that come up, obviously it's overtime as well. There's some thresholds, the $25,000 cap. I think we are open to those conversations because I understand this would be a budget conversation and a budget hit. But at the end of the day, I think the same way that the federal government has found ways from the first time they put the proposal forward to where it landed, probably be the same conversations here that we'd want to, obviously, if this was to move forward, have real conversations about making sure it's impacting the right people where their income bracket is, and also the burden on the state of the tax break. If that helps answer that question, Representative.
Yeah, thank you for that. Yeah, I appreciate you acknowledging that and acknowledging again just some of what the federal government has done. And certainly I would want to be mindful of that. So we're not, fulfilling a proposal that just makes our upside down tax system even worse. So thank you for acknowledging that. Thank you, Madam Chair.
Thank you, Representative. Any other questions? Representative Menapes.
Thank you. I just had one to ask, excuse me, Michelle, tell me how many, because I know that I don't know if it's multiple locations or multiple businesses next to each other. Forgive me. I just looked you up as you were on this list, but would you just say how many of your employees are get tips as part of their income?
The majority of my employees get tips as part of their income.
Yeah. And I wanted to know if the same thing, I suppose, is that for forgive me on this one, do you end up having it where people share it between them? I don't know.
There's a lot of different ways that restaurants can do, well, there's not a lot of different ways, but there's multiple ways that restaurants can do tipping. And my restaurant does use a pool system, which we find to be very effective by just the state of our business, where they are able to share together in the income that brings in the tips. But it's a very large part of their hourly wage.
Yeah. And lastly, I suppose is, do you think this would, so you're saying before that this would incentivize more people to, I don't know if it's word, but especially if you're taking overtime.
Correct.
All right. I just want to, have you actually heard that from employees too, or?
Yes, absolutely. So my employees are very involved in the work that I do for, for representing our industry. I share my testimony with them before I came here today. And they're very, I always get their feedback. They're very excited that I'm here for them today. And I think that especially when it comes to overtime, it is a huge incentive because they're currently losing so much when they do take those extra hours. And it can have a huge impact on being able to function as a business, especially during times where you have things like cold and flu season. A small business, you lose a large number of your employees, because people are going down with the flu. You need to get those overtime people in to be able to operate. If they're not willing to take the overtime shifts, we're not going to be open.
Thank you.
Thank you.
Thank you, Representative. Representative Winter.
Thank you, Madam Chair. Good morning. Thanks for being here. So if we have two workers, one who picks up additional hours with a regular wage and one who picks up regular hours with tipped wages, why should one of those workers receive a tax benefit when the other does not?
I think to answer that question, it's a bigger scale question. Obviously, there's different opportunities within the industry. And I think with this is something that, gratuities are a part of our industry. When you talk about servers and bartenders and the service employees, it's what you're getting into and understand on a full service. So listen, I'd love to give tax breaks to all employees across the board, but understand that when it comes to the gratuity side of it, or it comes to overtime pay, looking to add an extra tax burden on that, I think is something, because those same people are still receiving income through a base pay. But this is obviously something that is on top, but I think it's a great question. I think it's a conversation that, yes, we'd love to lower our taxes all the way across in our state for all employees. But I think this is something that like we've seen at the federal level, it's not looking at the $25,000 threshold. It's a great opportunity for these people that are working hard and is a part of their income.
Thank you. Thank you, Madam Chair.
Thank you, Representative. Representative Constantine.
Thank you so much. So overtime pays tax like regular pay. Is it more of a way to make sure employees take the overtime when you are low on employees? Is that what this is designed to do?
Can you ask that one more time, Representative?
So
I'm sorry.
overtime pay is taxed as regular pay, isn't it?
It is, but to Michelle's point, it can bring you into a different bracket at the time and a half. But again, this proposal as it's written is the 0.5%. So if you're getting paid a time and a half, that time is still taxed same way that's taxed before. It's that extra half of wages that you would actually have a chance to not receive the state income tax taxed on it. I guess that makes sense.
So it just means the more money you earn, the more you're taxed.
Correct.
Okay, just like the rest of us.
Mm.
But is it also a way to make sure employees actually take that overtime when you do need employees, especially when people are out sick?
Well, I think in our industry specifically, as Michelle brought that up, I mean, this is, so many things can happen in call outs and things that are in looking at employees and the employee base that you have. And we have a worker shortage in our industry. We still have, and we've had one for as long as I've been sitting in a seat. And understand that when you think of, these jobs that need to be done, sometimes you're looking, wait a minute, you're going to go over 40 hours. What am I going to do? I can't get anybody else. So a lot of times with the owner operators, it's happening because of just the fact that they don't have enough employees to call in to not get them over the 40. So sometimes it's on the employee to be like, hey, they're making phone calls and saying, are you willing to take that extra shift? It will be overtime. I know that you're going to go over 40. I think that's the constant conversation that's happening in all of our restaurants, all of our hotels all the time, because we don't have an influx of workforce and workers to be able to fill all the jobs. So I think it's a two-part kind of answer to this question. But I think at the end of the day, yes, they're willing to take overtime because they want those hours and they're going to be paid at time and a half, which is great for them. And it's obviously, but at the same time, this would be even more of an incentive because they would receive a tax break on it as well.
Could I ask one more question? Can you explain what that 40-hour limit is, like why they wouldn't want to go over 40?
Well, I think that it's not I guess it talks about the fact that the income that they're making and the tax bracket that they're in, the same way someone that's looking at wanting to go over 40 and how that affects how they're going to be taxed later on in the year, and the income that they're bringing in, the hours that they're doing. So I don't know if I'm answering that correctly or not, Representative, but.
Yeah, I think there's twofold. One is people that are working overtime, those extra hours, they could get pushed into a higher tax bracket. But also the government is sort of benefiting from that withholding that really isn't anticipated in somebody's wages. And so I look at it the other way too, that we don't necessarily need the money from the state. So if there is a way to incentivize people to take overtime hours, this may be one way to do it, is to exclude it from income taxes.
Thank you.
Seeing no further questions, thanks for joining us this morning.
Thank you.
Thank you.
Thank you.
Next up, we have, I believe Senator Harding is now with us online.
Yes, good afternoon, Chairman Horn, Chairwoman Horn. Thank you, and also to Chair Fanfara, Ranking Members Fazio, Ranking Member Paletta, and the rest of the honorable members of the Finance Committee. I'm speaking I have testimony today in support of SB 100, and I do appreciate the committee raising the bill for a public hearing. It's an act reducing personal income tax margins here in Connecticut. Connecticut certainly faces an affordability crisis, particularly for working class families. In my opinion, we've gone in the wrong direction in terms of affordability for many years now, and we should be on the course to correct this. Particularly as we see our government doing well, but many of our families back home struggling. We as a Republican caucus have proposed a bill that would direct income tax relief to the working class families and middle class families across our state. It would be a 40% reduction for single filers making $50,000 and joint filers making $100,000. A 16% reduction for single filers making $100,000 and joint filers making $200,000. And the elimination of the income tax for single filers making $25,000. It's up to $1,600 in tax relief for joint filers and up to $800 for single filers. And this could exceed it. This is just on an average. The imposed income tax are a key part of our caucus's package of affordability solutions, which the people of this state greatly deserve and need now. And we can deliver this working families. And as I said, it's on average, it's about $1,600 in tax relief, but for some families could be as much as $3,000 or $4,000 a year, every year in tax relief. There's been other proposals, particularly by the governor's office, that would be a $200 rebate. I think we agree on a bipartisan basis that far more than $200 needs to be delivered to the people of the state. We believe this plan is a huge step towards providing affordability once again to the people of this great state and returning the money back to the hardworking people that has given too much money, in my opinion, over the years to this great state of Connecticut. So I thank you for considering this bill, for raising this bill. I'm happy to ask any questions that you may have.
Thank you, Senator. Always nice to have somebody from the Northwest corner joining us. Senator Fazio.
Ditto, Chairwoman.
Northwest corner very well represented in finance today. Thank you, Senator, for your testimony on Senate Bill 100, the best number of any bill this year. We heard concerns from, our Senate president about progressivity and helping working class and middle class people more than anyone else. And we heard some concerns today already from some of our House Democratic colleagues about not picking winners and losers and being, even-handed across the board. Do you think that this plan, which aims to cut middle class and working class income taxes across the board, both focuses the relief on middle class and working class individuals while also being as fair as possible? Is that part of the thought process for you?
Yeah, absolutely. And we all know it. And this should be a bipartisan understanding that the families that are impacted the most by the unaffordability we have in this state, the third highest tax burden, third highest property taxes, third highest electric rates. The families that are impacted the most are the middle class and working class families of the state. And so, Senator Fazio, to your point, the reason why this is targeted at towards those individuals is the reason I just mentioned. But the metrics, the numbers show that in our proposal. So, this applies to families or joint filers filing up to $200,000 a year, which is very much in today's day and age here in Connecticut, a middle class family, and completely eliminates the tax burden for anyone making $25,000 or less as well. So it's capped at $200,000 for joint filers, capped at $100,000 for single filers. So it is truly a income tax cut program targeted strictly and exclusively towards the middle class and working class people of this state who have been impacted the most by the unaffordability that we have, unfortunately, in this state.
Thank you, Senator, for your testimony and advocacy on this bill. And thank you, Madam Chair, for the time.
Thank you.
Thank you, Senator. Any other questions for Senator Harding? Seeing none, thanks for joining us.
Thank you, Chairwoman.
Is Rob Burrill either in the room? I don't believe he's online. Sarah Ganong?
Good morning, everyone. Thanks for being here today. Thanks for your time and raising so many important concepts. My name is Sarah Ganong. I live right here in Hartford, one of Senator Fanfara's constituents. Good to see you, Senator. I'm the State Director of Connecticut Working Families Power. We're an advocacy organization building power and governing power for the multiracial working class. And we're a proud founding member of the Connecticut for All Coalition. You're going to hear a lot of Connecticut for All folks speaking after me today in our 150 plus hearing. I'm here to support 5 bills, all of which are incorporated into our Stand Up Connecticut agenda. 5187 modifies our so-called fiscal guardrails. As currently structured, the guardrails place restrictive controls in the budgeting process, leaving lawmakers such as yourselves with limited resources and limited flexibility to respond quickly to program and budget cuts that we know are going to continue coming in the chaos from Washington. 5133 addresses Connecticut's fundamentally unfair tax code by increasing the top marginal rate for income taxes. Taxing the ultra wealthy is doable, it's popular, and that's even more true since federal HR 1 gave so many wealthy individuals absolutely massive tax breaks. 104 taxes unearned income for the same ultra wealthy individuals. This tax targets profits from investments, dividends, and the sale of vacation property. Again, since Congress is likely going to continue expanding Trump's tax cuts, we know that Connecticut should continue to capture some of this windfall to support our critical state services. Senate Bill 101 establishes a statewide property tax on residential property with the highest values. And finally, Senate Bill 103 establishes a refundable tax credit to benefit nearly 600,000 children in the state. We know that child tax credits are effective, proven, and popular ways to combat inequity. The Trump administration and Republicans in Washington have made their agenda perfectly clear. to benefit billionaires, corporations, and their cronies at the expense of working families. The federal government is terrorizing our communities with money that's been taken from our communities. We've seen the budget for ICE balloon. Corporations are profiting from dismantling public services, and the top 5% have received massive tax cuts. All well over $1 trillion have been slashed from programs like SNAP, healthcare, housing, and mental health support. Everyone is not worthy of a tax break. The wealthiest among us, many of whom have become wealthy on the backs of working people, need to pay their fair share in Connecticut. We can't stand idly by as this terror and robbery continues. We can and must defend our people, stand up for our people, and construct a tax code for the many and not the few. For far too long, working people have been left behind in our system, and this neglect has borne fruit for those who seek to divide and conquer instead of those who seek to create prosperity for all. We have a Democratic trifecta in this state and a group of legislative champions, many of whom are before us today, ready and willing to lead this fight. Together, we can create a more affordable state, support working families getting hit hardest by MAGA Republicans in Washington, and raise the revenue that Connecticut needs to build a state that works for everyone. Again, thank you so much. A lot of great bills in this hearing, and happy to take any questions.
Thank you. I am first going to ask those of surrounding you who have signs to please put them down, because we generally do not allow that in committee rooms or in chamber. So I appreciate that. Thank you. Any questions? Representative Menefee.
Thank you for being here, Sarah. I just wanted to ask if you could expand a little bit about what you're talking about of, well, frankly, why Connecticut needs to act in the face of these attacks that are coming at us from the federal government.
Great. Thank you for the question. Yeah, I think 2 points I would make. First, we have seen just obviously great uncertainty coming from Washington, D.C. It seems as though the president changes his mind every couple minutes to every few hours of what he wants to be doing, whether that's tariffs, different programs that he wants to support or cut. And I think Connecticut, through the bill that would modify the fiscal guardrails and increase our budget reserve fund, really just needs additional flexible resources in order to be able to do what our community, our communities, our legislature and government decide we need here for the people of Connecticut. So increasing flexibility seems really important. And again, we've seen massive tax cuts coming that are helping the wealthiest among us. And those things are coming from programs that are helping and supporting working people. So while that is going on, I think Connecticut has the sort of solemn duty to make sure that we're protecting those same people that are getting attacked from the federal government.
Thank you.
Thank you. Representative Clarence Detria.
Thank you, Madam Chair. Thank you for being here today. You were talking about that the residents of the state of Connecticut deserve this tax break. What about the state of Connecticut cutting some of their spending? So which would free up something for our residents.
I think right now, while we're seeing so many people suffering, and particularly working people, we need to ensure that we're expanding programs that are helping folks, such as healthcare, making sure folks have childcare, paid family and medical leave program, right? We have a lot of programs in the state that are incredibly popular and helping a lot of these people, and we need to make sure that that is continuing to be funded. So I don't think cutting most services, particularly those that are benefiting working people, is the right choice in this moment.
Thank you. And I don't think necessarily cutting services, but as you know, that you do in your home, I assume, and I do, during tough times, you cut back. You don't do those extra things. Maybe don't go out to dinner as much. Maybe you don't do a renovation on your house. We have to get by with what we have and make as many cuts as we possibly can because we're upon tough times. Thank you, Madam Chair.
Thank you, Representative. Any further questions? No. Senator Fonfara.
Thank you. Thank you, Sarah, for being here today. You went rapid fire through the bills, which we appreciate. And I wish there were about 7 people sitting up there with you because they're going to say much as to what you will say. And candidly, it does lose its import when it's over and over again. I've said this privately to Success for All in the past, but nonetheless, they're all here today and they will have their time. Regarding the guardrails, and I know this has been a position of yours and other organizations, some of whom may not be around actively to realize, maybe they experienced it personally back when we had deficit upon deficit upon deficit. And I can say personally, and those that were here at the time, the difficulty of having to cut services, important services that the advocates here today and yourself are fighting for, and we fight for. But we had no choice. We raised taxes, we cut services, which is traditionally the method of how we do it. We rarely do one or the other. And that's because we had no piggy bank, if you will, to protect those services. And I've said many times, I'll say it again here today. When people need government the most is when government is broke. And that's what we've tried with the volatility cap, the revenue cap in particular, to protect against those cuts when people need us the most. And we haven't had a recession since we implemented that. So it's difficult to defend when $4 billion are sitting in a fund, but that $4 billion will go fast when a recession does come. And so I just ask that folks recognize that we've had an incredibly long streak, one that Uncle Joe helped us out with. But the day of reckoning will come, and not that I'm wishing for it, I'm not, but we're better prepared for it to help continue to provide the services that those in need will have, because that's where we'll go. And that's often where we go first. So just needed to put some perspective on the comments that we'll hear today in this regard. Thank you. Thank you, Madam Chair.
Thank you, Senator Cabrera.
Thank you, Madam Chair. Good morning, Sarah. Thank you for being here. I was wondering if you could give us maybe one or two quick real life examples of what you are seeing and witnessing in the community, and how some of the inadequacies of people getting the services and support they need. And I was also hoping you could, I'm assuming, be able to kind of give us a sense of what will get worse if we do not act.
Great. Thank you for the question. Yeah, I think in the paper maybe this morning, there was an announcement that 9 individuals in Connecticut last year froze to death. I think that is an incredibly somber reminder of what the money that we were putting into our state does and the way that we can truly help people who were most in need. My neighbors are struggling to pay the bills. I live here in Hartford, in a neighborhood that is struggling a lot, and people are buying different things at the grocery store than they used to. Folks really are trying to decide between, am I going to leave my child home if I can't pay for a babysitter anymore? People are making different choices about transportation and housing. People are being evicted because we don't have a just cause eviction bill yet. I think sort of every possible way that folks are thinking about spending money to take care of their families is really being harmed right now. And we need to put money into a lot of different programs in order to protect people, both from federal overreach and also from just the sort of normal ravages of everyday life. Your car breaks down, right? That's going to happen regardless of what's going on. And I think to Senator Fonfara's point, appreciate the patience with all of us testifying today. We can talk a little bit about if panels will make sense for some folks. And also, I think everyone knows that this is really important, right? There's a lot of people here because we all really do think that this matters. And a lot of organizations have members who are truly being impacted in this moment. So we're just really appreciative of the opportunity in the public hearing to be able to address that. And I think the bill that's here for the fiscal guardrails, 5187, I don't think the intention of that is anything that's particularly transformative. It's making some modest adjustments because we are in a different time with the Trump administration and the cuts coming down and the need to be flexible around spending money, maybe than when the guardrails were built, while also recognizing the value in having the rainy day fund and what they've been able to do in order to tackle some of our pension debt too. So I would love to continue the conversation because totally agree with you that it is a balance, but I do think the sort of structure in the world and what is going on is not the same as it was when they were put in place.
Thank you for that answer. And, these are complex issues. I know we're going to be having more and more conversations on how to balance all these competing needs and interests. So thank you so much for coming. Thank you, Madam Chair.
Thank you, Senator. Seeing no further questions, thanks for joining us.
Great. Thank you all.
Next up is Joseph Sokolovich. Please correct my pronunciation.
Greetings, members of the Finance, Revenue, and Bonding Committee. My name is Joseph Sokolovic. I am the Vice Chair of the Bridgeport Board of Education, but I am speaking in my personal capacity because they might not like some of the things I have to say. I am here in strong support of 5 related bills before you: the capital gains surcharge, the increase in the highest marginal income tax rate, reforms to the fiscal guardrails, the refundable child tax credit, and the statewide property tax on ultra-high value residential real estate. These proposals are connected by a simple but uncomfortable truth. Connecticut is one of the wealthiest states in the nation, yet we live with some of the deepest disparities in opportunity. Those disparities are not only economic, they are deeply racial. And nowhere is that more visible than in our education system. Black and brown students are far more likely to attend under-resourced schools with fewer counselors, fewer supports, and aging facilities, and in Bridgeport, without a single librarian. These disparities, achievement and opportunity gaps persist, not because of student ability, but because of unequal investment. That is not an accident. That is the result of the policy choices made by this body over the last few decades. This is nothing new. For years, Connecticut has celebrated budget surpluses produced under the current fiscal guardrails, but those surpluses did not come from nowhere. They were achieved in part by underinvesting in public education and essential social services, and by shifting costs onto municipalities and families through the property tax system. Why is this? Why do these revenue bills matter? The capital gains surcharge and the adjustment to the top marginal rate recognize that wealth in Connecticut is increasingly generated through assets, not wages. The statewide property taxes focuses on extraordinarily residential property values. And the refundable child tax credit is a direct investment in families, one of the most effective tools we have to reduce child poverty and improve educational and health outcomes. But let me be clear, revenue alone is not the goal. Equity is. Any dollars and flexibility produced by these reforms must be directed immediately and transparently to children and their basic needs. That means fully funding education cost sharing formula with a foundation of amount of $17,000 to bring equity into the state of Connecticut between our poor and wealthy districts. Greenwich spends about $27,000 per pupil, and Bridgeport $18,000 per pupil. It also means strengthening social services that keep children's housed, fed, healthy, and ready to learn. Fiscal responsibility cannot mean abundance in reserves, alongside scarcity elsewhere. Finally, public trust matters. When tax policy directly affects the wealthiest residents of the state, any legislator or executive officials whose personal wealth places them within an affected class should seriously consider recusal from the vote. This is not personal, it is ethical. If we want the public to believe these policies are about fairness, then
Your 3 minutes are up. If you could please summarize.
Yes,
Thanks.
one more paragraph. Connecticut can choose a different path, one where prosperity is shared, racial and economic disparities shrink, and children come first. And fiscal responsibility includes moral responsibility. I urge you to support these bills. Thank you.
Thank you. Any questions? Seeing none, thanks for joining us today.
Quite well.
For those of you following the speaker order at home, there's some shifting going on as people swap positions. I promise we're not selling them off to the highest bidder. So next up, we have a swap, and we will have Carmen Clarkin and Patrick O'Brien.
Oh, there we go. Thank you. Good afternoon, Senator Fonfara, Representative Horn, Senator Fazio, Representative Paletta, and esteemed members of the Finance, Revenue, and Bonding Committee. My name is Carmen Clarkin, and I'm here to testify on behalf of Connecticut Voices for Children, a research and advocacy organization working to ensure that Connecticut is a thriving and equitable state where all children reach their full potential. With me today is Dr. Patrick O'Brien, who'll be available to answer questions. CT Voices is testifying in support of Senate Bills 100, 101, 103, and 104, in addition to House Bills 5,133 and 5,187, because they would provide needed progressive sources of revenue for the state, as well as much needed financial support for low and middle income households. We've also submitted comments on Senate Bills 77 and 144, as well as House Bill 5010. For the purposes of time, my oral testimony is focused on our support for additional adjustments to the fiscal controls, new progressive revenue, and the creation of a state-level child tax credit. As you may know, Connecticut faces a nearly $1 billion federal funding shortfall in the next fiscal year due to the passage of H.R. 1, also referred to as the One Big Beautiful Bill Act. While this figure is projected to grow significantly over the next few years and only represents budget cuts to food assistance and healthcare, even more worrisome is the tangible impact to Connecticut residents. What's more, we know that tariffs and rising household expenses are putting increased stress on Connecticut families who were already struggling. Between 2022 and 2024, an average of more than 828,000 residents in this state, including more than 212,000 children, have been living in poverty or near poverty each year. Closing federal budget cuts is critical to ensuring Connecticut's poverty rate doesn't increase. Research tells us that SNAP was Connecticut's third largest poverty-reducing benefit. We also know that out-of-pocket medical costs are the leading driver of poverty, even with Medicaid, highlighting the importance of protecting our Medicaid funding. Right now, Connecticut stands at a crossroads. We must act to bridge this gap. Policies that prioritize affordability have never been more important, and it is our belief that this starts with progressive revenue. Adjusting the volatility cap with an inflation-adjusted moving average and increasing the budget reserve fund capacity allows the state to unlock hundreds of millions in revenue we are already collecting while reinforcing our economy against recession. At Voices, we also think that standing still isn't good enough. We must keep progressing forward, and to do so, we need policies that would provide the revenue that allows the state to expand programs and innovate when possible. That is why we support targeted surcharges on high income brackets and a statewide property tax on high value residential estates. By modernizing our fiscal controls and adopting more progressive revenue options, Connecticut can finally implement a fully refundable child tax credit to support hardworking families. A state-level CTC is a pro-growth, common-sense investment that provides direct relief, helps offset federal retreat, and ensures families can afford to root and grow here in Connecticut. Thank you so much for your time and consideration. We're happy to answer any questions that you may have.
Thank you. Representative Piscopo.
Thank you, Madam Chair. Thank you for your testimony. I appreciate it. I was wondering, some of the cuts you're talking about, do you agree that an able-bodied person under 65, no children, totally able-bodied, you think anybody that's on state assistance, whether it be SNAP, rental subsidies, energy assistance, do you think that they should be working maybe even 20 hours a week, a part-time job, or be training for a job or doing community service?
So thank you for the question. I think one of the concerns with some of the cuts in the One Big Beautiful Bill Act is the consideration that sometimes there are administrative obstacles essentially to maintaining some of that coverage. So even people that are working sometimes have difficulty maintaining the coverage, or if they're doing various things that meet those requirements, you're still getting obstacles in place that I think are making it hard for people to have the coverage. So I think it's important essentially that you have as wide a coverage as possible. I think this is also important when we've been considering the slowdown in job growth. Do we really want to make cuts to some of these important benefits when we might have increase in layoffs? You might have more unemployed people. So I think it's important, I'd say, have the broadest social safety net possible and make sure that there's not administrative burdens that are really making it hard for people to get something like health insurance, which is really a necessity, not just something nice to have.
Thank you. So we agree they should be training for a job or working part-time or? Thank you very much for your test. Thank you. Thank you, Madam Chair.
Thank you, Representative. Representative Doucette.
Thank you, Madam Chair. And thank you both for your testimony today. Thank you for all of the work that your organization has done over the years on these issues and the very lengthy reports that we get every year with new ideas. It's frankly refreshing to see that we continue to have these conversations and to really broaden the concepts that we're talking about. I'm particularly interested in the guardrails, and it's obviously an important conversation that we need to have here. I've been here since 2019. The guardrails have been in place. I was not here when they were implemented. For the first few years I was here, they were very much sacrosanct, and now we have found ourselves in a position where for the past year and even this year, we have proposals to, amend those guardrails. So I think the conversation is moving as it should. There are reforms needed to it. There are some, some faulty assumptions, I believe, that are still in statute to calculate those guardrails, particularly with the volatility cap. I'm looking at your testimony, which is 36 pages. So that's good. I know your reports usually are around 100 or so. So we have 36 pages here. And I wanted to give you an opportunity to talk about this because I think it is very important. This proposal I see as very modest. This is not upending it. It's a modest and frankly needed reform to the baseline of the volatility adjustment that is in section, I believe it's 4-30. So you say in here that using an inflation adjusted moving average would improve the design of the volatility cap. And you illustrate in here that the variables at play in volatility over the time. So, since I've been here, the so-called volatile revenue has not had any real volatility to it. And certainly not in the way that we would consider it, to really have a significant effect on our budgeting. So you say that the variables display no meaningful relationship. Volatility tax revenue grew at an average rate of 7% compared to 3.9% for state personal income. And the correlation has a very weak negative linear relationship. So interesting. I'm not an economist, but I think I understand what you're saying. But I wanted to give you an opportunity to sort of explain that and the volatility, the basis of the volatility cap in general.
Thank you for the question. So let me just start off by saying the volatility cap is actually really important. We do have volatile sources of revenue in the state. So I think it's a good thing to have the volatility cap. The question becomes having whether or not you have a well-designed volatility cap or not. And so one of the things we're trying to show right now is that essentially we somewhat arbitrarily created an initial baseline for where was the threshold for the volatile threshold, and then we index that moving forward. And so we picked a variable for how we're going to index that moving forward, and we decided to use personal income growth. I'm assuming that was probably came along with the idea that we're using personal income growth with the spending cap. And this may be a reasonable assumption to start with that. The problem essentially is that personal income growth and the volatile revenue covered essentially have no meaningful correlation on a year-to-year basis, and they diverge increasingly over time. So if you use that as the indexing mechanism, you're going to, on average, increasingly have a greater problem if our volatile revenue is growing more quickly. Again, on average, you could see ups and downs in individual years, but on average, our volatile revenue is growing at a greater rate than personal income growth. And you can think about why. When we think about what is our volatile revenue, it comes from two sources: the estimated and finals component of the personal income tax and the pass-through entity tax. And when we think about the estimated and finals component, there's a couple different things that go into that, but one of the big things we think about is capital gains income. How's the stock market doing? If the stock market's doing well, we're going to get more of this volatile income. Well, it's important to note that when the Bureau of Economic Analysis measures personal income growth, it literally does not include capital gains. It's not in that measure. So we're picking an economic variable to decide how much this volatile revenue should grow by with another economic variable that's just not correlated to it. And so really, there really is only one kind of well-designed, reasonable approach. And that is to say, in past years on average, how much volatile revenue have we had? And you start to use a moving average essentially. And if you want to make that as effective as possible, you do an inflation adjusted moving average. So say, for example, the moving average is 10 years. You don't want that dragged down because it's not accounting for inflation from 10 years ago. So it really is the best, most fiscally responsible and almost only well-designed approach is just to use a moving average for this. And we've seen essentially the fact that we've had to adjust the volatility cap threshold, it's kind of saying, acknowledging that it's not well designed. And so what did we see? We saw in fiscal year 25, it was increased by $150 million. In fiscal year 26, it was increased by, I believe, $650 million. And now in this fiscal year, what are we looking at? We're looking at $1.8 billion that's still captured by that. And that's after making an over $600 million adjustment. So really the only way of a well-designed approach is essentially using a moving average.
Thank you for that. Yeah, I wholeheartedly agree. I think the way we've adjusted it recently has been haphazard, that we need this structural reform, that using a moving average is responsible and makes a lot of sense. So thank you. Appreciate it. Thank you, Madam Chair.
Thank you, Representative. I have a quick follow-up myself about that exchange you just had with Representative Doucette about the growth metric that should be used for the volatility threshold. And you, I believe, implicit in your analysis is that we should have a metric that mirrors volatile revenue, as opposed to, for example, having a metric that is tied to the needs of the state, or some level. In other words, tying it to revenues as opposed to time. I mean, it does relate, obviously, that volatility threshold to what we're able to spend, although there are other constraints, as we all know. Why do you think that metric should be tied to what's happening at the volatile level as opposed to a different metric, which obviously some are better than others, but tied again to the growth of needs, which to me, the personal income growth is better tied to?
Great question. So personal income growth is a reasonable indicator to use for the spending cap. When you're thinking broadly, what are the resources for the state for when we think about spending? But our volatile revenue is just a portion of the overall revenue. And in this sense, we've just shown the personal income growth is just not correlated with it at all, essentially. And so the only way that you can get a sense is what is our volatile revenue going to be next year is roughly saying what has it been in the past several years. Another problem essentially with using personal income growth rather than a moving average is, what if you change the tax rates on any of these volatile sources, or you change the design of them? Then you could have a big shift up or down. And so if you were using a moving average, you could actually design the moving average to say, like, let's say, for example, you do a capital gain surcharge and you're going to bring in a 1 percentage point more. You could go back, you could design this moving average to say, had we had that capital gain surcharge for the past 5 years, what would the income have been then? And the moving average itself can be tied to also changes in tax rates, as opposed to if you change some tax rates on some of these volatile sources, so all of a sudden you're bringing in more of them, and then you're just using the personal income growth to increase the volatility cap threshold, you're going to have an increasing divergence anytime you change the taxes that are covered. So there are a couple different ways in which I think the design of using personal income growth essentially is problematic.
Thank you. Senator Fazio.
Thank you both for your testimony. I don't always agree with CT Voice's perspective. Sometimes I do, but I do find it thoughtful and provocative. And so I appreciate your analysis. I think the conversation you're having on the volatility cap, which I wasn't going to originally ask you about, is very interesting. The arguments I think are sound. I think also the consideration that we're accruing liabilities at 8% a year above what they are if we don't pay down, excess of liability is important because it obviously balloons our future tax burden as well. So that I think that's another component I would add to the analysis. But your argument for indexing, there is a strong argument there. I did want to ask you, because I think one of the areas where I sometimes see myself having differences with CT Voices is on the consideration of growth. At the end of the day, if you can grow your state economy, grow jobs, grow investment over time, everyone's going to get a much bigger piece of the pie, rather than just trying to change the size of the pieces in the existing pie. And, it was interesting last year when you look at the US Census numbers on population growth, outmigration, in-migration, the 3 states with the worst outmigration, people leaving the state voting with their feet, were Hawaii, California, and New York. And those were also, as it happens, the 3 states with the highest top marginal individual income tax rates. And, because I think you are some of the smartest advocates for raising the top marginal income tax rate, I did want to ask you, how do you square the need for growth, the need for jobs and investment, with the fact that the states with the highest marginal income tax rates had the worst outmigration of any other state in the country?
Thank you. It's an excellent question. And in preparation for that question from you, I included figures 1 and 2 on page 21. So what this shows is that figure 1 shows
never ask a question you don't know the answer to.
The top state and local income tax rate, along with population growth. So it's just a scatter plot. It's important to include local income tax rates because some places actually have pretty substantial local income tax rates, like New York City. But it is also the case that not everyone in a state is subject to all of the same local income tax rates. So we included figure 2 as well, that just includes the top state income tax rate and population growth. And there are a couple of interesting patterns that you see. So it is true, essentially, that if you look at states that have double-digit income tax rates, on average, they have slower economic growth. Generally, some of them are losing population, but they have slower economic growth. It is also true, though, within that group, not every state has slow economic growth, so there is some variation. For example, New Jersey has double-digit income tax rate, and they're seeing relatively strong population growth. On the flip side, if you look at the states that have no income tax, it is true that on average, those states have stronger population growth. However, not every state that has no income tax has strong population growth. There are also variation there. You see Alaska and some other different states. So when you look at the extremes, yes, the states with double digits, the highest ones, lower average growth, but some variation. Not necessarily you're doing bad, but on average, you're not doing as well. And for the states with none, on average, you're doing better, but it's by no means certain that it's going to work out well for you. So I think that's important to keep in mind. Most importantly for Connecticut is what you see is the middle tier, essentially, and that's where most of the states fall. And if you separate the very top and the very bottom, you essentially see no meaningful correlation between the top income tax rate and population growth within that middle tier. And so were Connecticut, for example, to establish a 1 percentage point, surcharge on capital gains or increase the top rate from 6.9 to 7.99%, there really is just no systematic evidence that would have any effect on our population growth. You could lift up various examples where some states are doing better or worse, and I could give you a counterexample of how that doesn't apply. So it really is, it's an important question, I think, especially when we're thinking about increased mobility since the pandemic-induced recession. So we wanted to dive into this. And as long as you stay within that middle tier, there really is no systematic evidence, at least on a bivariate relationship of looking at these 2 factors, that it would have a meaningful impact on population growth one way or the other.
Well, that's a very thoughtful response. I wrote an analysis in the New York Post a few years ago where I looked at it, and I think the relationship between higher tax burdens and lower population growth gets stronger, especially when you're looking at the larger states. So you're stripping out some of the smallest states where it's more idiosyncratic. And I think the relationship when you look at it across the board still holds. I submit to you that if you really get above 50% with the federal and state and local tax burden, it's probably kind of gets exponentially worse. So New York, California might be in a really, really dire strait because they got so high. So it's an interesting theory. I'll look more closely at it, but I think a lot of the analysis is still found that the relationship's pretty clear, even with some outliers, that you raise taxes too much or you raise taxes more, you're going to see worse growth. But I do appreciate your the thoughtful answer, and it's certainly provocative, and I appreciate your testimony too.
Thank you, Senator. Representative Metapace.
Thank you. I wanted to thank you guys both for being here. I'd really love to get into a little bit of what just happened, but I should probably stick with actually there because it kind of seemed like someone's made a really good argument of why maybe property taxes are regressive and maybe we should reconsider that. But focusing on your written testimony, which I've not been able to finish, but has been very good. I wanted to ask because you do point out the issue of that the lower income households are essentially paying a rate that is nearly twice what higher incomes are paying. And, given that imbalance and, it seems like we're relying on this very regressive revenue source. And I was hoping that you could kind of expand on the dynamic that plays out, because as everyone in this room has talked about, the ideal is for more people to be in that middle tier. And it seems that this is something that is, frankly, is hurtful to our state to have it in this system.
Thank you for the question. A couple different parts there. So hopefully I can give you a satisfactory answer. I think one thing you want to think about is we talk a lot about the One Big Beautiful Bill Act is making cuts to important public benefits. What we did in a recent report is we try to give an overview of the entire public benefit system as important background. And when you look at all the different components of the public benefit system, kind of using a broad framework that the Census Bureau uses for the supplemental poverty measure, you see overall you have all of the major components are progressive, including the tax system when you look at the federal and state and local tax systems combined. But that's because the federal tax system is offsetting in part with the state and local tax system. But the important caveat here is the one major component within this whole system that is regressive is the state and local tax system. And so why this especially matters is with the One Big Beautiful Bill Act, they're essentially shifting responsibility for funding some of these important public benefits from the federal government to the state government. And so it's not only important for the state government essentially to pick up the slack and fund these, but it's important to use progressive revenue sources, because if we just use our existing state and local regressive tax system, you're going to be offsetting part of these increased public benefits that you're funding. So you want to take a progressive revenue source essentially and almost fund it in the same way that the federal government was doing. So I think that's one thing to keep in mind. I just want to add two other little small things. So we talk about having a regressive tax system, and that's true. Our low and middle income households are paying more as a percentage of income than high income households. And you can see that through a variety of sources. We've lifted up the U.S. Census Bureau data because that actually allows us to do a cross-state comparison as opposed to just doing the DRS report, which just shows us. And so what you see, in addition to having a regressive state and local tax system, you see that to the extent that we're an outlier with a higher tax burden, it is for low and middle income households, not for high income households. So the percentage difference between the lowest income households, what they're paying on average as a percent of their income in Connecticut compared to the US is the highest. When you look at middle income households, I believe it's the second highest. And when you look at high income households, not only do we have a regressive tax system, but the difference in what they're paying relative to the US as a whole is essentially smaller. So it's a couple different problems going on. We want to have progressive revenue sources to fund any expansion of public benefits. And we want to make sure we address our state and local regressive tax system for a whole host of reasons, but also acknowledge that the highest tax burden is not just for low middle income households relative to high income households, but is also for our low middle income households relative to other low middle income households in other states. So a bit of a complicated response, but there's a lot going on there with the tax system, which is why in part it requires a 30+ page written testimony to kind of give in context to all of this so you guys can make the most informed decisions possible.
Thank you.
Thank you, Representative. Senator Honig, followed by Representative Farrar.
Thank you, Madam Chair, and thank you for being here. And I appreciate your testimony, especially on the volatility cap issue, which I agree with you. The volatility cap makes a ton of sense. When you do have volatile revenue streams, you want to make sure that in the years that you're flush with cash, you're not spending all that money, you're putting it aside. So in the years when you have a deficit, you can reach into that rainy day fund and not have to cut spending. I see in your written testimony, you did an analysis on what this proposal would actually do as far as freeing up revenue. Can you speak to that? The results of your analysis, like how much revenue are we talking about here?
Yes, I believe it was over $900 million this year if you use a 5-year inflation adjusted average in place of what we're currently using. And I believe next year, I think it's over $1 billion that you would get in increased revenue. I think it's also important to think about coupling that with the budget reserve fund. So we've been very conservative in our use of the volatility cap. So every year we're capturing revenue. A more well-designed volatility cap threshold might be that you're not necessarily restricting revenue every single year. And so there might be a year or two on occasion where the revenue falls under the volatility cap threshold if you're using a moving average, because by design, a moving average, sometimes you're going to have years under that average. And one way you can make sure you address that issue is to increase the budget reserve fund. So coupled with the volatility cap change is the idea of increasing the budget reserve fund to 20 or 25%, which is reasonable, I think, to make along with the change with the volatility cap threshold. It's also important when we consider that, the OFA and OPM released stress test reports recently, and they showed that we're definitely in a better position to deal with these issues than we have been in the past. But it is the case that with a moderate or severe recession, we'd still exceed our entire budget reserve fund. And importantly, those estimates don't take into account any of the federal cuts from the One Big Beautiful Bill Act, which again could be, we're estimating it could be $1 billion in lost revenue to the state. So we're actually in the fiscal risk to the state is even more severe than those stress tests show. So I think you could get about $1 billion or more from adjusting the volatility cap threshold, and if you change the budget reserve fund too, that'd be a well-packaged design to go together.
And thank you very much for that answer. And also, I noticed in your written testimony, you did some analysis around a 10-year moving average as well as a 5-year. I guess they're both arbitrary numbers. Like, do you have any comments on one versus the other?
Yeah, so I mean, 10 years, at least based on the existing data that we have, it tends to be inherently more conservative. You'd have less freed up revenue. That wouldn't necessarily be the case in all years. Right now, we're in the weird situation where it's been going up so much. So in a year where there was maybe in some years, if we had some down years, it might not be the case that a 10-year would free up more revenue than a 5-year. So I think either one of them is reasonable, but once you start to get past 5 years to about 10 years, that's why it's important to, I think, use an inflation adjusted moving average, because you don't want to say what was our revenue 10 years ago. And just the fact that it's not inflation adjusted is kind of bringing down the idea of what that revenue would mean in simple dollar terms. So if you wanted to pick a 5-year, that would work, a 10-year would work. But once you start going past 5 years in general too, you really want to make sure that those older numbers are inflation adjusted.
Thank you very much. Thank you, Madam Chair.
Thank you, Senator. Representative Farrar.
Thank you, Madam Chair. Thank you both. Patrick, you spoke earlier a little more in depth about the impact of a lot of the federal cuts on the residents of the state, but I was hoping you could speak to a little more detail for us to understand the actual tax cuts that the wealthiest in our state are receiving from the federal government, and explain those to us in a little more detail so we can understand how in our state, if we pursue these very targeted, modest efforts to raise taxes on the wealthiest, will they even have a significant burden given the breaks they just got at the federal level?
Great, thank you for the question. So Table 7 gives an estimated impact of our new federal policies. It's on page 14. Takes into account the impact of the One Big Beautiful Bill Act, and then 2 different measures of tariffs, a broad measure of tariffs, and then we separate the tariffs excluding the IEEPA tariffs, which the Supreme Court has struck down recently, but which we see are likely to be replaced in some form with another set of tariffs. So if we take the impact of the One Big Beautiful Bill Act and the broadest measure of tariffs, you see that the lowest income households on average, the bottom 20% are estimated to lose about $1,630 in resources. It's important to keep in mind that's an average. So obviously if some of those households aren't losing SNAP or Medicaid, but some of those households are. So if you're losing Medicaid and SNAP, that's going to be many thousands of dollars more. But so on average, you're going to see about a $1,600 reduction through the One Big Beautiful Bill Act and the tariffs. And you notice that the tariffs, depending on which tariffs we have in place, essentially more than offset any of the gains and tax cuts from the One Big Beautiful Bill Act. So either the bottom 40% or the bottom 60% of households end up worse off, depending on what tariffs we have. And then you see essentially with the top 10%, they're going to see an increase in the One Big Beautiful Bill Act of on average over $13,000. And if you take into tariffs for them, their benefit's going to be in the range of about $9,000 to $11,000. There's a bunch of different tax proposals in the One Big Beautiful Bill Act, but some of the things that we've seen essentially are they lower the top personal income tax rate from 39.6% to 37%. So you say if you increase our top income tax rate on all income, the broad-based increase from 6.99% to 7.99%, that still wouldn't fully offset the tax cut that they're receiving there. I know somebody might counter, well, what about SALT changes and all these different various things? It is the case that the alternative minimum tax has limited the SALT deduction in practice, actually. And we've also seen an increase of the SALT deduction to $40,000. So it is the case that some households there's going to be variation essentially in how the very wealthiest are benefiting. But if you just kind of pick some of the individual targeted proposals, again, a 1 percentage point increase is not going to fully offset the over 2 percentage point decrease that they got. If you look at capital gains that we've talked about, increase in a 1 percentage point increase, it's important to note that the top income tax rate on capital gains at the federal level is 20%. If you include the net investment income tax, that makes it 3.8%, which would put it at 23.8%. So that's down from 37%. So even if you were to do a 1 percentage point increase in the capital gains tax, you're still talking about massive tax breaks, essentially, that the highest income households are going to get. And you're only just partially essentially offsetting these at the state level. So they're still on average better off than they would be pre the Tax Cut and Jobs Act and the One Big Beautiful Bill Act. Sorry, I hope that.
Thank you, Patrick. And I will, as you said, I will look at closer detail at the whole 36 pages, but I really appreciate you giving us that summary in person. So thank you for doing that. And thank you, Madam Chair.
Thank you. Senator Fonseca.
Thank you, Madam Chair. Good afternoon. Mr. O'Brien, who do you think contributes the resources that have been generated from the volatility cap? Who's the payer?
Well, I mean, technically it comes from two sources. So it's the estimated and final portion of the income tax, which essentially is all non-wage based income. So I believe it's disproportionately comes from highest income households, but it comes from a broad range of income taxpayers, as long as you're not getting predominantly. I don't know that I can give you a percentage. It's disproportionately coming from high income households.
So a tax on the wealthy.
That measure. Yeah. So I would identify, when we talk about changes to the volatility cap, we in general are describing that as a progressive source of revenue because it's disproportionately coming from high income households.
And if I said to you that this committee were to adopt a tax proposal on the wealthy that would generate $850 million every year, that'd probably make you happy, wouldn't it?
I'd like to see the details, but I would say, sure, I think getting increased revenue from the highest income households.
If I say this committee will adopt the proposal on the wealthy to generate $850 million, you'd want to look at the details?
Well, I think tax policy design is important, but yes, in general, high income households, I think, should be paying a larger share of their income in taxes.
So since we've implemented this policy of the volatility cap, and I think you alluded to this a few minutes ago, how much has that resulted in spending in the budget every year at this point?
I believe, I don't have the number off the top of my head. I believe
$850 million.
OPM, yes, at 800, but the key there is that it is lower than it would otherwise be. So it doesn't necessarily decrease the amount of $850 million in straight dollar terms. It's $850 million relative to what it would be having not made those payments, because what we've seen essentially is the amount of that we have to pay for those vary based on a lot of different factors. But yes, it is freeing up some money in the budget relative to what would otherwise be the case.
$850 million. And I'm certain you know the answer, but for those in the room and those watching and listening, how much does the budget contribute towards remaining debt that we have for CSRS and TERS, that's state employee retirement and teacher retirement?
On an annual basis? I believe in the budget, it's several $billion.
$3 billion.
Yeah.
Down from $4 billion, roughly. So every year we pay $3 billion towards debt for teacher retirement and state employee retirement. And if I said to you that we would do something that would provide $3 billion in revenue for the programs and the policies that I think most of us would support, but you certainly support, that'd be a pretty good deal, right? Instead, we can't do that because we have to pay down a debt that past legislatures and past governors were not responsible in addressing. So, but I don't recall voices coming in and saying, let's use that $850 million or future, because there will be, unless we do away with the volatility cap or the economy tanks and the wealthy are no longer here to be taxed. That number will be $1 billion. That number will be 1.5 billion at some point. But that's not the conversation that we seem to have here. It's a conversation of and I think our tax structure is not equitable. I've proposed ways to make it more equitable, but on this particular issue, that doesn't seem to be a matter of importance. That a mechanism that is providing a safety net for the most needy of our population, that should be altered. And the fact that nearly $1 billion in revenue has been created, or I should say opportunity for services and whatnot has been created, but I don't recall a proposal coming from voices saying, let's use future revenue, let's use any past revenue, which has been spoken for because it's already been spent in the budget. But going forward, that's not a conversation that we have. Can you tell me why?
I'm happy to share Voice's opinion on this. So we are of the view that it is financially responsible and the important thing to make the regular payments. It's obviously unfair to current generations to go and have to pay back previous generations' debt, but we understand that it's the fiscally responsible thing to do and that the state should go ahead and do that. Where we have differed essentially is the idea of the additional debt payments. The problem is when we look back and say, well, this debt for the regular payments of several $1 billion in the budget dates back to the 1930s. So we're talking about decades of debt that all of a sudden is being placed on the current generation to pay this. And so how do we go about and pay this? Well, they took that debt and they amortized it. And they said, we're going to pay this over a 30-year period because obviously it would be too unfair for this current generation to pay this in a year or 5 years. So we're going to spread it over 30 years. And so that was a reasonable approach to take. What happens with the additional debt payments then now of several $1 billion is the benefits of that supposed $850 million or so that's freed up in the budget. The benefits are also amortized over a 25-year period moving forward, meaning every time we make an additional payment of billions of dollars, it does free up some money in the budget next year, but it also frees up money in the budget up through the 2040s. And so what you say to current taxpayers is, through your regular payments, you're carrying the burden of debt that dates back to the 1930s. And now every time you make additional payments, you're getting some benefit of it, but you're also now providing benefits to families that date into the 2040s. So we're talking about on the current generation, putting a debt burden on them that spans from the 1930s through the 2040s. That's over a century of debt burden that's placed on current families. And so we again have been supportive of making regular debt, the regular payments. It's the additional debt payments that becomes too unfair from an equity perspective. And you got to think about the tax system. So the tax system is distributionably inequitable. Low and middle income families are paying a higher percentage of their income in taxes, and they're funding now a system that has intergenerational inequity.
Here's the reality. Over half of every dollar raised in Connecticut in taxes goes towards fixed costs. Not a small percentage of that is debt. So when you talk about ability to address the issues that you are here for, and so many in this room are here for, that many of us here share that concern, we're sending over half of every dollar off for other obligations than the issues that you want to address. In my world, that's unfair. That's irresponsible. And we ought to do something about it. And that's what we have tried to do something about. Because that 4 billion will be 6 billion, will be 8 billion if we don't address it. And we weren't addressing it. We can fight, and every year we have proposals. This committee advanced, and I'll end this, Madam Chair. I apologize for this use of valuable time for those who are waiting to speak. But we advanced a bill out of this committee on a capital gains tax last year. We can have that conversation, and we continue to work towards greater equity. But at least make the dollar that we are raising in taxes today, not a small proportion of that coming from the wealthy, in a wise and more fair way and more efficient way than we are right now. We're making positive steps, in my opinion, towards that, but we have a ways to go. And we ought to have a conversation about that, not just how do we turn the clock back to where we were, spending revenue that was very volatile, ensuring that when the recession came, that the neediest of us, of our population, were hurt first and hardest. Thank you, Madam Chair.
Thank you, Senator. See no further questions. Thanks. Next up, we have Fiona Pearson. Online. Nope. Oh, there we go. Three-dimensionally. How nice.
Thanks.
Floor is yours. Please turn your microphone on though. There we go.
Thank you. Dear members of the Finance Committee of the Connecticut General Assembly, my name is Fiona Pearson, and I currently serve as the chair of the Budget Committee of the Town Council of Cheshire. I'm a member of CSU AUP, and I'm part of the statewide coalition Connecticut for All. I'm here today to encourage you to support HB 5187, an act adjusting the fiscal guardrails, as well as the revenue increasing measures HB 5133, SB 101, SB 103, and SB 104. At CCSU, where I'm professor of sociology, I have watched during the past 20 years how disinvestment has affected my students and diminished our working and teaching environment. I testified at appropriations last week, sharing stories of my students who are struggling with finding childcare in their communities and mental health issues. One student was left with no choice but to bring her 6-month-old daughter to my class nearly every day last semester. Another student left our university for the Army, primarily because he believed it to be the only viable way to cover the cost of college. The Finish Line Scholarship, which expands PACT to the 4 CSUs, would have certainly benefited him. However, we are now learning that the governor is proposing to cut that already inadequate funding in over half, from $7.7 million to $3.5 million. Certainly, the revenue generating proposals being considered today would allow us to not only restore that funding, but expand it so that the program can actually serve the full number of qualifying students in our state. In my other role as town councilor, we are struggling to fill budgetary gaps left by decades of disinvestment in our schooling infrastructure and flat and declining state aid. The last time we built a new school was 55 years ago. And the average age of our schools is just over 75 years. This will change next fall with 2 much needed new elementary schools being constructed. But with that new construction comes increased debt service, which was a primary driver of the $15 million gap, 10% of our budget that we were left to fill by cutting paraeducators, staff, and services. And we still have the aging infrastructure of our high school, middle school, alternative school, and 2 additional elementary schools to address. ECS and pilot revenue has declined, and reevaluation particularly hit our lowest income residents hardest, who saw their rents or property values and property taxes significantly increase while their incomes did not keep pace and inflation continued to increase prices. The proportion of our lowest residents' income spent on just getting by was only outpaced by the stock revenue earned by the wealthiest in this state. We know we can afford to do better. Cheshire, Hamden, and New Haven are connected by a river and a county, as well as a deep-rooted social problem, the ills of wealth and equality. For that reason, I ask that you support Connecticut for All, stand up for Connecticut fair share policies, which will make our Connecticut tax system more fair. I thank you for your time and attention.
Thank you very much. Anyone? Thanks.
Thank you.
Kim McLaughlin?
Hello, can you hear me?
We hear you. Please
Okay,
proceed.
great. Good afternoon, distinguished chairs of the Finance, Revenue, and Bonding Committee. My name is Kim McLaughlin. I live in Bridgeport. I'm a member of Connecticut for All. I support Connecticut for All stand up Connecticut fair share policies to make Connecticut's tax system more equitable. And I will be highlighting House Bill 5187, House Bill 5133, Senate Bill 101, and Senate Bill 103. The state of Connecticut's low and moderate income families is in decline. Over the last 10 years, we've experienced a devastating pandemic, overwhelming job loss that has yet to recover in the state, dramatic increase in the cost of housing, both rental and ownership, an increase in homelessness, an increase in the number of people who are homeless yet work part-time and full-time, individual and family loss of healthcare, a growth in the gap between rich and poor communities, and a huge gap in the growth, in the funding gap between public schools in wealthy suburban communities and poor urban and rural Connecticut communities. For 13 years, I want to emphasize this because this is a huge issue for my family and many others in Bridgeport, and we're organizing around it. For 13 years, there's been no increase in the ECS formula for Connecticut's poorest urban and rural school systems, including Bridgeport's, despite a promise to keep up with the 41% inflation during those years. Low and moderate income families can't afford to take care of their family's basic needs. There's no time left for meaningful life experiences, such as civic engagement, recreation, or educational opportunities. There needs to be a much better balance between rich and poor in Connecticut. There needs to be a new development to help the collapsed middle class. Our young people can't afford to stay in the state anymore. So for the above reasons, I respectfully request your support for House Bill 5187. That's the bill, other people have spoken about it, which would allow for the adjustment of the fiscal guardrails. We know that's happened this year, and we hope that it will be continued. There'll be opportunities over the next years also. Obviously, political will has an awful lot to do with that at the moment. I respectfully ask that you request that you support House Bill 5133. That would be taxing the ultra wealthy. increasing the percentage tax by 1%. The ultra wealthy are making billions. We know we have millionaires and billionaires in this state, which I can't even grasp what kind of money that is. They need to be paying more, their fair share. And also requesting that
You have reached 3 minutes. Please summarize.
Senate Bill 101, and Senate Bill 103, which is crucial, the child tax credit. So thank you very much. Appreciate you hearing me and other folks and our testimony. And we appreciate and hope that you will support Connecticut for All. Stand up Connecticut Fair Share policies. Thanks so much.
Thank you, Ms. McLaughlin, for your testimony today and your patience with us. And I want to apologize to Meg Horrigan for bypassing her, but she's online today and you have the floor.
No problem. Thank you so much. And thank you to the whole Finance Committee for the opportunity to testify today. I'm Meg Horrigan, resident of New Britain and co-founder of the Connecticut Food Sovereignty Collective, a group dedicated to building power for regenerative, interdependent, democratic food systems that nourish everyone. We support the Connecticut for All Coalition's Stand Up CT Fair Share policies, including 5 bills shaping a more equitable tax structure to grow Connecticut's triple bottom line of health, economy, and environment. All 5 bills are outlined in our written testimony, but I wanted to emphasize some of the land and food connections with you today. Connecticut has the highest rate of food insecurity in New England, but we invest half as much per capita in food access programs compared to states like Massachusetts and Vermont. With rising food prices impacting everyone and more SNAP cuts hitting Connecticut's most vulnerable people, we must invest in food access. We can end food insecurity without raising taxes on working people. Instead, the proposals being heard today can generate revenue for food access and interconnected programming while creating a more equitable tax structure. Revenue generated by HB 5133, increasing the highest rate of the personal income tax, could be invested in health, education, and the state economy, especially by serving healthy, Connecticut-grown food to all students through a true universal school meals program, which would support child food security and local farmers at the same time. And Massachusetts does this through their fair share tax. SB 101, an act establishing a statewide property tax, addresses a little bit of how Connecticut's extreme wealth inequality is embedded in land. In addition to the highest food insecurity rate in New England, Connecticut has some of the most expensive farmland in the country, which creates barriers for beginning farmers and contributes to farmland loss. This tax could be used to support farmland access and community farms, ensuring that Connecticut's working lands feed everyone. HB 5187, adjusting the fiscal guardrails, makes fair changes to our budgetary processes to align with basic human needs. In our own domestic budgets, we buy food, shelter, and medicine before meeting our debt obligations. The fiscal rules of the state that have caused us to disinvest from some of our most vulnerable residents must be adjusted to support equity and financial stability. While people are hungry, unhoused, and lack healthcare in this wealthy state, we must prioritize food, housing, and health in the people's state budget. We would then be in a better position to help meet the state's financial obligations as well-fed, housed, and healthy people. Martin Luther King Jr. emphasized that budgets are moral documents. So federal policy like HR 1 that cuts health and social services to benefit the wealthiest, and the fiscal responsible state policy that mirrors those priorities are both immoral, regardless of the party that enacts them. Adjusting the fiscal guardrails and implementing these tax reforms would enable Connecticut to end food insecurity and make this wealthy state a healthy state too. We have the strength, resources, and responsibility to ensure food, housing, healthcare, and financial stability for all. So please support the Connecticut for All Coalition Stand Up CT Fair Share policies, including HB 5133, HB 5187, SB 101, SB 103, and SB 104. Thank you so much for your time and consideration.
Thank you for yours. Anyone? Thank you. Melissa Wilder. Courtney Boyens.
Senator, I'm sorry, she is here.
Okay.
She just needs to be promoted to a panelist. Please accept.
Maybe we can come back. Courtney Boyens.
I'm Courtney Barnes. I'm a resident of West Hartford. Having heard some of your questions, I'm not an economist or an expert in any of these things, but I do very much believe that we need to do more to support the reality that today Connecticut, one of the wealthiest states in the country, has one of the highest income inequalities between our wealthiest residents and our poorest residents. Let me just cite a couple of statistics that I'm aware of in this regard. According to a recent analysis by the United Way of Connecticut in 2003, and I'm now quoting, a record high 581,000 Connecticut households, those are households, 581,000, or about 40% of Connecticut's population couldn't afford a basic, quote, survival budget. The threshold the United Way determined is needed for families to survive in one of the nation's wealthiest states. On the wealthy side, it's my understanding that there are in excess of over 10,000 households that earn multiple millions of dollars a year. At one point, I heard the average was 2.54 million. We also have the 15 billionaires. And I just think that those who are fortunate enough to quote one book title, to have been born on third base, as many were, can do more without affecting their lifestyle one whit. I submit that wealthy residents that we're talking about won't know that they're even paying a bit more until they sign their tax form every year. So they're not being affected negatively if they contribute. And I would like to see what they contribute funneled by the legislature to help those who I've said, those 581,000 households who are struggling. I understand one concern, and it's been raised here, is that Governor Lamont believes that any taxes increase will cause the wealthy residents of Connecticut to flee. There was a study several years ago by an author of a book called The Myth of Tax Flight. He actually studied Connecticut among those states, and he determined, in his opinion, that 2 to 3% of our very wealthy citizens might decide to move to their home in Florida or Arizona or wherever after, just nudged over by the tax increase. But the great majority, he found, will not move, the 97 or 98%, because their place, their community, their friends, their family, their jobs are so much more important to them than a marginal increase in taxes that will not.
You've reached 3 minutes. If you could please summarize.
I think I can stop right there.
Thank you, sir. Representative Rader?
Thank you, Mr. Chairman. Thank you, Mr. Burns, for your testimony. I really do appreciate it. And you referenced those 500,000 plus families that are kind of living in that constrained income. And I found it really interesting a few months ago, the survival budget for a family of 4 in Connecticut is $140,000. That's a lot of money, but yet that's just barely to survive. And so I'm grateful that you've highlighted that, you know, our families that maybe not be receiving all the social services they could access, but are really just trying to make it count and keep their families in Connecticut, keep them in our great schools, are really, really struggling. So I just appreciate you highlighting that. So thank you.
Thank you very much.
Thank you, Mr. Chair.
Thank you. Representative Farrar?
Thank you, Mr. Chair. Courtney, just want to thank you on behalf of all of us in West Hartford for being here today and for sharing your personal thoughts and how it affects all of our towns and municipalities. So thanks.
Thank you so much, Representative Farrar.
Anyone else? Thank you. Thank you, sir. And we'll go back to Melissa Wilder, who I believe is now ready.
Hello, can you hear me now?
We do hear you.
Oh, good. Good afternoon, Senator from Farah, Representative Horn, and members of the Finance Committee. It's been very interesting to experience this. It's my first time. So thank you for having me and being patient here. My name is Melissa Wilder, and I am a resident of Woodbury, Connecticut. I've been in Connecticut my whole life. I'm a parent, I'm a nurse in the community, and a person with disabilities. I'm part of the Women's Wisdom Circle at She Leads Justice, amongst other organizations within my community. I'm testifying today in support of Senate Bill 103, an act establishing a child tax credit, which you have spoken about here today. The cost of living it's not even high anymore. I feel like that's such an unjust word to what is going on in the state. It's the expenses for food, medicine, and healthcare. I've had to decide whether or not to get my medicine or to get other hygiene needs, or something for my children that they could do, like sports or activities of sorts. This credit would definitely mean some relief, but I do feel like it would be very thankful. We would be grateful to get it, but it's not even a Band-Aid at this point. I've heard you talk about numbers that I really can't wrap my head around, quite honestly. Our basic needs are not being met, and we are facing unrealistic imposed finances upon us. I support the House Bill 5187, the act adjusting the fiscal guardrails. I didn't even know we had guardrails, because quite honestly, I feel like everyone is driving all over the place. I resumed my master's degree, and I can't even figure out my financing because of all the litigation going on, and just the mess that our nation is in at this point. The wealthy, I can appreciate where they are coming from, but when you are gifted, even if you earn it, you have a responsibility to take care of those around you, to make sure that your environment is at its peak and the best quality of life that we can all live, which is individual to each of us. We may have similarities, but we all have our little quirks that we need met in order for us to keep being productive. Honestly, the
Excuse
property
me, you reached your
taxes.
3 minutes. If you could please summarize.
Oh, the people of Connecticut would greatly appreciate some relief, and for those that are of better means to please, give more. Thank you.
Thank you. Questions? Thank you, Ms. Wilder.
Thank you.
Megan Fontaine?
Microphones.
It is on.
Okay. And I'm going to be I'm Megan Fountain, Community Organizing Director at She Leads Justice, and I will be translating from Spanish for Gabriela. Do you think we can use the same mic?
You can. Is Gabrielle signed up?
Yes.
Number? Thank you. Please proceed.
Good afternoon. I will give you my testimony in Spanish and Megan will translate for me. Thank you. Buenas tardes, mi nombre es Gabriela, soy residente de Hartford, soy parte del Círculo de Sabiduría de Mujeres.
Good afternoon, esteemed members of the committee. My name is Gabriela. I'm a resident of Hartford, and I'm part of the Women's Wisdom Circle at She Leads Justice.
Soy madre trabajadora y una voluntaria que realiza trabajos comunitarios para ayudar a las personas más vulnerables de la ciudad de Hartford.
I'm a mother, a worker, and a volunteer who does community work, helping the most vulnerable people in the city of Hartford.
Doy mi testimonio a favor de la ley del crédito fiscal por hijos número 103 y también les insto a que aprueben los proyectos de ley número 5187, 5133, 101 y 104 para mejorar el sistema impositivo para los que no tienen mucho dinero, los que tienen mucho dinero paguen un poquito más. Estas leyes ayudarían a que hubiera una mejor calidad de vida y más igualdad para todos los residentes del estado de Connecticut.
So I'm testifying in favor of SB 103, an act establishing a refundable child tax credit. I also urge you to pass the fiscal guardrails bill and the tax equity bills, HB 5133, SB 101, and the third tax equity bill. If you improve the tax system so that those who have a lot of money could pay a little bit more, these laws would help create a better quality of life and greater equality for all residents of this state.
Soy una voz para muchas mujeres que han pasado por situaciones de violencia. En mi familia, un hombre abusó de mi hija. Fue la peor época de mi vida. Yo tenía una tiendita y la perdí porque tenía que dedicarme a ir a los tribunales, a terapia, a buscar justicia y sanamiento emocional para mi hija y toda mi familia.
I'm a voice for many women who have experienced violence. In my family, a man abused my daughter. It was the worst time of my life. I had a small shop and I lost it because I had to dedicate myself to going to court and therapy to seek justice and healing for my daughter and my family.
Gracias a organizaciones como el Círculo de Mujeres aprendí que tenemos voz y podemos alzarla.
Thanks to organizations like She Leads Justice, I learned that we have a voice and we can raise it.
Mi sueño es que mis hijos se eduquen y la educación es la base del futuro y empodera a la mujer y a los niños. Mi hija, la que fue víctima de este abuso, está a punto de cumplir un bachelor en psicología y estoy agradecida al Estado por la ayuda financiera que le permitió estudiar.
My dream is for my children to receive an education. Education is the future and it empowers women and children. My daughter, the one who was a victim, is about to finish her bachelor's degree in psychology.
Estoy agradecida por el Estado por la ayuda financiera que le permitió estudiar. Sin embargo, para tener su licencia de psicología necesita más estudio. Quiere hacer una maestría que cuesta alrededor de $50,000 y no hay becas y tiene que hacer un préstamo a su nombre.
I'm grateful to the state for the financial aid that helped her study. However, to get her psychology license, she needs to pursue a master's degree, which costs $50,000, and there are no scholarships. She has to take out a loan.
Mi otra hija estudió en Yukon, pero no pudo seguir. Me decía, mamá, no puedo estudiar porque no puedo dejar de trabajar. Tengo que ayudar a la casa. Ella tiene 21 años, trabaja como mesera, le pagan $6 la hora más sus tips y apenas cubre sus propios gastos.
My other daughter studied at UConn, but she couldn't continue. She told me, Mom, I can't study because I can't stop working. I have to help you pay the bills. She's 21 and works as a waitress. She gets paid $6 an hour plus tips. She barely covers her own expenses.
Yo trabajo por mi cuenta haciendo peinados, maquillaje, limpiando casas. Pago mis impuestos. La renta y la comida se llevan casi todos mis ingresos, especialmente la renta. Nunca he aplicado para ayuda de renta. Además, están suspendidas muchas ayudas que antes estaban para la renta.
I am self-employed. I do hair, makeup, and I clean houses. I pay my taxes. Rent and food take up almost all of my income, especially rent. I've never applied for rental assistance, and also many rental assistance programs have been suspended.
Por eso apoyo estos proyectos de ley. Los que tienen mucho dinero deberían construir un poquito más. No solo si quieren donar, sino porque una ley lo requiera. Así habría más fondos para universidades, más oportunidades para que nuestros hijos se eduquen y una mejor calidad de vida para todos en el estado.
That's why I support these bills. Those who have a lot of money should contribute a little more, not just if they want to donate, but because the law requires it. This would provide more funding for universities, more opportunities.
Para muchas mujeres, muchas han pasado por cosas peores, pero seguimos trabajando y pagando nuestros impuestos. Aunque sea con mucho sacrificio, les pido que apoyen esta legislación de justicia fiscal. Gracias.
I hope my story serves as an inspiration to many women. Many have gone through worse than I have. We continue working and paying our taxes, even though it's a great sacrifice. I ask you to support this tax justice legislation. Thank you.
Thank you.
Gracias, Gabriela. And thank you, Megan, for being here and helping translate. Although
Thank you.
I
Gracias.
got some of your Spanish, not all, but it's some. But thanks very much for being here today, and we're listening. Questions? Thank you very much.
Gracias. Thank you.
See. Brooklyn Williams.
Good afternoon, co-chairs Horn and Fonfara, ranking members Fazio and Paletta, and other esteemed members of the Finance, Revenue, and Bonding Committee. My name is Brooklyn Williams, and in addition to being a Connecticut resident, I am also a graduate student at the Yale School of Public Health studying health policy and an alumna of Columbia University, where I obtained a master's degree in neuroscience. Thank you for your time today and the opportunity to testify in support of Senate Bill 103, an act establishing a refundable child tax credit. This bill would establish a refundable tax credit for Connecticut families covering up to 3 children per family, starting at $150 per child and phasing up to $600 per child in the 3rd taxable year. This bill not only provides economic relief to families, it also provides increased opportunity for food security, improved health outcomes, and reduced child poverty. In 2021, as part of the American Rescue Plan, federal child tax credit payout was expanded from $2,000 to $3,600 for families with children under the age of 6. Through analysis of the effects of this exemption or this expansion, studies have shown that families use this tax credit as a means to afford rent, groceries, utility bills, and clothing, and other basic essentials. Due to the economic relief families experienced, child poverty rates decreased across the country by 46%. This reduction meant that children had access to reliable food, housing, and transportation. Throughout my neuroscience studies, I focused on the effects of poverty and disease on the brain and how this impacts development and overall health. Exposure to food and housing insecurity can lead to chronic stress, increased susceptibility to health complications, and decreased mental health. Conversely, access to reliable food and housing can allow for decreased risk for chronic disease, increased school attendance in children, and reduced stress. Long-term, these effects enable prolonged job stability, higher education attainment, and economic stimulation as more residents have the disposable income to invest back into the economy. The way Connecticut income tax law currently exists, there is no adjustment made to account for family size, only filing status. This means families are penalized in a way for having children. With the median age for Connecticut residents over 40 years old, putting us in the top 10 in the country, this child tax credit would enable more families to have children, upholding Connecticut as a family-friendly state. As many other individuals today have testified, the establishment of a child tax credit in the state of Connecticut is more than just a reduction in money owed in taxes. This refundable tax credit would allow for families at all income levels to be able to afford basic necessities, stimulate the economy, as well as experience reduced stress caused by financial hardship, increased health outcomes, and consistent school attendance. In essence, this bill points towards a more equitable,
You've reached 3 minutes. If you could please summarize.
a more equitable and family-friendly future for Connecticut residents. In conclusion, I support Senate Bill 103 and the establishment of a refundable child tax credit for Connecticut families. Thank you for your time and consideration.
Thank you. Questions? Did I hear right that you have a degree in neuroscience?
That is correct.
Well, you'd have a field day examining this crowd up here, but thank you very much for your testimony.
Thank you.
Seth Freeman.
Dear members of the Finance Committee, my name is Seth Freeman. I'm a resident of West Hartford and president of 4Cs SEIU 1973. Our union is a proud member of Connecticut for All, and we strongly support Connecticut for All's Stand Up Connecticut Fair Share policies. Thank you for raising HB 5133 and 5187 and SB 101, 103, and 104. Our union understands that now is the time to make Connecticut's tax system more fair so we can invest the much needed additional revenue in services and resources for low-income, working class, and middle-class families in our state. It is time we face a simple and hard truth. The reason that Connecticut remains such an inequitable place to live, inequitable based on class, inequitable based on race, inequitable based on zip code, is because we choose to keep it that way. Inequity is a policy choice, and it's past time that we as a state choose better. We support Connecticut for All's fair share policies because across our public higher education institutions, our community colleges, Charter Oak State College, our regional state universities, UConn, and UConn Health, our institutions are reeling from chronic disinvestment from the state. Year after year, decade after decade, we are told the state of Connecticut can afford to fully invest in our institutions and thus fully invest in our students. In our community colleges specifically, one of the many challenges we face is growth over reliance on part-time contingent faculty. In our community colleges today, 75% of our teaching faculty are part-time, paid on a semester-by-semester contract with no healthcare benefits. This underserves our students because our experience and the research is clear that higher rates of full-time faculty lead to higher rates of student success. Connecticut had the shameful distinction of having the 5th lowest ratio of full-time to part-time faculty for two-year public colleges across the nation. This is just one of the results of chronic underfunding. Chronic underfunding of our public higher education institutions is a policy choice, a choice that directly relates to our continued failure to force the ultra-wealthy to pay their fair share. It is time we raise taxes on our ultra-wealthy residents so we can invest in education, childcare, healthcare, housing, and more. These investments make our state better for all of us, including the millionaires and billionaires, who likely won't even notice the marginal tax increases we are talking about. Please pass the fair share policies, and thank you for your work and your leadership on this.
Thank you, Seth. Questions for Mr. Freeman? I need to get in the habit of looking at the screen to see if any of our members have a question online. Seeing none, thank you very much. Mars Rodriguez.
Hello, can you hear me okay?
Hear you fine.
Great, thank you. Dear members of the Finance Committee, my name is Mars Rodriguez and I live in Hartford. I'm an organizer for the Connecticut Black and Brown Student Union, a member of Working Families Power and part of the Connecticut for All Coalition, and I support all of the policies that they are putting forth today. I am intimately involved in political activism, community organizing, and building towards a society that centers the working class and not just those who have unfathomable wealth. And I could certainly speak to the importance of all of these policies within the expertise of our current political conditions, but I would much rather center the youth that I work with as part of my role in the Connecticut Black and Brown Student Union. I facilitate a youth chapter here in Hartford that in part provides a space for high schoolers to openly and honestly discuss contemporary issues and express how it makes them feel. And what I hear from them repeatedly is disillusionment with not just our federal government, but with our state government. These children feel disregarded. At just 14 to 18 years old, they see that our state government prioritizes the wealthy and leaves them behind. Their schools don't have enough money for textbooks. Some of their school bathrooms are unusable and haven't been fixed in months. And they get criminalized and set up for failure instead of being uplifted in part of these failures from this state to properly fund our schools and have an equitable tax system. These children see poverty all around them, despite the fact that this is one of the richest states in this country. I have one student who is interested in starting a website where people can donate money so that his classmates can get new textbooks and afford going on field trips. And while I applaud this initiative and this drive to do something for his community, I can't help but feel disgusted by the fact that our state is failing our future so badly that they feel that they have to take it into their own hands. What he wants is a Band-Aid fix, but it does not resolve the core issue, which is our current tax structure and the bedding of our state legislature and governor with the wealthy in this state. And while the fascists in our federal government are currently exacerbating these issues and worsening this crisis that we need to respond to now, this issue has existed far before Trump and his cronies came into power. We are here today because of the decision of our leaders to ignore the working class and instead enable the elite to exponentially concentrate their wealth in their hands? What are we teaching our youth when again and again this state chooses to ignore their needs? And I want to emphasize that this is a choice. If there's anything that I learned in my time working in politics, is there is no such thing as an inability to accomplish something, simply an unwillingness to. When our state gives tax breaks to companies like Colt to send weapons of death to aid the genocide in Gaza instead of funding our schools, that is a choice. When our state allows the wealthy to continue exploiting the working class and not paying their fair share of taxes, that is a choice. And when our state leaves behind the children that are our future to fend for themselves, that is a choice. Fascism does not come from nowhere. It is the result of willful inaction and compromise with those who exploit, enslave, and starve the working class. And if you truly care about this state and those who will grow up in it, you will make the decision to disempower the wealthy from the stranglehold that they have on us. Liberalism
lose 3
has
minutes.
failed
Could
us
you
and
please
led us
summarize?
to barbarism. There is only one path forward. You either stand behind the working class and pass these policies, or you will see yourselves unseated from power. Thank you.
Thank you, Mars. Questions? Thank you, sir. John Wilson?
I'd like to thank the Finance, Revenue, and Bonding Committee for allowing me to testify today. My name is John Wilson, and I am the volunteer state president of AARP Connecticut. I am here to testify in favor of Senate Bill 114 and Senate Bill 77. AARP appreciates the legislature's ongoing efforts to reduce the tax burden on middle-income retirees. Senate Bill 114 builds on these efforts by eliminating income thresholds for the state's personal income tax deductions on Social Security benefits. Removing these limits will expand access to tax relief and help more older residents remain in their homes and communities. New data from an AARP survey conducted in Connecticut in January shows that affordability concerns are growing for adults in the state. More than 1/3 of Connecticut's residents age 45 plus have considered leaving the state in the last year. Their top 3 reasons for considering a move are lower overall cost of living, lower housing costs, and lower taxes. Under current law, Connecticut allows full or partial deductions for Social Security benefits, pension and annuity income, and IRA distributions. Full Social Security deductions are available only to some. Others receive only a partial deduction, leaving up to 25% of their benefits taxable. Connecticut also provides deductions for pension, annuity, and IRA income, but these phase out for many taxpayers. Connecticut should continue to adopt policies that help retain our older population and avoid incentivizing retirees to leave the state. We would also like to express support for Senate Bill 77, an act establishing the personal income tax deduction for full-time health care costs. We submitted more extensive written testimony with some suggestions on how to strengthen the proposal to support more of Connecticut's family caregivers. Thank you for providing AARP the opportunity to support these important bills.
Thank you, Mr. Wilson. Questions? Thank you, sir. Hannah Strager? Dr. Royce Avery?
Good afternoon. Can you hear me okay?
Hear you fine?
Yes, hi. Good afternoon, Chairman, distinguished members of the Finance Committee. Thank you for allowing me the opportunity to speak today. My name is Dr. Royce Avery, and I serve as the interim school superintendent for the Bridgeport Public Schools. I'm here this afternoon in strong support of HB 5187 and the responsible adjustment to the financial guardrails to address the urgent needs of students across Connecticut. Connecticut has shown that it's willing to revisit the financial guardrails when urgent and important matters demand actions. Public education is such a matter. The needs of our students are immediate and cannot wait. For more than a decade, the state's primary education funding formula has not kept pace with the inflation or the real cost of operating schools. Meanwhile, districts faces rising costs in transportation, utilities, healthcare, contractual obligations, mandated student services. And as a result, seasoned towns are carrying a growing burden with local property taxpayers funding the majority of the public education. In Bridgeport alone, more than half of our students receive bilingual and special education services. These are not optional programs. They are required supports that enhance students receiving an equitable access to learning. Districts across this state are facing similar pressures. Last year alone, Bridgeport Public Schools made a painful reduction to address a deficit. We cut programs, services, and staff. These decisions directly impacted classrooms and student opportunities across our district. Today, we're operating at bare bones in Bridgeport Public Schools. There is nothing left to trim without fundamentally harming students. We cannot cut anymore. If the funding structure remains unchanged, we will once again face difficult decisions. That is not sustainable, not for Bridgeport and not for any district across Connecticut. While long-term formula reviews are important, this matter cannot wait for another study or process. Our students are in classrooms right now, and they need the support right now. Adjusting the guardrails through HB 5187 is a reasonable step that aligns the state's financial strengths with the obligation to provide equitable educational opportunities for all students in Connecticut. Education is not a discretionary spending. It is an investment in Connecticut's workforce, economy, and future. I respectfully urge to support HB 5187 and provide districts the resources necessary to meet the needs of the students we serve. Thank you for your time and your consideration.
Thank you, Dr. Avery. Questions? Thank you, sir.
Thank you.
John Fody.
Thank you, Chair Funfair, Chair Horde, and honorable members of the Finance Committee of the Connecticut General Assembly. My name is John Fody, and I'm a national advocate with Americans for Tax Fairness, and I am also a former resident of Waterbury, Connecticut, where my late grandfather, Carmen Fody, a first-generation Italian-American, was a small business owner and staple of his community as the owner and operator of what used to be Fody's Market on Walnut Street in the city. Americans for Tax Fairness strongly supports Connecticut for All stand-ups CT Fair Share policies. At the federal level, H.R. 1, also known as the One Big Beautiful Bill Act, enacted a new suite of expensive tax breaks that go overwhelmingly to the ultra-wealthy, billionaires and big corporations, while increasing the federal debt by nearly $5 trillion over the next 10 years. We also know that over the last year, billionaires in America have gotten $1.5 trillion richer under the first term or under the first year of the Trump administration. And in an attempt to lessen the fiscal impact on paper, Congress chose to cut over $1 trillion from Medicaid and allow the ACA premium tax credits to expire while also cutting the SNAP program by $187 billion. Congress essentially padded its balance sheet by shifting costs onto states like Connecticut and forcing them to foot the bill for burdensome new paperwork requirements designed to restrict access to these critical programs from families who would otherwise be eligible, knowing full well that many states would not be able to cover the new costs that were previously supported by the federal government. Collectively, these policies and actions by the Trump administration represent the most radical transfer of wealth from low and middle income families to wealthy households in American history. When combining the effects of OBBA and tariffs, the only Americans who come out with more income or wealth than previously are those earning more than $500,000 annually. All other Americans not only lose income through higher costs, but those who are making $200,000 or less could expect to see their costs rise anywhere from $300 annually to possibly $2,700. Fortunately, Connecticut lawmakers have the necessary tools at their disposal to ensure the state's wealthiest residents are able to pay their fair share. Legislative proposals such as HB 5133, HB 5081, HB 5183, as well as HB 5139 and others like them are viable legislative proposals that would make Connecticut's tax code fairer while also raising the revenue necessary to support low and middle income families. There is strong precedent for states taking bold action to make their tax code fairer while raising significant revenue. In 2022, Massachusetts adopted a fair share amendment, also known as the millionaire's tax. The fair share amendment not only vastly exceeded expectations, generating $1.3 billion of surplus money in the first year, but bad faith arguments against the policy have all but withered away. For example, many claimed that millionaires would flee the state, yet research from State Revenue Alliance and the Institute for Policy Studies showed not only did rich people not pick up and leave, but in fact, millionaire wealth skyrocketed, as did the collective wealth of millionaires in Massachusetts. There is also growing consensus among Americans and voters that taxing the ultra wealthy is popular from everyone from all political persuasions. Polling from Families Over Billionaires
You have
shows
reached
that
3 minutes. If you could please summarize.
Sure. The Connecticut General Assembly has the opportunity to enact these proposals in order to fill the gap created by the Trump administration in this current Congress, and that would be a future catalyst for future Congresses to fix the problems that this current administration and Congress have created.
Thank you, Mr. Foti. Questions? Thank you, sir. Nathan Wollaston.
Hello, good afternoon. My name is Nathan Wollaston. I'm a member of the Windsor Board of Education. I am also a member of the statewide coalition, CT for All. I am here today to speak out in support of House Bill 5187, the bill that is focusing on the adjustments that we believe we need to see in the fiscal guardrails. Just to not get too much in the weeds and put it very simply, we just have a belief that we need more opportunity in our state to create. Sorry, it's my first time being online, but we need more opportunity in our state to be able to adjust these guardrails and get the money that we need back into our district. So we're looking really to just raise this before you today as another point, as many people have spoken today, just, to help us with what we need as far as our needs. It's been mentioned so many times in Windsor, our net cost of town in 2019 was $57 million. And in 2026, we're proposing a budget of $81 million. And the amount of money that we've been getting in ECS funding has been flat funded at $11.5 million. We really have to figure out how we are having these guardrails and what we can do, because if we tax the rich, if we create all this extra tax and we have no rule that says we can use all this excess money that we're making, it doesn't really do us much benefit. So again, my name is Nathan Wollaston. I appreciate you guys for having me here, and please, please, please help us out, because the local level needs as much help as we could get. Thank you.
Nathan, you did a great job. And we appreciate you taking the time to testify here today before the committee. Questions? Seeing none. Thanks, sir. Loretta Waldman.
Good afternoon, Senator Fonfara and members of the Finance Committee. My name is Loretta Waldman, and I live in West Hartford. And I'm a member of Indivisible Connecticut, a grassroots nonprofit pro-democracy organization. My chapter is one of many in the state, proud to be a part of the Connecticut for All Coalition. And I'm here today to support House Bills number 5187, 5133, and Senate Bills number 101, 103, and 104, a package collectively known as the Connecticut for All Fair Share Policies. This is my first time, this is the first time I've submitted testimony, so I'm a little nervous, bear with me. As a freelance writer, I would prefer to be at home working to earn a living. In less urgent times, I would be, but this is not the time to stay at home. My life, the lives of my neighbors and those of working people across the state are being upended, even attacked by a president intent on making himself, corporations and his billionaire friends richer. And they are doing this by stealing money from programs we rely on to live stable, healthy, productive lives. That's unfair, it's unwise, and unacceptable. HR 1, Trump's monstrous budget bill, siphoned $1 trillion in funding previously approved and allocated by Congress from programs Americans need for food, basic preventive health care, mental health services, and much more. It stole money from public schools, public libraries, national parks, veteran services, medical research, our universities, art institutions, and so much more. And it did this to fund ICE, whose masked, poorly trained agents are terrorizing our neighborhoods, killing immigrants and American citizens alike, while ignoring the Constitution and trampling our civil rights. I feel fortunate to live in Connecticut, a state where equal opportunity is valued and the programs that support opportunity are fairly funded, if not always to the degree we would like. Our state is recognized as a leader on that front, and to meet this unprecedented moment, we need to lead again. The 5 bills under consideration by the committee would tap existing state funds and generate new revenue needed to offset the cuts to SNAP, Medicaid, and other essential programs for working people. It would ensure our public schools, libraries, and myriad state and municipal services are able to deliver the services we rely on to learn, advance our skills, and contribute to our communities, our state economy, and our country. A thriving working class is what makes America great. Okay. These bills, if passed, would raise the revenue necessary to meet the needs of hundreds of thousands of people in Connecticut in an equitable and sustainable manner. They offer common sense, out-of-the-box solutions to a crisis none of us asked for, and that is disproportionately hurting residents who can least afford it. But be clear, if we generate this new revenue to supplement funds to cuts
You've
to
reached 3 minutes. If you could please summarize.
government, okay. I strongly support Connecticut for All's stand-up fair share policy, and I hope you will join me in making Connecticut tax system work for all of us. Thank you very much for your time.
Thank you, Ms. Waldman. Questions? You did great.
Thank you.
Thank you. Francesca Velasquez. Dara Martin.
I'm sorry, did you say Dyra Marin?
Yes,
Great,
I
I'm right here.
apologize. You look like
You are okay. Give me 1 second. You can hear me all right, right?
yes.
Okay. Dear members of the Finance Committee of Connecticut General Assembly, my name is Dyra Marin and I live in Stratford, Connecticut. I am the youth power strategist at Make the Road Connecticut and a part of Connecticut for All Stand-Up Coalition. I support Connecticut for All Stand-Up Connecticut Fair Share policies. Being the youth power strategist in Bridgeport, working one-on-one with the youth has opened my eyes to the reality and concerns that many low-income, working-class, immigrant, Black and brown families face on a daily basis. Fear of separation, loss of income, lack of direct school services that benefit the community, to name a few. These concerns have all been amplified by the lack of support from the current federal administration and state and local governments. There's nothing fair about a tax system where millionaires pay less in taxes than the nurses, teachers, and other working people who are already overburdened with the rising cost of groceries, rent, and daily expenses. When you cut funding or never provided it to begin with, youth in the state are unable to get the assistance they need with the new grueling reality we are all facing. This impact can be felt around the state. Youth in Bridgeport have seen their schools remove teachers and guidance counselors due to budget cuts and are impacted as the teachers are stretched even thinner, leading to students feeling less supported. A youth member in particular has increased mental health concerns after their counselor was fired due to budget cuts. Is that what we want? No. We do not want to alienate an already vulnerable community to continue to feel the effects of budget cuts. We want solutions. Funding all our school districts to the same level that the higher income areas have will benefit the outcomes of the students and their families greatly. Since the COVID-19 funds have dried up, there has been no additional support or financial guardrails set to mitigate students, teachers, and the community from feeling the impact of the lack of funding. A 2024 Harvard report showed the increase in federal funding during COVID-19 increased test scores in math and reading. If we as a state have the money to provide for our youth and choose not to do it We are causing a whole generation of students and large low-income communities to have lower test scores, lower school completion rates, and higher chronic absenteeism rates by choice. But today, you have a choice to adjust the fiscal guardrails, increase the highest marginal rate of personal income tax, establish statewide property tax on certain residential real estate properties, establish refundable child tax credit, and capital gain surcharge to protect the communities that we were elected to protect. This will benefit the youth to feel protected in their community and lead to a better performance academically and improve mental and physical health concerns. Raising revenue is necessary to meet the needs of hundreds of thousands of people in Connecticut in an equitable and sustainable manner. If we seek to replace some of the federal investments with this new revenue source, we must be able to spend it. We must reform the fiscal guardrails in order to respond to the attacks to our safety net from the federal administration. I strongly support Connecticut for All, Stand Up Connecticut fair share policies, and hope that you will join us in making Connecticut's tax system more fair. Thank you for your time. Dyer Marin, Stratford, Connecticut.
I said we loved your background. It's very inspiring. Thank you. Any questions for Dyra? Thanks very much.
Thank you.
Emily McAvoy.
Thank you. Good afternoon, members of the Finance Committee. My name is Emily McAvoy, and I'm a resident of Middletown. I'm a young working person and an active participant in local politics in my city. I'm a member of Connecticut for All. I'm before you today to speak in strong support of Connecticut for All Stand Up Fair Share policies, HB 5187, HB 5133, SB 101, SB 103, and SB 104. Tragically, I see the state I grew up in and love as a place where only the wealthy can enjoy life and make enough meaning to stay here. It's about time we caught up to neighboring states' highest marginal tax rate. You've seen and heard evidence the wealthy will not simply leave, and this is not a recipe for slowed economic growth. What is? 39% of current residents unable to afford their basic necessities, never mind invest and innovate in their home state and economy. Our city officials in Middletown work as hard as they can, and I'm tired of seeing them take the hit for a backward structure that overburdens working, disabled, and elderly people through property taxes. I'm tired of seeing my mother, a longtime recipient of Social Security disability, harm her health by going back to work to afford to hold onto a home as her one asset. In regard to our fiscal guardrails, year after year you see us trying to move mountains to make up for decades of underfunding in the fight for proper public services. Let us spend our money, and please take the burden of a century of fiscal mismanagement off of my back. I am saddened that wealth speaks so loudly that, despite our democratic trifecta, those of us who want change see our long-term solution as one where we transform the legislature. The vast majority of your constituents are not the ones who've easily stepped into wealth, who don't need to work to survive. And the days where you can be born into the working class and hard work, a good degree, and fiscal discipline could someday make you subject to the mansion tax or capital gain surcharge are disappearing, especially when we're not investing in education and the type of development that could truly bring high-paying jobs here. Would we really rather the status quo of people going hungry, public services failing, than minorly offend someone with a small dip into a large investment portfolio? We plead for a policy solution. Please don't only pass these bills out of committee, but use your political will and capital to fight to get them over the finish line this year. Connecticut not only has the ability, but the moral obligation to make up for the impacts of the One Big Beautiful Bill Act. Thank you for your time.
Thank you, Emily. Questions for Ms. McAvoy? Thank you. Grace Easterly.
Hello. Hello. Thank you and good afternoon, members of the Finance Committee. My name is Grace Easterly and I live in Willimantic, Connecticut. I'm the president of the UConn Graduate Employee and Postdoc Union, GEU UAW Local 6950, and part of the Connecticut for All Coalition. I support Connecticut for All's fair share policies. As president of our union, I've had the opportunity to learn about the incredible contributions that our 2,400 graduate employee and postdoc members make to our state, from researching climate change and diseases to teaching Connecticut students to making art and music that enriches all of our lives. Our labor drives UConn's $8.7 billion of economic contributions across the state, or or $1.84 of economic output for every $1 of state spending. Yet our vital contributions are facing cuts at the federal level and at the state level, and it's all of Connecticut that pays the price. Our members, residents of Connecticut, are trapped between budget cuts at work and the rising cost of living at home. In a survey last spring, over 70% of our members said that they had worried about affording food, 72% said they'd worried about affording transportation, and 82% said they worried about affording rent. Compounded by unprecedented federal attacks on higher education and immigrants, our members are feeling unstable and unsafe. But Connecticut's elected leaders can support us and protect our state's future. We're proposing today that no one in Connecticut should ever have to worry about affording food, rent, or their loan payment. We're proposing that Connecticut step up to support Connecticut students and public higher education by raising revenue and spending it on the public good so that everyone can live better. I strongly support Connecticut for All's stand-up CT fair share policies and hope that you will join us in making Connecticut's tax system more fair and our state a place where everyone can thrive. Thank you.
Thank you, Grace. Questions? Seeing none, thank you. Craig Parker?
Good afternoon. Can you all hear me?
Yes, we can.
All right, thank you. My name is Craig Parker, and I'm from New London, Connecticut. I'm the Education Justice Youth Organizer at Hearing Youth Voices in New London, and I'm a part of the Connecticut for All Coalition. So I'm here today to support the Connecticut for All Stand Up for CT Fair Share policies. The extreme inequality in Connecticut is glaring, right? We all know it's no secret. Some of the most stark economic inequality in the nation influences further inequities in every other realm of life, whether it be education, criminal justice, healthcare, or most gravely, life expectancy. Growing up in New London, it was always apparent that there are two Connecticut's. An unjust tax system has shaped my life and my community, limiting opportunities, supports, and resources. Between underfunded schools and everything that comes with that, limited recreational activities and third spaces, lack of access to necessary mental health supports, or simply an unfair economic burden on working class people amidst a cost of living crisis, the impacts of what is lacking compound exponentially, leading to preventable harm. This isn't a matter of lack of talent, pride, or passion in my city. New London is full of great people providing services, support, and inspiration to our community. This is a matter of a lack of funding flowing through New London and every other city in the state where there are enough resources for every need to be met if shared properly. Since 2020, Hearing Youth Voices has led the People's Budget Coalition, which advocates for an equitable municipal budget, such as proper funding for public works, human services, and education. Throughout our time saving critical positions slated to be cut, it is abundantly clear funds in New London are not necessarily mismanaged. There simply isn't enough to go around. In a 5 square mile city where nearly half of the land is untaxable, New London will continue to be underfunded and underserviced without proper state intervention. New London Public Schools was recently a member of the state's Commissioners Network, which provided our schools with an additional $1.4 million the past 5 years, up until our membership ends this year. This money enabled the hiring of positions focused on student wellness, mental health, and behavioral support, which yielded better results across the board, especially because it provided alternatives to exclusionary discipline. As someone who worked in one of those positions, I can speak to the changes in school climate and culture at Benny Dover Jackson Middle School and New London High School. Simply put, more funding changed students, parents, and teachers' lives for the better. We have an opportunity to address several issues around the state through HB 5187, HB 5133, SB 101, and SB 104. Amidst continuous federal cuts, our state has a responsibility to its people. People are safer when communities are properly housed, fed, educated, and sustained. It's time for our state to thrive instead of forcing so many people to simply survive. Thank you for your time and your commitment.
Thank you, Craig. Questions for Mr. Parker? Seeing none, thank you, sir. Jim Jinks?
Good afternoon to the chair. Good afternoon to the committee members. My name is Jim Jenks. I'm currently serving on fourth term in the town council in Cheshire. So this year will be my 7th municipal budget season. Experience doesn't make the process much easier each year. In recent years, rapidly increasing cost drivers such as health insurance, liability insurance, energy, and other costs are making it very difficult to fund basic services and education. To offer one example, just 3 years ago, our projected run rate for health medical claims was about $800,000 a month for the education side. This year, it's going to be about 1.2 million per month. So that's an increase of about 50% over the last 3 years, $4.8 million per year to be exact. Medical costs and inflation and other line items are crowding out our ability to educate our kids in our town. In Cheshire, like in most other towns, we're simply trying to keep up with providing necessary and mandated services. We're not adding staff. Every year, we skinny the budget as much as possible to keep mill rate increases to a bare minimum. But year over year, mill rate increases are still accelerating despite steady grand list growth. Fiscal year 24-25, we had a mill rate increase of about 4%. This past year, we had an increase of about 8%. That's 12% over just 2 years just to maintain services. This is not sustainable. We enjoy a AAA credit rating. We have strong financial management, and we're careful and responsible with taxpayer resources. We run a small surplus each year. We have a council mandate to maintain at least 10% in our rainy day fund, so we have fiscal guardrails. We project revenues conservatively and budget conservatively. The budget challenges we're facing are simply not of our own making. I think most municipalities would agree we need your help. We need more state funding for schools, for roads, emergency services, capital projects, youth and adult mental health services, water treatment and pollution control, waste management, and more. The current situation, rising property tax rates, along with declining municipal services and a flat funding from the state, is unsustainable and unfair to local property taxpayers. I support a more progressive tax structure in Connecticut because on the current path, municipalities will be forced to make some terrible choices. They'll have to significantly increase class sizes, they'll have to cut youth counseling services, eliminate transportation services for seniors, cut summer camps, reduce library hours, to name just a few of the choices ahead. I support a more progressive tax structure because our residents deserve it, and sooner or later, they're going to demand it. Our middle and low-income families and residents shouldn't go without necessary services or keep paying more while getting less, especially when the wealthiest of wealthy residents can be asked to do more. For all the reasons stated herein, I ask the legislature to move forward with the following proposed bills: SB number 101, SB number 104, HB number 5133, and HB number 5187. Thank you very much. I appreciate the opportunity to speak to you today.
Thank you, Mr. Jenks. Questions? Thank you very much.
I'd also just say hello to Rep. Mashinsky and congratulations on your retirement and good luck.
And Yeda Martinez.
Thank you, Senator Fonfara. Good afternoon, Senator Fonfara, Representative Horn, and distinguished members of the Finance Committee. My name is Anita Martinez. I proudly serve as a city councilwoman in Bridgeport. I am here in strong support of HB 5187, HB 5133, SB 101, SB 103, and SB 104. The Connecticut for All stands up Connecticut Fair Share policies. Bridgeport is located in Fairfield County, the wealthiest county in our state, yet our residents do not experience that wealth. Our working families are struggling to afford groceries, rent, childcare, and health care. Our schools, infrastructure, and public service remain underfunded despite the immense resources that surround us. The inequities are stark. Corporations are despite are reporting record profits, and billionaires often pay a lower effective tax rate than teachers, nurses, and municipal workers. The system is rigged, and communities like Bridgeport are paying the price. The needs in my community are significant. We need fully funded public education so that every child, regardless of zip code, has access to smaller class sizes, mental health supports, and modern facilities. We need affordable housing investments to stabilize families facing rising rents. We need expanded childcare and healthcare access so parents can remain in the workplace. Yet, year after year, we are told that the fiscal guardrails prevent meaningful investment. While fiscal responsibilities is important, it cannot come at the expense of working families. HB 5187 would responsibly adjust those guardrails to allow the state to respond to urgent needs, particularly during times of federal instability and harmful cuts. SB 101, establishing a statewide property tax on high-value residential properties, also known as mansion tax, and is a critical step toward fairness. Increasing taxes on the highest value residential properties in our state would capture revenue for essential public programs while improving equity in our tax code. Far too often, our tax structure fails to adequately tax accumulated wealth and high-value properties owned by those most able to contribute. Bridgeport would directly benefit from a fair system that asks more of those at the very top so our cities and towns can fund schools, public safety, infrastructure, and social service. HB 5133 and SB 104, which increase the highest margin income tax rate and establish a capital gain surcharge, ensuring the extraordinary wealth, not wages, contributes more to the common good. Meanwhile, SB 103 establishes a refundable child tax credit, would provide immediate relief to middle and working class families struggling with the rising cost of living. The credit would mean groceries on the table, stability in housing, and opportunity for children across our state. In this political moment, our state government has a moral and economic obligation to provide stability and leadership. As federal policies create uncertainty and harmful funding cuts, Connecticut must step up. We cannot build a resilient economy by squeezing working families while shielding extremely wealth. Progressive tax policies are
You've
not.
reached 2 minutes. If you could please summarize.
Yes, please. Thank you. Bridgeport does not want special treatment. We want equitable treatment. We want a tax system that reflects our values and investment in our people. Passing these bills will move us towards a Connecticut where prosperity is shared and where every child, family, and municipality has a fair, strong shot. I strongly support Connecticut for All, Stand Up Connecticut Fair, share policy, and hope that you will join in making Connecticut tax system fairly. Respectfully and thankful, Anita Martinez. Thank you so much.
Thank you, Ms. Martinez. Questions for Anita? Seeing none, thank you. Amy Brzezowski?
Dear members of Finance Committee of the Connecticut General Assembly, my name is Amy Brzezowski and I live in Meriden, Connecticut. I'm a high school English teacher, member of New Haven Federation of Teachers, and part of the Connecticut for All Coalition. I'm here to demonstrate my support for the Connecticut for All Stand Up Connecticut Fair Share policies. As a lifelong resident of Connecticut, I have been fortunate to personally benefit from state programs. As a child, while my mother worked part-time as a public school teacher and my father worked full-time making just above minimum wage, my family of 7 was able to make ends meet with the assistance of Husky Insurance and SNAP. While attending a Title I school district, my educational experience was enriched by state-funded library programs, gifted and talented programs, summer program, scholarships, and early experience college courses. Thanks to state funding, I was able to begin my first year of college as a sophomore. Access to state-funded educational and municipal programs provided me with a foundation that has greatly impacted where I am even to this day. However, nearly 13 years after the last update to the ECS formula, in my high school graduation, as well as a decade working in public schools, I struggled to make mortgage payments on the very same home I grew up in. As a high school English teacher in New Haven, I have a wider perspective on the state funding requirements for CT's Youth to Thrive. With a student body where 75% of the students receive free or reduced lunch, 29% have disabilities, 12% are multilingual learners, I see the daily impact fiscal cuts have on the well-being of our teens and young adults. Our young people can tell when they are cared for, and current crumbling school buildings, rapid teacher turnover, and under-resourced mental health services demonstrate a clear undervaluation of their future potential. As the state considers making more than $1 trillion in cuts to SNAP, healthcare benefits, housing support programs, and mental health support, I urge you to consider the impact that these withdrawals will have on the future of our state. As we work towards a healthier, more equitable state, we must acknowledge that communities need to thrive. We need strong public schools and universities, a robust, affordable childcare system, quality and affordable healthcare, lower rents, and good housing options. This makes our economy better and businesses thrive in the environment for all Connecticut citizens. As one of the wealthiest states in the country, with the potential to increase our state revenue through taxing the ultra-rich, establishing a mansion tax, increasing capital gains taxes, there is no reason for the further perpetuation of the educational and opportunity gap in our state. If we seek to replace some of the federal investments with new revenue source, we must be able to spend it. We must reform the fiscal guardrails in order to respond to the attacks to our safety net from federal administration. We strongly urge you to support Connecticut for All stand-up CT fair share policies and hope that you will be joining us in making CT's tax system more fair. Thank you for your time.
Thank you for yours. Questions for Ms. Brzezowski? Thank you. Colina Sasenker. Meryl Gay. You don't look like Meryl Gay. Ah. Thank you. So you have 1 minute.
I think it's 90 seconds, to be fair. So thank you very much for allowing us to speak with you today. Senator Fonfara.
Please make sure you introduce yourself, both of you. Yeah.
Thank you. I am Lisa Tepper Bates, and I am the president and CEO of United Way of Connecticut, speaking on a panel with Meryl Gay. Just want to thank you for the opportunity to be here today to testify in support of SB 103 on behalf of not only the United Way, but the 60 plus members of our coalition that stands in favor of a permanent refundable child tax credit for Connecticut. We thank you, all of you, for your support for the $250 family boost to the EITC. However, as you already heard today from Senator Looney, there are actually 355,000 families with children who do not benefit from the EITC. As Senator Looney remarked, there is an income threshold that is fairly modest for those who are eligible for the EITC. I want to underscore to you that a permanent and refundable child tax credit recognizes a single and powerful truth that 95% of children in our state live in a household with at least one working adult. So why is that important? It's important because we face a workforce crisis in Connecticut. We need more of our young people of working age to stay here. We need to draw more of them here to work and live. And a child tax credit will do that. Simply put, when you invest in our families with children, you invest in our workforce. So please bear that in mind. I'd like to go to our colleague, Molly Markowitz, who's up in the sky somewhere. Molly?
Yes. Thank you so much to the Finance and Revenue Committee today for the opportunity to speak. My name is Dr. Molly Markowitz, and I'm a pediatrician who practices in New Haven, and I represent the Connecticut American Academy of Pediatrics chapter, which represents over 600 pediatricians from across our state. And I wanted to speak in strong support of Senate Bill 103 today. As a pediatrician, every day I see how poverty negatively impacts child health. Families have harder time with stable housing, nutritious food, accessing healthcare, quality early education. We know that economic hardship is linked to chronic diseases such as asthma and obesity and behavioral and developmental challenges and academic achievement. Research has actually shown that families' income is associated with higher birth weights, lower maternal depression, improved nutrition, and improved early brain development, which is so important for children, leading to better long-term educational outcomes, and of course, impact on contributions to society through employment. In fact, the clinic that I work in recognizes that tax credits are so important for health that we actually have a VITA program in our clinic where families can do their taxes for free, recognizing that this is such a powerful anti-poverty tool. And this is actually a part of a national movement where places from or health institutions across the United States are recognizing the health benefits of tax credits. So on behalf of the Connecticut AAP and the families and children we serve, I would strongly urge you to support Senate Bill 103, and I'd be happy to answer any questions. Thank you.
And I'm Merrill Gay from the Connecticut Early Childhood Alliance. Our 80 member organizations are acutely aware of the pinch that families are finding themselves in, squeezed between higher costs for rent, for childcare, for groceries, etc. Families with young children, well, families are at their lowest net worth in the first 5 years after the birth of a child. And this is a group of folks who are particularly in need of some tax relief. Right now, we fall well below what our surrounding states do for families. We have the earned income tax credit, but all of the other states around us have higher deduction or higher tax credits for children than we do. So I would just like to urge you to pass Senate Bill 103 and provide some relief for families who are really feeling the pinch right now.
And all three of us are here if you have questions.
Thank you. Are there questions? Representative Mashinsky.
Thank you, Mr. Chairman. I wanted to ask if you had a chart on the comparing us to the other states, and will you hand that in with your testimony?
We will do that, and thank you for asking, Representative Mushinski. New York offers $1,000 per child starting this year. Maine, $600. New Jersey is up to $1,000. Massachusetts, $440. Vermont is also $1,000. And Rhode Island has proposed, starting in 2027, a refundable tax credit of $325 per child.
Thank you.
As one employer has noted, at least to me in conversation, Connecticut is at a disadvantage compared to these other states because we don't offer a child tax credit to families looking at these different labor markets.
Thank you.
Representative Constantine.
Thank you, Mr. Chair. Hi, how are you? Would you be able to explain, do you have a preference between a tax credit or a rebate? Pros and cons of each one and which ones you think works better, delivers money faster?
I think that depends on how you would define a rebate. In the past, that was not optimal, frankly, because the rebate that we offered as a state, which had more than 80% of eligible families apply for it, did require that extra step of applying. There were some issues about providing the application in a second language. There were a lot of reasons that that was not the preferable process. But frankly, at the time, it was my understanding the Department of Revenue Services worked very hard with us to make that work and to get the word out. They did not have the infrastructure at that juncture in time, which I think that was 2022, to do a child-based rebate on taxes for the state level. It's my understanding now they can do that, which means that families file their taxes, that tax credit or refund would come back to them just as part of the tax process. We believe that that's preferable. That's the way it works at the federal level. So that would make the most sense and actually would would carry with it no additional administrative costs because again, it's part of the tax filing process.
Thank you.
Anyone else? Thank you. Tim Ackert. Caitlin Gelfin.
Caitlin needs to approve.
There we go. I did it. All right.
Sort of. There you go.
There we go. Okay.
I am Caitlin Gelfand. I live in Southington with my partner and our 2 children. I have been an early childhood educator for 15 years, most of which I have spent working in nonprofit settings, such as the Head Start classroom I am currently in, right here in Bristol. The only years that I worked in for-profit daycare, which, side note, provides less for children, pays employees less, and still costs families about $350 a week on average, were when my oldest was enrolled, because even though we made too much money to qualify for Care for Kids or a Head Start spot, we could not afford daycare tuition without an employee discount. Currently, I pay about $16,000 a year for my youngest to be at a home daycare, and my take-home pay is only $31,000 a year. So that is half my pay. That means my kids go to the dentist regularly, but I don't. And just this week, I had to cancel my upcoming regular OBGYN appointment due to the unexpected expense of a bursting ovarian cyst earlier this month. So I'm going to put that together for you. I cannot have routine follow-up care for a major medical event because I cannot afford it, even though my husband and I both work full-time and we have health insurance. But every day I get to come into my classroom and be reminded that I am still one of the lucky families. I have students whose parents call and make sure they've finished eating school food for the day before they pick up because there might not be enough food at home. I have students who miss school until there is enough money for a trip to the laundromat. I have had students who ask if they can take home the leftover lunch food because they have noticed their parents starting to skip meals. That's 4 and 5-year-old kids already worried about helping their families make ends meet. And contrary to popular belief, these are all families that work. It often feels like legislators think people benefiting from social programs are sitting around with their hands out. But I am here to tell you with authority that that is not the case. My classroom is full and every family has at least one working parent. Most have 2 employed parents and most of them also have grandparents that help out. I can say with certainty that things will not improve for Connecticut families without some major changes, including the state level child tax credit. I know this 100% sure because of what I witnessed when SNAP paused this year. The stress was palpable in the hallways at school, visible on parents' faces at pickup and drop off. The worry and fear of parents was so intense that I started a food pantry in the trunk of my car. I sneak out and I leave meal kits on families' cars, and from my classroom window, I see them get absolutely overwhelmed with relief. Most of them cry. And these families have nothing extra. Connecticut families have nothing extra.
You've reached your time. If you could please summarize.
Just did. Help us.
Thank you, Caitlin. Anyone? Thank you very much. Next up, we have a panel, which they get a gold star for. It is Christopher Cabrera. And Carmen Lanche, as well as there's one more. 108. Catherine Valeda.
Yes, hi, I'm here.
Great. Please proceed.
Thank you. I will kick us off. Good afternoon, chairs and members of the Finance, Revenue, and Bonding Committee. My name is Catherine Villeda, and I'm the Coalition Director of the Husky for Immigrants Coalition. I'm also a steering committee member of Connecticut for All. Thank you for the opportunity to testify on behalf of Husky for Immigrants alongside my colleague Chris and our partner Carmen in support of HB 5187, HB 5133, SB 101, SB 103, and SB 104. Combined, all these measures could provide billions of dollars in much needed relief for people here in our state. Since 2019, we have worked towards extending affordable quality coverage options for income-eligible Connecticut residents, regardless of their immigration status. HR 1 has jeopardized our safety net programs and the financial well-being of working and middle-class residents through federal cuts while providing favorable and inequitable tax cuts to the wealthiest residents and corporations. Without a clear response from our state leaders on how federal cuts will be mitigated, federal policies will push Connecticut into an unprecedented crisis, including a rise to the state's uninsured rate, with over 200,000 residents at risk of losing their healthcare coverage, an outcome our coalition has dedicated itself to reducing since our inception. Our coalition members have felt the ongoing attacks from the federal administration, both related to immigration enforcement and cuts to our safety net programs, and we urge the state to put money into programs that support Connecticut residents and families, even if it requires adjusting the fiscal guardrails, the fiscal controls, and closing state loopholes that favor the ultra-wealthy. I do want to note that in my written testimony, I do provide more details, and I also include a recommendation to ensure that SB 103 is inclusive of families that may use a tax ID number to file taxes. For the committee's consideration. So with that, I yield the floor and I will pass it over to my colleague, Chris.
Dear members of the Finance, Revenue, and Bonding Committee of the Connecticut General Assembly, my name is Christopher Cabrera, and I live in New Haven, Connecticut. I am a youth leader in my community and also serve as the coalition organizer for Husky for Immigrants, and I'm also part of Connecticut for All Coalition, and I strongly support Connecticut for All's stand-up Connecticut Fair Share policies. In my daily work as an organizer, I met with working families at community outreach events across the state, and I see firsthand where our system is breaking down. Right now, one issue consistently dominates the conversation and is crushing cost of living, particularly regarding healthcare and the fear of losing access to basic services. Families are stretched to their absolute limits, forced to make impossible choices between paying the groceries, keeping the lights on, or affording life-saving medical care and insurance premiums. When the federal government is cutting social safety nets and introducing policies that destabilize our communities, the panic that I see on the ground is real and immediate. Connecticut has a moral and economic obligation to step up and serve as a firewall against this chaos. We cannot simply tell working families that our state budget won't allow for fully funded public health programs and affordable housing or community investment where we clearly have the capacity to reform our tax structure and pay for them. Fully funding these critical needs by asking the wealthiest to pay their fair share isn't just about balancing a spreadsheet. It is about providing fundamental stability. When our communities are fully funded, parents can stay in the workforce without the terror of medical death, and our local economy grows because families actually have money to spend. Our state government must step up during this critical time or harmful federal cuts to protect the people who actually keep Connecticut running. Raising revenue is necessary to meet the hundreds of thousands of people in Connecticut in an equally sustainable manner. If we seek to replace some of the federal investments with these new revenue sources, we must be able to spend it. We must reform the fiscal guardrails in order to respond to these attacks to our safety net for the federal administration. And I'll pass it over to Carmen.
Sí, buenas a todos. Soy Carmen Lange, directora de Comunidades Sin Fronteras, y estoy aquí para dar testimonio a favor de que todas estas leyes del Stand Back cambien. Están aumentando los costes, recortando la financiación para la sanidad y la educación y dificultando aún más a las familias trabajadoras de Connecticut y de todo el país. Las familias no pueden permitirse el costo básico de la vida, todo ello porque se les recorta los impuestos a los más ricos. Entonces, los impuestos de la clase trabajadora en comparación con los más ricos es una diferencia muy injusta. Y nosotros vivimos en uno de los estados más ricos del país y más ricos del mundo, pero las familias trabajadoras no pueden permitirse comprar alimentos, pagar el alquiler o acceder a la asistencia sanitaria. Las empresas obtienen beneficios récord y los millonarios pagan menos impuestos que las enfermeras, los profesores y otros trabajadores que ya están sobrecargados en el aumento de estos costes de alimentos, alquiler y gastos diarios. Hoy estoy aquí para que ustedes como políticos que nos representan en el estado de Connecticut hagan la diferencia y dejen ese superávit que tiene el estado de Connecticut el gobernador lo suelte. Que esos fondos sean destinados para vivienda, educación, alimentación, las estampillas de comida, seguro médico. Pensamos que si el Estado de Connecticut no toma la mejor decisión ahora, pues las familias en vez de clase media van a ir a ser homeless y no podemos permitir que nuestra clase trabajadora luche de vivir diariamente y sea injusto de que no pueda subsistir el día a día junto a su familia. Por favor, hagan lo correcto. Gracias.
I'll be translating for Carmen. My name is Carmen Lanche, and I live in Norwalk, Connecticut. I am the director of Comunidades Sin Fronteras, Connecticut, and a member of Connecticut for All Coalition. I support Connecticut for All stand-up Connecticut fair share policies. Costs are rising, funding for health care and education is being cut, and it's becoming even harder for working families in Connecticut and across the country to afford the basic cost of living. Also that the wealthiest in the country can enjoy tax breaks. More families will be pushed into poverty, hunger, and exploitation by bad employers, and people will die for lack of access to healthcare. We live in one of the richest states in the country and one of the richest in the world. Yet, working families cannot afford food, rent, or access to healthcare. Businesses are reaping record profits, and millionaires are paying less in taxes than nurses, teachers, and other workers that are already burdened by rising food costs, rent, and everyday expenses. If our state insists in using billions of dollars in surplus solely to pay down pension debt, we must reclaim money from the wealthiest to ensure families can meet their basic needs such as housing, childcare, healthcare, public education, and food assistance infrastructure. It's a matter of political will. Connecticut must protect our state and provide stability for our families in the face of federal government chaos. Elected leaders must take action and support the Stand Up Connecticut agenda. I strongly support the fair tax sharing policies on Connecticut for All Stand Up Connecticut, and I hope you will join us in making Connecticut tax system fair. Thank you for your time.
Thank you. Questions for the panel? Seeing none. Thank you very much.
Thank you.
Representative Ackert?
Good afternoon. Senator Fonfaro, Senator Miller, Senator Cabrera, Senator Fazio, Representative Horn, Representative Rader, Representative Constantine, and Representative Paletta, and other esteemed members of the Finance, Revenue, and Bonding Committee. My name is Tim Ackert, and I proudly represent the 8th District, which includes Bolton, Columbia, Coventry, Lebanon, and Tolland. Thank you for the opportunity to submit testimony on the following bill in today's public hearing, proposed bill 5060, and that concerning the apprenticeship training tax credit. Very simply, right now we have a very robust manufacturing apprenticeship program. And that apprenticeship program offsets the corporation's investment by $7,500 when that individual completes their apprenticeship. In the trades, it's $4,000. And my goal is to raise that to compare with the manufacturing tax credit, which is very robust and working and to the good ranking chair, Representative Horn had done some research on this, on the apprenticeship tax credit, and nobody's using it. And the reason why nobody is using it is it's only for corporations, not S corps or LLCs. And the majority of contractors out there are S corps and LLCs. So matter of fact, my third job, everybody knows what my first job is. The other one, this one's my paying job. I like to say the contractor. I'm an electrical contractor and I have been for 40 years. And I've been a sponsorship for apprenticeships for over 3 decades. And I actually go on and I talked about this tax credit. And one of the colleagues had applied for it. And so what you do is you submit a letter to the apprenticeship Department of Labor. They sign off on it and say, yes, you completed, you're available for the $4,000 tax credit. They submitted that. They were not a corporation, a C Corp. They deducted it from their taxes, unfortunately. Their accountant did. the Department of Revenue Services said, oh, by the way, you didn't pay enough taxes. You owe us this amount money back that you took the credit for and the penalty and interest, even though they received the credit from the Department of Labor. And so first and foremost, what I'd like to do is at least bring that all corporations, all sponsorships for apprentices to at least get the tax credit of even the 4,000. It'd be wonderful if we raised it to the bar of the manufacturers out there that it's a 7,500. So I go around and I teach continuing education for electricians so that they can keep their license. And I do that on a yearly basis. And I talk about the value.
Time, if you could please summarize.
That we do here. And on that note, that was quick. I'm always on that side and I find out how quick it is, right? But I'm open to
Now you know what it's like.
Any questions? Well, I was way on the 32 or something on the list. So, yeah, so I'm open to any questions. I think one of the things that I hear when I teach contracts, one of the questions I talk about, because we have to tell them about the rules of apprenticeship and what their obligation is. And some of them go, it's too much of a pain to train people. We don't hire apprentices. We want to flip that and say there's a value to hiring the individuals that want to come out of one business into the trades and or come out of high school and get into the trades and have that support by that company. So open to any questions.
Representative Ackert, let us ask a question so you can go off.
Oh, sorry. Go ahead, sir.
Chairperson Horn.
Thank you, Mr. Chair. Nice to see you, Rep. Ackert. Two questions. I will stick to our own limits. First is just the factual question. Is the manufacturing credit of 7,500, is that just for C Corps?
Yes.
Okay. And then I wanted to, in some of the testimony that we got on this, we have one piece of testimony who had some descriptions about being concerns about supervision with apprenticeships and whether or not, this is just one, but I just wondered whether you had any perspective on this, that there was not adequate supervision, they weren't being registered in a timely way, and they weren't getting responses from the Connecticut Apprenticeship Office. Do you have any context on that?
I would love to respond to that. So right now we have the Department of Labor Apprenticeship Program, right? And that oversees the overall apprenticeships in the state of Connecticut. We just did some good work that many know that I've been working on for a long time to open the door for more apprentices, licensed trade apprentices last year. Senate Bill 1124 was passed both unanimously in the House and Senate to allow more apprentices to get into the trades regarding the ratio component. It was a great step in the right direction. The overseeing it, listen, is there bad actors in any business? I imagine there is. Is there bad actors possibly in the trades? Yes. If you actually look at how many registered apprentices there are, we could increase on that because the trades most of the people in trades kind of look like me, unfortunately, and they're aging out. So the opportunity to get more people into the trades is key. Connecticut has one of the most robust and enforced apprenticeships in the country. Many people don't have licenses requirement in states to do the work that I do. You can just become an electrician. We not only have a licensor, we have building inspectors that oversee the work, and they have license inspectors. A license inspector has been an area that I've been trying to increase, and wage inspectors in the state. We could do better at having more people out in the field looking at the bad actors and responding to the quotes. But I don't think there's a lot of, from my understanding from Department of Consumer Protection, there's a lot of reporting of the not being supervised appropriately in the trades.
Thank you. Thank you, Mr. Chair.
Thank you. Representative Claridis Detria.
Thank you, Mr. Chair. Thank you, Representative, for being here today. I know you've tried, is this the second year you've proposed this bill or 10th or?
It's, well, we always talk about, what do they call that? Term limits. And I would love to, talk more about that in terms of, because it took me 8 years to do the apprenticeship ratio bill. So, and thank you for all the support on that. And so, yes, this is an area that it's been probably only about 3 years, I would think, that we noticed the difference and discrepancy between the manufacturer's apprenticeship tax credit and ours. And then we didn't understand when it says, if you read the language, it says, a taxpayer in terms of the corporation rather than specifically which ones they are. So not only do we want to raise the amount, I've been talking with the Carpenters Union, and they're like, this is something that, we really would like to get done because they have a great strong apprenticeship program. And not all of them will qualify for the top amount. It's the person and company or corporation that actually gets them to the license. So that apprentice may leave a job to go to another company, and the one that actually completes it, they may only have them for a year, and that person gets the credit, not the one that doesn't get them to that limit, get them to over the line.
And you truly believe that this will help small businesses acquire more apprentices?
I have been probably an under 10 person company for as long as I've been in it. And I can't tell you how many apprentices actually got their license with my company that I would have been able to even, help either pay them more incentive, more benefits if I had the opportunity to get that person into the trade and get them over by having an ability to get a credit for the work that I've done to help them and the work that they've done to get to their license.
Okay, thank you. And hopefully we can get this one over the finish line for you this year. Thank you, Mr. Chair.
Thank you. Questions? Representative Constantine.
Thank you. Hi, Rep. Packard. How are you?
Great. How are you?
Good. You sound very passionate about this.
If I can get somebody into the trades, get a good paying job, as we know, the articles are out there about how the trades are really now a place to go to get a job and make a way in life. Listen, you might not be a billionaire, but you can make your way in life and pay and take care of your family, because the trades are really what we need right now. And the numbers are staggering. There's hundreds of thousands of people across the country, that are looking to get into trades, and we need them.
Oh, I hear you. So would you have any other recommendations as to what would make this program better, more than expanding it to LLCs? Do you feel enough trades and categories are covered under this program?
You know what? That's a fantastic question. We were just talking about the journalist fellowship area. Rep. Ferrara is really working on that piece, and I think the numbers on that one are a little bit substantially higher. I wanted to talk to Rep. Ferrara. I didn't get a chance to yesterday, but I think that there's areas that, listen, if we have a shortage of any workforce. We've done it in terms of creating apprenticeship program for those in childcare. We've done it for those that are getting involved with teaching. We create these more of an apprenticeship program in different areas, that if we can then say, hey, listen, let's help that company, corporation, whatever, get them into the thing and give them a credit to help them finish, because it takes time and effort and training that you have to take an individual and or a supervisor off to help them to get them where that you want them to be, right? So there's got to be there shouldn't have to be an incentive, but if an incentive helps to fill that void, then I think this is the way to do that.
Wonderful. And I think that was only one question, so I can ask another one. Do you feel the program's too complicated? If an apprentice starts with the hours, figuring it all out?
No. I think that when you get into a licensed trade, that the training component, the proper training component should be the length that's there for it. I don't want to see it shortened. Maybe there's other areas other businesses, other types of jobs, not in the trades. I think you really want to have the supervision component, the amount of hours needed, the amount of schooling needed to get there. So it is an investment. We call it the other 4-year degree in my trade, because it takes 4 years of actual hours on the job and schooling to actually get to the license component. I don't want to see any shortcuts done there.
Great. Thank you.
Representative Rader.
Thank you. Hi, Representative Acker. Good to see you. I have a really quick question for you because it's making me think of other professions like that are kind of interrelated here. Do you find that the investment, through the apprenticeship program and then getting them licensed, are you able to retain those individuals, or because there's such a demand that they kind of shop, you're the one that invested all this time in them and then they leave? We're seeing this happen with like our neighborhood police forces, and fire departments where they're getting poached by other more attractive. Do you see that happening? Not that this would curb us from considering this, but is there a way to attach that investment or that apprenticeship to the sponsoring, licensed electrician somehow?
I think that's a fantastic question. I think that what happens in the trades that I have seen, not usually the apprentice. The apprentice usually gets into the trade, works with that company for the length. Maybe there's a dynamic in the company that doesn't work. That happens in any job. But where I do find it is, and it just happened to me, unfortunately, where I had a young lady working for me. She came from the aerospace world, came into my business. She wanted to do something different. So I said, I'll take a chance on you if you'll take a chance on me. She got her license and got poached. And that's when it happens. But that's fine. I said she went on a different pastures, not greener pastures, but she wanted to try something different. And I think that's fine. But usually it's when they actually get to the finish line that people, once they find out that someone's got a license, all the businesses out there that need people start making phone calls. I got a letter from one of the largest corporations myself. Come work for us. I'm like, wait a minute. I actually have a company, but
So there's really nothing to stop that right now, but it's kind of part of the business, unfortunately.
Yeah. But it's usually not during the apprenticeship component of it. It's usually at the time that they've got their license. So you've already got that investment that you've done the training for, which that's what hurts. I put 4 years into her. She helped me with my company for 4 years, but 2 months after she got her license, she went on.
All right. Well, thank you for that input.
Thank you.
Thank you, Mr. Chair.
Thank you. Further questions? Seeing none. Thank you.
Thank you, Senator. Appreciate it. Thank you all.
Tom Swan.
Good afternoon. I'd like to start by taking a moment to congratulate Representative Mashinsky and thank her for her years of dedication. For those of you that don't know, she came from the Connecticut Citizen Action Group before she was elected state rep. So I wanted to take that moment of a personal privilege. Thank you all. I know you got a long hearing, so I'll try to move quickly. My name's Tom Swan. I'm testifying today on behalf of the 1,000 member families of the Connecticut Citizen Action Group in favor of several proposals before you today. First, I want to start by providing some context, and I will also suggest an amendment of sorts for some of this. Inequality in the U.S. is the greatest since the Gilded Age, and Connecticut's disparity is unfortunately amongst the worst when compared to other states. H.R. 1 makes and will continue to make this problem only worse. It represents the largest transfer of wealth from low and middle income families to the wealthy that there has ever been. And to further make it worse, we have Trump's illegal tariffs that spend about $1,000 a family whack, the estimates say, here in Connecticut. We appreciate the fact that the legislature and the governor have declared the train wreck created by this to be an emergency and responded, even if in a very limited way. Much more needs to be done, and even more will be required as the additional parts of H.R. 1 get implemented. Data Haven points out that people in the top 25% quintile of taxpayers in the state of Connecticut will receive $3.4 billion in tax cuts annually going forward. Let me repeat that. The top 25% will receive $3.4 billion, with the majority of that going to the top 2% of taxpayers in the state of Connecticut from that tax cut. At the same time, HR 1 contains obscene cuts in funding for food, healthcare, education, housing, clean energy, and other areas. Many of these cuts will not happen until after the elections this November. Clearly, the resulting emergency will not end when the fund you created is ended. Therefore, we would propose you amend one of the bills today to let the expiration date of the lift the expiration date of the emergency, provide greater flexibility on what this funding, this pool could be used for.
Your 3 minutes are up. If you could please summarize.
And give the legislature a greater role in determining what would be considered and initiate funding, and finance it by recouping the income tax cuts on the top 25% of people on an ongoing basis, a dedicated pool of funding. The truth of this matter is that this should not be considered a tax increase, since these people will still get more in taxes reduced than what would be collected. Finally, failure to implement a policy recouping this fund while we implement any of these cuts in the state is an endorsement of the Trump budget, and this legislature should soundly reject that budget. I also comment on specific bills, but I'm not going to go over.
Questions for Mr. Swan? Seeing none, thank you. Joshua Caskey.
He's here.
Hello, I am Joshua Caskey. I'm a resident of East Lyme and a college student in New London, Connecticut. I'm a part of the Connecticut for All Coalition, where I support HB 5187, HB 5133, SB 101, SB 103, and SB 104. I would like to share how my community is currently negatively impacted by how funding is unfairly limited by the fiscal guardrails, and how a more progressive tax structure can improve my community. This year, New London Public Schools is faced for the second year in a row flat funding for the schools. That would mean the closure of an entire elementary school, as well as layoffs and other cuts. This is in addition to the cuts made last year, such as the cutting of nurses and crossing guards. In large part, this is due to the way that the public schools are underfunded in the state, where the burden of funding schools is unfairly placed on municipalities who must increase property taxes to simply maintain the same services. The state must increase its ECS and pilot contributions to ensure that our schools are properly funded. However, this is not possible due to available revenue and the fiscal guardrails, which make it impossible. As a student at Connecticut College, without a car, I rely on Southeastern area transit to travel around the New London area. Southern Connecticut may not be thought of as an area where transit is used or needed, but there are thousands of others every day who rely on this service to get to work, or get prescriptions at pharmacy, or make it to critical social services meetings. Even though this is a critical service for the community, it is continually underfunded, making it much harder for people to get where they need to go. One example of this is I was riding the bus to Norwich last week, and I met a person who was waiting in the cold for over an hour for the bus. This is not an uncommon experience, as the buses only come once an hour. Even with that, over the past several years, I've seen more people riding the bus. In some cases, there has been standing room only on the bus, yet due to lack of funding, we have not been able to have the transit system that we deserve. The last example I would like to mention is our unhoused neighbors who are dying because the shelters are full, the warming centers are full. Last year, 197 homeless people died. 9 of them froze to death. Keeping our residents from freezing to death is one of the government's most fundamental duties, I think. Yet it is failing, even though there are billions of dollars in surplus year after year. yet the state continues to artificially restrict how much money can be used.
Your
to
3
save-
minutes are up. If you could please summarize.
Okay, to save our unsheltered neighbors. The state has the wealth to help these people, yet it is restricted from fulfilling the state's obligations as a result of the fiscal guardrails and unfair tax structure. This is especially apparent as the federal government is cutting more resources from the most vulnerable. I strongly support the Connecticut for All Stand Up Connecticut Fair Share policies and urge you to make Connecticut's tax system more equitable and more fair. Thank you for your time.
Thank you. Questions for Mr. Caskey? Thank you, sir.
Have a nice day.
You too. Alice Simmel?
Hello, dear members of the Finance Committee. My name is Alice Simmel and I live in Prospect, Connecticut. I'm a member of the Four Cs Union, Working Families Party, and part of the Connecticut for All Coalition. I support Connecticut for All Stand Up Connecticut Fair Share policies to make Connecticut's tax system more equitable. I've worked as an advisor at CT State Naugatuck Valley since 2022. I've seen the shift of public funds and the consequences of poor leadership and how that directly impacts students, from cutting tutoring hours, not hiring full-time faculty, and now the reduction in the proposed finish line funding. The recent media attention regarding the spending of executive leadership of the CSCUs has painted the system as irresponsible, yet this is not the case. Everyday students, faculty, and staff show up to advise, support, teach, motivate, and work to better themselves, not only for themselves, but for their families and their communities. Without CT State and SCSU, I would not have the confidence to testify today. Accessible and affordable education offers students social mobility, a chance to become leaders in their communities, and an ability at becoming financially secure. The majority of students I work with are juggling schoolwork, employment, caring for their family members, and facing real-life consequences of a chaotic federal government. Our state government owes it to our students and working families to show up and make up for the cuts that are directly impacting them. The Trump administration has made its agenda clear: benefit billionaires and corporations no matter the cost to working families across the nation. This is unacceptable and our state has a role to play. Wealth and income inequality is well researched and well documented in Connecticut, and it's time to change the policies to support working families. Raising children and buying a home should not be a pipe dream. We live in one of the richest states, yet working families can't afford groceries, rent, or health care. Corporations bring in record profits and billionaires pay less in taxes than teachers. Instead of questioning an unhoused person who can't afford rent, we should be looking down at the millionaires and billionaires who are never satisfied and continue to rake in more and more at the expense of the middle class. Our unwillingness to fix our tax system and fiscal controls places far too much responsibility for funding the things we care about, such as schools, healthcare, housing, childcare, on working families, small businesses, and municipalities. While working class people struggle to prioritize their needs, like putting groceries on the table or choosing between taking classes, working more hours, or going to the doctor, the ultra wealthy are spending their money on more wants like vacations and additional housing. Raising taxes on the ultra wealthy may mean they have to wait to build their gazebos, but working families deserve to thrive, and the only way to change that is through tax fairness. Raising revenue is necessary to meet the needs of people in Connecticut in an equitable and sustainable manner. If we seek to replace some of the federal investments with this new revenue source, we must be able to spend it. We must reform the fiscal guardrails in order to respond to the attacks to our safety net from the federal administration. I strongly support Connecticut for All Stand Up Connecticut Fair Share policies, and I hope you will join us in making Connecticut's tax system more fair. Thank you for your time and leadership.
Thank you. Questions for Ms. Simmel? Thank you very much.
Thank you.
Drew Michael McQueenie. Is it Drew or is it Michael?
Drew. I know it gets confusing. I'm very excited because this is the first time I'm testifying in front of a different committee because I always bug the education committee, but I'm actually really excited that you're allowing me to hear my thoughts on HB 5187, which I'm in full support for, and SB 103, which I'm in full support for. I did submit more detailed written testimony, but I just want to speak quickly about SB 103. Again, my name is Drew McQueenie, and I'm an assistant professor of early childhood and the program chairperson over at CT State Community College, Norwalk. And I was a former classroom teacher, public school of special education, infants and toddlers. So I know very well that this is going to be huge for the state. And the reason why is because first, it'll benefit the economy. According to a 2023-2024 study from the Brookings Institute, for every dollar of a child tax credit a family receives, that's between $1.25 and $1.38 being returned to the economy. You all know better than anybody that basic economics tells us that in order for an economy to be stimulated, a human being has to spend money, and the only way that someone can spend money if they have money. I'm a single father of 2 girls. I have sole custody of them, and I and other single parent households, we would be eligible for the tax credit. We would be spending the money on expenses that we need to raise our children, such as childcare, among others. So we are part of that whole coalition to help stimulate the state economy, which is why I believe this bill would be wonderful. Additionally, in the 2025 Alice report, 40% of Connecticut families are struggling to make ends meet. So what's even interesting is that, one, we know we're the wealthiest state in the United States. And also, I'm a full-time state employee and I'm still struggling to make ends meet. So I believe this bill is going to mitigate that financial hardship for people that are in my situation. I do think we can pair the credit with grants for childcare providers and incentives to childcare providers for quality improvement. So this way, the tax credit can also address the root causes of high childcare costs rather than the tax credit functioning alone. And that will also reassure people that the state is being held accountable. I'm not an economics or finance expert in any means. I'm an expert in early childhood. So I just hope you can consult with the right minds to make this bill work for single parent households like myself. I just want to be able to provide for my 2 girls and, not have to financially struggle. So I think this bill will help single parent households like mine so much. And I really appreciate you putting this forth and allowing the conversation to grow about this. I think I'm really happy that I was able to share with you a little bit of what's going on in my world kind of thing. I'm happy to answer any questions you have. Thank you again. I really appreciate it.
Representative Paletta.
Thank you. We've heard a number of proposals that dealt with tax credits, giving back money. The governor had a plan for a $200 check going to just about every Connecticut resident that made, I think it's $100,000 or less. There's the child tax credit, which again is another check that would be going out to folks like yourself. There were some proposals in the building that had to do with deductions for workers that basically are the working poor, people that pay taxes but might be in a situation like yourself where they could take a deduction, let's just say a child tax deduction. Would you be in favor of a proposal like that, or do you think that the handout checks are the better way to go, like the $200 that the governor's offering or the child tax credit? What do you think would be the better scenario, and why?
Yeah, I would not complain about either one. I would be okay. I would be okay with either one. I think the biggest thing I could probably mention about is that as long as it can help, no matter what is proposed or no matter what comes to fruition, I think as long as, I don't have as much of a burden. So however we get to that, I'm totally open-minded about what we need to do. Yeah. So thank you for the question.
No, that helps, because I think there's been a lot of talk about, give backs or checks, rebate checks and whatnot. And, they sound great. It's been floated at the federal government. It's been floated here in Connecticut. And, it's kind of nice to dangle a check and tell people, hey, I'm going to give you, so much money. But at the end of the day, I think what we're looking for is more broad-based tax relief in the long term.
Absolutely.
Because a one-time supplement is great, but something that families, people like yourself, could count on every year, I think is more realistic than a one-time credit or check. That's my opinion. Folks
I
may
agree.
disagree with me, but I'd like some predictability in something long-term as opposed to a one-time payout. Thank you.
I agree. I agree.
Representative Farrar.
Thank you, Mr. Chair. Thank you so much for being here. I know it's a lot to come in person and we really appreciate it. Just following up on, you speaking to the need for, a permanent refundable child tax credit that would be a annual child tax credit that you could count on. And the way this bill is structured is it's a phase-in, but after 3 years, you could count on $600 back as a child tax credit. I'm curious for you, if you had that $600 per child in your household, how would it be used to make a difference with your budget?
Yeah, so how it would be used, I have to make sure that they're in a safe car. I have to make sure I go to buy groceries. I want to be able to provide healthy, options rather than the junk food, the childcare costs. The other money that I would use too is, not to get into too detail, but even though I have, custody of my kids, I do have a lot of debt incurred by some other circumstances pertaining to some other parties that I have been financially responsible for. So by me being able to also pay off that debt through no fault of my own, but I incurred it, as being in a household and the whole separation thing and everything. So the fact that I could also pay off those debts, that'll allow me also to have that extra financial security too, just in case any emergency situations run up. So I'm happy to say that I'm not someone that, and I think probably a lot of other single parent, I'm not wasting my money. So I'd like to think I'd be smart about it. But yes, those are just some of the things of many that I would totally use to, that'll help me.
Thank you for acknowledging that and the stressors, right, that you have in making sure that you can cover all those costs for yourself and your kids. So thank you. Thank you again for being here. Thank you, Mr. Chair.
Thank you very much. Anyone else? Thank you. Corey Geisman.
Yes, hello. I'm here on Zoom. Can folks hear me?
We can.
Wonderful. Good afternoon, Senator Fonfara, Representative Horn, and distinguished members of the Finance Committee. My name is Corey Geisman. I live in Manchester, and I am the Executive Director of the SEIU State Council. Our council consists of 5 locals here in Connecticut: 1199, 32BJ, CSEA, CEUI/MEUI, and the 4 Cs. Collectively, we represent over 60,000 workers across Connecticut in both the public and private sectors. Our members are healthcare providers, educators, janitors, security guards, childcare providers, paraeducators, state and municipal employees, and more. We are members of Connecticut for All, and I come before you today in support of House Bill 5187, Senate Bill 101, Senate Bill 103, Senate Bill 104, and House Bill 5133. Last July, the Trump administration passed H.R. 1, which cuts over $1 trillion in funding to Medicaid, Medicare, and the Affordable Care Act, amongst other critical programs that are dependent on federal funding. While this bill provided a minuscule tax cut for working people, it provided the ultra-wealthy with a massive windfall by making permanent the tax cuts Trump implemented in his first term. Once again, our country continues to prioritize the accrual of wealth amongst the most elite while ignoring the struggle and poverty experienced by working-class families. As a state, Connecticut must fight to foster an environment where everyone can prosper and pursue their dreams, not just the wealthy few. Unfortunately, Connecticut consistently ranks near the top of the list when it comes to the most unequal states. Connecticut is the 2nd most expensive state to raise a child in. We are the 3rd highest state in the nation for the cost of electricity, the 31st state in the nation in terms of cost of healthcare, and we saw the 4th highest increase in housing costs in 2025. Affordability is not just a catchphrase or a good slogan for your campaigns, but it is, in fact, the most critical issue in Connecticut in 2026. Fortunately, we have a menu of terrific proposals before this committee that would directly address the cost of living in Connecticut by creating the budgetary space needed to truly invest in the services and programs we need. House Bill 5187 would adjust the volatility cap threshold by using a 5-year inflation-adjusted average, which we estimate would produce over $900 million annually without raising taxes on anyone. But I would encourage you to go a step beyond that and seek to reform our lopsided tax structure by passing Senate Bill 101, Senate Bill 104, and House Bill 5133. These proposals would seek to raise revenue by establishing targeted tax increases on the ultra-wealthy individuals who are benefiting under the Trump tax cuts. Furthermore, while shifting the tax burden away from working families and the working poor, we can go one step further by passing Senate Bill 103 and establishing a refundable child tax credit.
Your
This
3
bill would-
minutes are up. If you could please summarize.
Absolutely. The child tax credit would not only address childhood poverty, but it would serve as an economic engine because every dollar that we put back in the pockets of working families go right into our local economies. I have a little bit more here, but I will summarize by saying, you know, in SEIU, our members are struggling. We have healthcare workers who are working over 100 hours a week and still not able to make their ends meet. In the higher education, our students are facing courses getting cut, tuition hikes, or their professors being laid off. You know, in one of the wealthiest states and the wealthiest nation in the history of mankind, we should be able to do better for our folks. And so when we're looking at the federal government, it is clear who Trump stands with. He stands with billionaires, he stands with corporations. But here in Connecticut, we have an opportunity to do the right thing by passing these bills and standing with Connecticut residents and working families. And so I urge the committee to pass these bills. And thank you for your time.
Thank you, Corey. Questions for Mr. Geisman? Thank you. Daniel Fitzmaurice. Very good. We accept panels gladly. Seven or more, you get extra time. Could you press the button in front of you there to be heard? There you go.
Oh, sorry, got me. My name is Marielle Smith. I'm a mother of 2 children. I'm from Terriffill, Connecticut. And I'm here to speak on the behalf of a child tax credit. Something families are really struggling right now. And some of the questions that were just asked really, you know, really made me emotional because it's hard having kids and not feeling secure, not feeling financially secure. And I think the child tax credit is a great start. And I think nothing happens in a vacuum for families. I mean, there needs to be support for childcare, for housing, the economy in general, because I think one of the most important things when raising a child is a parent with good mental health. And when you are stressed from work, stressed from bills, stressed from just kids being kids, it gets taken out on them in ways that they don't deserve and they don't understand. And there's a lot of families that are really going through what I'm going through, and God help them even worse. And so a child tax credit is a great start to help those families, including mine.
I understand there are others on your panel that Marielle Smith, Ivy Royster, Betty Reese.
I'm here, Ivy Royster.
Okay.
Good afternoon, everyone. Thank you, Finance Committee, for having us. My name is Ivy Royster. I am a resident of Stratford for over 40 years. I've heard a lot of the same things today that I want to speak about. I've already submitted my testimony. However, I have 2 children. I have a 19-year-old who actually has basically aged out of all of the credits. And then I have an 11-year-old who is in school in Stratford. And one of my biggest issues is making sure that she is eating healthy foods. Every day it is a struggle to make sure that we can afford the groceries. Sometimes we have to really budget and make sure that we can get the things that she needs to help her grow. Fresh fruits and vegetables every week. But we also have to think about enrichment programs, after school programs, summer programs, tutors. And I am in support of the child tax credit to help with these things. My daughter gets all of these things. However, we stretch the budget every time. There are many children in our area that do not get to experience the enrichment programs like summer camp and after school programs where they go home and they sit in front of TV screens. So I hope that you will consider the child tax credit, as it may not take the whole burden off of a parent, but it will definitely help with a little something for their children, even if it's just a week at summer camp or a week in the after school program. Thank you very much.
Thank you. Marielle Smith. Oh, sorry.
Hi, I'm here on Zoom, Betty Reese.
Betty Reese.
Hi, thank you so much for the opportunity to speak. I'm Betty Reese. I work for 2 Connecticut nonprofits, but I'm here representing myself as an Ellington resident and a single mother of 1 child. I strongly support the proposed $600 refundable child tax credit. I have a master's degree in public administration. I worked full-time while putting myself through college twice. Today, I work a full-time job and a half-time job. I have employer-sponsored health insurance. I bought my home before housing prices surged. By most measures, I've done everything I was told would lead to stability. And yet I still struggle to pay my bills. For years, my father, a lifelong Connecticut resident and a Republican, complained about taxes in this state. I'm a lifelong progressive, and I believed he was exaggerating whilst I lived out of state for much of my adult life. But after moving back here in 2018 and becoming a Connecticut homeowner, worker, parent, and taxpayer, I understand what he means. Though we agree on virtually nothing politically, we agree on this: the burden on working and middle-class families is too heavy. Connecticut is one of the wealthiest states in the country, yet we have one of the widest gaps between the wealthy and working families. Parents are stretched thin. Single parents like myself are stretched especially thin. $600 is modest, but it's a start. And it's a meaningful gesture to the working families in the state that we are not forgotten. When families are stable, communities are stronger, and I respectfully urge you to support this credit. Thank you so much.
Thank you. Am I to assume that Daniel Fitzmaurice is not testifying? Okay. Questions? Representative Rader.
Thank you, Mr. Chair. And thank you to Marielle, Ivy, and Betty today. I really appreciate your testimony from mom to mom. I really appreciate it. I know how busy your lives are. I had a question for Ivy, and maybe Ivy could answer it if she's not on anymore. Maybe you could shed some light. Ivy kind of enumerated the many things that she would like to provide for her daughter and some of the children and some things she can't. She talked about after school programming. And I think a lot of people make the assumptions that that comes free in some school districts, but I wondered if she could clarify if that is something that typically families are now expected to pay for. I know during the ARPA time when we had some more funding, I'm just trying to get a better grasp on, like, these are more unique, issues that come up when you have school-age children where you want to hold a full-time job, but those after-school hours can get really challenging. And I understand how the tax credit can offset some of that, but I'm just curious if you could kind of enumerate some of those things that you might want to participate in, but you can't for your child, if she's there.
Questions?
Oh, I can answer that.
Okay, thank you.
My daughter does Girl Scouts. So that's definitely, you have to pay for that. My kids are in Hartford Public Schools. They go to a magnet school. But even some of now the sports programs, they were like through Active City, through some of the Hartford Rec, I don't think is charging fees. But I do notice Active City, excuse me, they have programs on weekends They're starting to charge a small fee for some of them. So some of the other may still be free, but that's at least there.
Thank you.
And
I
I'd
appreciate it.
love to chime in as well. In Ellington, my son goes to public school. It's wonderful. I very much appreciate it. And he does participate in some after school programs and summer programs offered through the school or the rec department, none of which are free. Every single one costs money. Some are more than others, but as a single mom, every dollar counts. And even as a single mom with a professional degree and, a decent job, it's tough just because of the rising costs of literally everything.
Thank you. Thank you, Mr. Chair.
Thank you. Anyone else? Thank you all.
Do I speak?
I do not. We're not to you yet. We'll be there momentarily, but I will just say that we have completed the first page, which means we'll be here until at least 1 a.m. And I can't say that's because we have overwhelmed folks with questions. We've been pretty disciplined. And, but we have a lot of people that have something to say and we're here to listen, but that's our reality. And somebody is going to have the honor, if you will, of being the last person today. Maybe it'll be PM, maybe AM, I don't know. But we will continue. And that is LaShonda Cruz.
Hi. So my name is LaShonda Cruz. I wrote down some stuff. I heard a lot of people talk about the taxes. I would just want to say for myself, I usually use the taxes for like house things, bills, because sometimes I can't even afford my bills. And I heard some of the people speak about like tips. Tips come in handy for people that can't actually afford to get to work because they're struggling just to pay gas. I'm a little nervous. I'm all over the place. And as far as living, the cost is extremely high. People can't even afford their bills. A few years ago, my mother had a house fire. She was with me for 7 whole months. It was very stressful, but she ended up getting an apartment later that year. And as far as childcare is really expensive. People cannot afford childcare. It's too expensive. So people are struggling either to go to work or call out of work. Families coming from a low income family, a community like me, it's not easy finding childcare. It's not easy paying bills. It's not easy trying to keep a roof over my head and my children's head. My daughter, she was going to college. She had to drop out to be an ultrasound tech. The simple fact, she was struggling from college to work because she couldn't do both. And me as a mom, I need a vehicle sometimes to take my kids to the dentist, to the doctor. Sometimes I can't even do that if they miss the bus because I'm struggling to buy a vehicle. So taxes are really important when people are expecting to get a certain amount back. So by something being pulled away from the low income family neighborhoods, that's an issue. This is not in a Connecticut thing. This is a USA thing. And as far as I understand people in higher position like y'all, I feel like if y'all have the power to change something for the people that's here in Connecticut, it needs to be done. I heard so many people speak, even down to I wasn't going to speak because I ain't feeling encouraged. But the more I speak, I feel encouraged because I know I'm here to speak on somebody else's behalf that cannot be here right now. So we need our dollars. Taxes that's being collected is being used in ways that the people that's paying it don't even know. We need our money. That money needs to be poured back into our paychecks, into our bank accounts. We're living here, but we're struggling. I'm from New Haven. Go down on the green, you see all types of poor people downtown sleeping on the green, they being arrested for it. People are losing their minds every day, dying, overdoses. This
Your
is
3
why
minutes
my
are up. If you could please summarize.
this is why my community is going through. Why? Because people are actually selling drugs trying to make ends meet. But they cannot make ends meet when they're getting caught and going to jail. It's not that they want to do that, but life is hard. That's why I'm giving that example that it is real out here. A lot of families is going through, and we're sick of it. We're sick of it. People in higher position like y'all need to give us back what is due to us. Because everybody is speaking, but everybody not really speaking
Ms.
up because
Cruz.
they feel like they're going to be
Ms.
shut
Cruz.
down.
Ms. Cruz, please summarize, please.
But that's all I got to say right now. But I'll definitely be putting in my testimony because things need to change coming from a low income community. It's not just me, it's many others, many mothers, many grandmothers, all types of things. I had to deny my nieces and them from coming a couple weeks ago because their grandmother that have custody of them trying to get to work, and I didn't have enough food in my house to feed them.
Thank you, Ms. Cruz. Questions? Thank you very much. Tanisha Signori.
Good afternoon. Hate to follow that. It was really powerful. My name is Tanisha Signor. I'm the policy director at She Leads Justice. We are a statewide nonprofit that uses a justice and equity lens to advocate for under-resourced and marginalized women in Connecticut. For over 50 years, we've been a leading advocate for policy solutions to enhance women's economic security, combat discrimination, and increase gender equity. I am submitting this testimony in strong support of SB 101, SB 103, SB 104, HB 5133, and HB 5187. I have a long, detailed written testimony that you guys can read in depth about all the different bills that I just listed. I'm going to be speaking today generally about the child tax credit bill. For the last 2 sessions, our organization has helped co-lead the Child Tax Credit Coalition that's being headed by Connecticut, United Ways of Connecticut and CT Voices for Children. I was really hopeful that we would get it passed last session, and I think we came really close, but we're here again because we're going to keep fighting for women and workers and families in the state because people are struggling. I think you're hearing that today. The person before me had a really powerful testimony. And I wanted to talk to you guys about the fact that the advocates that are working on these issues are not exempt from the regressive tax system that exists in our state. I'm speaking in a professional role today, but I'm also a mother, a working mother, and I am part of an Alice family, and I would benefit from a child tax credit. Our current tax system is regressive and it overburdens our low and middle income families. It forces them to pay a larger portion of their income to taxes than people who are earning the most. And I think this is unfair. The most recent data from Alice tells us that the survival budget for a family of 4 in Connecticut, and I know you're going to hear this stat a lot, is $116,208. This means that's what you have to make just for the basics. According to this data, 40% of families in Connecticut are struggling to afford basic needs. I know you're going to hear that data set a lot today, 40%. I want you, all the members of the committee, to really take a moment and appreciate that number. We are saying this number tells us that almost 50%, half of the people who are living in this state, are struggling to afford basic needs. That's a big number. That means people are making choices. Parents
3 minutes are up. If you could please summarize.
Yeah, thank you. Parents are skipping meals and doctor's appointments. Their cars might be going unmaintained. Prescriptions might be getting stretched to the limits. People are losing time with their children to work multiple jobs. I had a lot more to say. I think I spoke maybe a little bit too slowly, but I will submit my written, and I really hope that the committee takes all of these policies, but specifically the child tax credit under advisement, and gets it passed this session. I think it's really important, and the people of Connecticut need it. Thank you.
Thank you. Questions for Tanisha? Representative Shannon?
Thanks for being here, Tanisha. Thank you, Mr. Chair. I'll let you talk a little more. No. We've heard over and over again, we need this child tax credit, and I believe we do as well. And we've seen different plans. There's the one that we're looking for where it's a phase in to get you to 600. In your opinion, what do you think would be 600 is a good number? Do you think that is cool, or what do you think?
I mean, I would, of course, prefer more. I think the families of Connecticut could use it. And I also think that we know that it would be beneficial to our economy, right? We know what the return on investment is. You guys have heard that over and over again today. I think the $600 is a good middle ground. And it's something that has been come to agreement over the last few years of this coalition building and the campaign. I appreciate the phase in, but I don't know if it's necessary. But if that's what we need to do, and in 3 years, it means that people will get to $600 per child, I think that that's okay. I think it's a good middle ground.
Thank you. Thank you, Mr. Chair.
Thank you, sir. Further questions? Thank you.
Thank you.
Kayla Medina?
Yes, thank you. I apologize, my camera is not working this afternoon. But good afternoon, Finance, Revenue, and Bonding Committee. My name is Kayla Medina, and I proudly serve as the City Councilwoman in Bridgeport for the 138th District. And I'm here today in strong support of HB 5187. I speak to you not just as an elected official, but as someone who lives in and serves a community that feels every budget decision in real time. In Bridgeport, I sit with families who are doing everything right, working multiple jobs, caring for their children, supporting elderly parents, and still struggling to keep up. Grocery costs more, rent costs more, utilities cost more, and now on top of that, there's a fear of federal cuts and economy uncertainty. These families did not create the unfunded liabilities or decades-old debt we are still paying down, yet they are the ones being asked to absorb the consequences. The fiscal guardrails were put in place for a good reason. They help bring structure and stability to our state budget, and this is very important. But when the rules are too strict and don't allow for room to adjust, they can become too rigid. And in times like this, when families are already struggling, that kind of rigidity can hurt real people. When the state cannot respond quickly to federal cuts or economic downturns, cities like Bridgeport feel it immediately. We rely on state funding for education, early childhood programs, social services, and community supports. And when flexibility disappears at the state level, pressure lands squarely on municipalities and ultimately on working families. HB 5187 does not abandon fiscal responsibility. It strengthens it while recognizing that we are living in a different moment. Increasing the budget reserve funds gives us a stronger safety net, not for excess, but for protection. Adjusting the volatility cap to 5-year average is not about spending recklessly. It's about using revenue wisely when communities are facing real and immediate needs. Budgets are not just spreadsheets. They are statements of who we protect when times get hard. Right now, Connecticut families are anxious. They are watching Washington. They are watching prices rise. They are wondering whether their childcare program, their after-school program, or their health support will still be there next year. This bill gives lawmakers the tools to respond to those fears with stability instead of limitation. As a city councilwoman, I want to continue telling my residents that their state government sees them, hears them, and is prepared to act when needed. HB 5187 gives us that ability, and I respectfully urge you to support it. Thank you for your time.
Thank you, Ms. Medina. Questions? Thank you. Jennifer Perez?
Good afternoon, Senator Fonfara, Representative Horn, and members of the Finance Committee. My name is Jennifer Perez, and I live in Bridgeport. I serve as the chair of the Bridgeport Board of Education. I'm a therapist specializing in children and adolescent mental health. I'm here in strong support of House Bill 5187, 5133, Senate Bill 101, 103, and 104. In both of my roles, I see the cost of inaction. Bridgeport is one of the highest need districts in Connecticut. More than 80% of our students qualify for free or reduced price meals. Many of our families are working, often more than one job, and still cannot afford basic necessities. When we say 40% of Connecticut families are struggling to make ends meet, that reality is concentrated in communities like mine. Our schools have become the backbone of the social safety net. We provide meals, mental health services, special education supports, and stability for children experiencing housing insecurity. As an adolescent therapist, I've worked with teens who are not just worried about grades and anxiety and depression, they're worried about whether there be food at home or whether their family can pay rent. When funding does not keep pace with needs, the caseload rise. Preventative services shrink, crises increase. We shift from prevention to damage control. As both a clinician and a board chair, I can tell you this isn't theoretical. Federal instability and cuts to healthcare, food assistance, and education only deepen the strain. That impact does not stay in Washington. It lands in our classrooms and on our children. Connecticut must respond with leadership. House Bill 5187 reforms the fiscal guardrails so lawmakers have the flexibility to protect families. 5133 and Senate Bill 104 ask the wealthiest to contribute more through income and capital gains adjustments. 101 ensures the highest value properties contribute fairly. And SB 103, the child tax credit, is immediate relief. A refundable credit reaching 75% of families, more than 500,000 children, would put money directly into households that will spend it on childcare, groceries, transportation, and rent. That's not radical, that's responsible. We are one of the wealthiest states, as you've heard, as you know, and it's unacceptable that working families are carrying a disproportionate tax burden while wealth at the top continues to grow. This is not about politics, it's about priorities. If we fail to act, more families will fall into crisis, more children will struggle, more pressure will land on already strained schools and healthcare systems. But if we do act, if we modernize our tax code and invest in our communities, we can stabilize families, strengthen schools, and build an economy that works for everyone. Connecticut has the resources. What we need now is the will. I urge you to support these bills. And if we say we value children, working families, and opportunity, then our budget must prove it. Thank you.
Questions for Ms. Perez? Thank you. Justin Doty? Megan Scanlon?
Good afternoon, Senator Fanfara, Representative Horn, Senator Fazio, Representative Paletta, and the rest of the members of the committee. My name is Megan Scanlon. I'm here on behalf of the Connecticut Coalition Against Domestic Violence, and I'm just going to speak in support of Senate Bill 103, which establishes the refundable child tax credit. For us, we serve survivors across the state, and we understand that anytime we can build financial independence with our survivors, we're also increasing their safety and security. So I'm just going to highlight 5 ways that this will enhance survivors' lives and their children's lives. One being financial empowerment. Empowering our survivors financially is one of the biggest ways that we can prevent future abuse in their lives. Obviously, they use these funds mostly to secure housing, basic needs, and other things that they need in order to stay safe and live a life free from violence. The other is reducing barriers to leaving. So 2 of the biggest reasons that survivors stay in an abusive relationship or return are financial instability and insecurity and not knowing what comes next. So a tax credit like this would allow our survivors to be able to gain control of their finances and gain control back of their lives and live a life that is safe and free of violence for them and their children. The third would be improved housing outcomes. We know through our rapid rehousing program across the state that survivors struggle to attain short and long-term housing because they have limited savings and limited access to financial resources. So a tax credit like this would help them to be able to provide more safe and stable housing for them and their families. The fourth is just better outcomes for children. The children that we serve are impacted by trauma. They sometimes have educational disruptions, and they're also dealing with other long-term challenges. anytime that we can improve their economic situation, it allows us to work with them and improve their long-term outcomes that they've been dealing with from the negative effects of the domestic violence that they've experienced. So they're able to access food, more stable housing, more stable childcare, and other opportunities like some of the after-school programs that were mentioned earlier. And then lastly is just enhanced employment opportunities. Many of our survivors struggle to maintain steady employment, a lot of times due to abuse intentionally disrupting their employment. So making this refundable is really critical. We want to emphasize that so that if their income does fall or goes to zero, there's still the ability to access this service. And the last thing I would just say is that when the federal child tax credit was in place, we saw, at least in our data, that families experienced more food security, they experienced more stable housing, they had a decrease in stress, and they were able to maintain their employment more successfully. So we really urge support of this.
You've reached 3 minutes. If you could please
Thank you.
summarize.
And that's it. I'm happy to answer any questions.
Thank you. Questions for Ms. Scanlon? Thank you very much.
Thanks.
Stephen Monroe Tomzak.
Yes, greetings, Senator Fanfara, Representative Horn, and members of the Finance, Revenue, and Bonding Committee. My name is Stephen Monroe Tomzak, a resident of Wallingford and a faculty member at the Southern Connecticut State University School of Social Work, where I have served for many years as a leader in our faculty union, CSU AUP. I'm also a member of the Coordinating Committee of the Social Welfare Action Alliance. Both of these organizations are members of Connecticut for All, and I am testifying before your committee to urge you to stand up for Connecticut for All's fair share policies, and in particular bills HB 5133, SB 104, 101, and 103. The income and wealth gaps in Connecticut are large and widening, making the lives of many of our residents more precarious than ever. And our tax code, instead of alleviating these economic injustices, makes the situation worse. Connecticut's tax code is extremely inequitable and unfair, especially around personal income taxes. HB 5133 seeks to address these concerns by raising additional revenue by increasing the highest marginal tax rate in the personal income tax bracket. The current marginal income tax rate for the wealthiest is 6.99%, which this bill would raise to 7.99%. Increasing the tax top marginal rate would put us in line with nearby states like Massachusetts at 9, New York at 10.9, Vermont at 8.8, and New Jersey at 10.8. Now, I should say, while this bill is a good start, I think we should raise our tax rates to conform more closely with those rates in those states. Now, while there are a number of other options for increasing revenue, I want to focus on two others that are critical from a policy perspective. First, enacting a capital gains surcharge on taxpayers on the top two income tax brackets in the state, which is what SB 104 would do, which is critical from a policy perspective in that helps prevent cuts in services to assist Connecticut residents who are economically insecure and living in poverty. It also helps reduce the huge income tax that exists in income gap that exists in our state. I also want to urge you to support SB 101, which would establish a statewide property tax on residential property with the highest values. This is an important mechanism to reduce wealth inequality in the state. Finally, I want to urge the enactment of SB 104 on the grounds of tax equity and justice. This is, of course, the child tax refundable tax credit, which will help reduce poverty and economic insecurity for families in this state. In closing, I urge you to pass all of the bills that are advanced in Connecticut for All's fair share agenda, as they will go a long way to reducing economic inequality in the state and will raise needed revenue to invest in public services. Thank you for the opportunity to testify today. I am available to answer questions if anyone has them. Thank you.
Thank you, Mr. Tomzak. Anyone questions? Thank you, sir.
Thank you.
And I guess Justin Doty is back. At least I'm told that. Mr. Doty. Okay,
Hello, I'm sorry, it was on mute.
that's
Good
1 minute.
afternoon, members of the Finance, Revenue, and Bonding Committee of the Connecticut General Assembly. My name is Justin Dowdy. I've been an East Hartford resident for the past 9 years and a Connecticut resident my whole life. I'm currently a student pursuing a master's degree in social work from University of Connecticut. Today, I would like to discuss HB 5133, an act increasing the highest marginal rate of personal income tax. The proposal would increase the highest marginal income tax rate from 6.99 to 7.99% for those earning over $500,000 annually. This change would affect between 42,000 and 45,000 Connecticut residents, approximately 1% of the state population, and would generate an additional $420 million in annual revenue. So now I must ask, why are we only doing it 1%? A quick Google inquiry estimates the annual cost to eradicating hunger in Connecticut is $375 million. Another query estimates an annual cost of $180 million to eliminate homelessness in our state. It's $555 million to make sure every Connecticut resident is housed and fed. That's a 1.32% increase. Does that sound like too much to you? Connecticut is not even in the top 10 when it comes to states with the highest income tax rates. I urge you to support the passing of HB 5133, but I think it's important to say that I think we can do more. I think we can do much more. In 2022, for example, Massachusetts voters approved a 4% surtax on taxable income over $1 million. This measure alone has generated $5.7 billion in revenue. These funds have been used for various social programs, including free community college, transportation infrastructure, free school lunches, and expansion of state assistance to college students. What could Connecticut do with $6 billion? It is, of course, important to consider all the stakeholders of this proposal. After all, 1% of Connecticut's residents are going to have an increased tax burden. To those residents, I say, so what? The choice between a third vacation home for the wealthy or food and housing for every single Connecticut resident is really no choice at all. I would think the wealthy would embrace the tax increase. As income inequality continues to rise, when rent is astronomically high, when groceries cost more and more every single week, out of desperation, the working class will default to the only card we have left to play, revolution. Thank you for your time and your consideration.
Thank you, Mr. Doughty. Any questions? Thank you.
Thank you very much.
Next, we have Georgina Fuentes. Georgina, just turn on your microphone, please. Thank you.
It is?
It's on.
Okay.
It's on.
Good afternoon, Senator Fonfara. Excuse my pronunciations, Representative Horn, and members of the Finance Committee. My name is Georgina Fuentes. I am a parent and a resident of Rocky Hill. I'm a proud member of the Women's Wisdom Circle at the She Leads Justice, the People's Center, and Connecticut for All. Thank you for the opportunity to submit testimony in support of Senate Bill 103, an act establishing a refundable child tax credit. I care for a transgender male child. I just support my kid in all the positive work that he does for the community. He is looking for a job and hoping to get into community college and maybe someday in the future go away to college. He wants to build his grades and credits so he won't be stuck with too much college debt. The cost of living in Connecticut is really high. The light, gas, water bills, and all very expensive. I can hardly buy what he needs or what we need in our home, things like clothes or shoes, etc. With a $600 child tax credit, I will be able to buy what we need and also pay bills. I also support House Bill 5187, an act adjusting the fiscal guardrails, and 3 bills to ensure that the wealthy pay what they owe in taxes, HB 5133, SB 101, and SB 104. Millionaires and billionaires don't have worries because they can take their kids on future trips, vacation. If they pay what they owe in taxes, Connecticut could build fun places where the kids can go and still be safe. If Connecticut invested in our families, we could be a bunch of stressless parents. Please support the child tax credit, the wealth taxes, and the adjusting the fiscal guardrails, because we need to be more safe. And I also would like to add that it's not only about, keeping back, but also to support, to less homelessness, less people being in the streets, or less being hungry, So we got to think about how to, make sure our children are safe, happy, and don't have to worry about their, future. Thank you.
Thank you, Georgina. Do we have any questions? No. Thank you for your testimony. Up next, we have online Sylvia Grant. See Sylvia. Then we'll move on to Paul Filson.
Madam Chair,
Sorry.
Sylvia is on.
She's coming on. Okay, great. Thank you.
Good afternoon, Senator Fontana, Representative Hahn, and honored members of the Finance, Revenue, and Bonding Committee. I am Sylvia Grant. I work as a direct support care at Network Group Home. I've been working in the group home setting for 20 years now and I've never seen it this bad. My coworkers and I are struggling to survive, and we feel forgotten by the people who make the policies that govern our state. That's why I stand here to say, please support and pass Senate Bill 100, Senate Bill 101, Senate Bill 103, Senate Bill 104, House Bill 5187, and House Bill 5133. To give a glimpse of a life of a direct care support in a group home. We work with people with physical and mental disabilities, for one. My pay leaves me gripping every day to decide whether or not I have to pay rent. I'm often in between whether I'm buying food for the fridge or if I'm paying for car insurance so I can get to and from work. I've always struggling what bill I need to pay and which ones I could push off. But that's a risky game, and it catches up with you. Sometimes I'm left trying to decide if I can make it to work with the little gas I have in my car, if I can afford my prescriptions. There are decisions no one should have to make, especially a caregiver working full-time. I stay because I love my job. I love the individuals who I care for. I make a difference in their life. But financially, I'm struggling with the decisions I have to make on a daily basis. But here's the catch. I'm working more than full-time, so we're understaffed in our facility. And I'm often working long hours, not using my time off, and missing family events. Those are things that I can never get back. It takes nearly 3 weeks of my income just to pay rent. My rent is $2,100 a month, cold flat, not including lights or gas. That leaves me with just 1 week of pay to cover my other expenses. We all know that it's not enough and it is impossible to catch up, but getting ahead is out of the question. I live in Hartford on the South End in Connecticut. The system just continues to push us further back into debt, into poverty, and into the streets. Members face eviction. Some members are currently sleeping in their cars while still maintaining a full-time job and taking care of those with physical and mental disabilities. This is no way to treat caregivers. We're expected to provide the best care possible, but we can't even care for ourselves or our own families. Without change, we will continue to see more caregivers leaving the field. We know the shortage already exists without
You've reached your 3
fixing.
minutes. Could you please summarize?
Basically, bottom line is that I need these bills to be passed. It is hard. How do you expect me to take care of somebody else's health when my own is being neglected? I'm never home and I'm paying for a place that I never see. So I encourage and urge you to listen to what everyone's saying and please pass these bills. I am up for any questions if you have any. Thank you.
Thank you, Sylvia. Do we have any questions? I don't see any. Sylvia, thank you for the valuable and important work you do. And thank you for your testimony today.
You're welcome. Thank you
Of-
for listening.
Of course. Next, we have Paul Filson.
Hi, can you hear me?
Yes, go ahead, Paul.
Okay, great. Good afternoon, distinguished members of the Finance Committee. I appreciate the opportunity to give testimony in support of Bills 104, 5133, and 5187. My name is Paul Filson, and I am a recently retired lifelong union representative living in West Hartford. Both SB 104 and HB 5133 are bills which address a crucial need for the state of Connecticut, the need for additional and more equitably raised revenue. Morally, it is indefensible for a state like Connecticut to crow it is a great state while allowing thousands of residents to go unhoused, unfed, uncared for, and to be undereducated. It is short-sighted for a wealthy state like Connecticut to fail to invest in and to not reap the untapped potential of all its residents. There's a huge cost benefit to making sure everyone is as healthy, happy, and educated as possible. It would return more money to the state than it costs to invest in and fully fund the services that provide well-being. SB 104 could raise a substantial amount of money in a way that is far more equitable than regressive sales taxes or circumscribed income taxes. Passive income money generated, mostly non-payroll, like dividends and capital gains, usually make up the majority of income by the very wealthy. Sometimes, unfortunately, this is true, very wealthy investors avoid paying capital gains taxes. They do this by borrowing off the equity of their holdings rather than selling them. It would be prudent to address this loophole that the very wealthy employ. Several states are already raising revenue in a more progressive way by implementing a capital gains surcharge on the wealthy, including Maryland, Minnesota, and Washington. Other states have progressive income tax structures that raise more money from the very wealthy. House Bill 5133 is a step in the right direction. By itself, it begins to recognize the unfairness of taxing middle and working class residents so that they pay a higher percent of their income in taxes than the wealthy. There are several regional states that have higher top rates on progressive income tax structures, including New York, New Jersey, and Vermont. Massachusetts has a surcharge on income over $1 million. Others, like California and Minnesota, also tax the wealthy at a higher rate than Connecticut and at a higher rate than HB 5133 would raise it to. Raising the top rate for very wealthy Connecticut residents would raise desperately needed revenue for social services and education and would in the end have a great return on investment. The excuses to not tax the super rich by arguing that fiscal guardrails are unchangeable, along with unfounded hysteria of fleets of moving vans lining up for the wealthy to flee the state, are tired arguments. They've been shown to be wrong ever since the income tax was instituted in Connecticut.
You've reached 3 minutes. If you could please summarize.
I will. Once again, Connecticut has the opportunity to become a great state for all by passing Senate Bill 104, HB 5133, and HB 5187. And there are a couple of links to institute reports in my submitted testimony that make the case in more detail. Thank you.
Thank you, Mr. Filson. Do we have any questions? I don't see any. Thank you and have a good day.
Bye.
Next, we have John O'Connor.
Good afternoon to all the members of the Finance Committee. My name is John O'Connor. I teach in the Sociology Department at Central Connecticut State University. I'm a member of CSU AAUP, the faculty union that represents 3,000 members in the CSUs. My union is an AFT affiliate and a proud member of the Connecticut for All Coalition. I'm testifying today in support of Connecticut for All Stand Up Connecticut Fair Share policies. Today, this committee is asking a very important question. How do we define a healthy Connecticut? Is it a fiscally responsible government or vibrant social services that respond to social needs? In other words, what should guide our behavior? Is it happy spreadsheets or the plight of our neighbors? It is a simple choice. And there's a lot to say when it comes to our neighbors. You know the story and it's not good. Youth that are at risk, childhood poverty, poorly funded K-12 schools, student mental health issues, racial and gender wage gaps, food insecurity, and unaffordable housing. I'd like to say a few things about my students this afternoon. Governor Lamont gets higher education wrong. He fails to see or understand how a higher education transforms our state economically and socially. But to play that transformative role, our education institutions need more investment, not less. Our 4 state universities and the community colleges have been underfunded for years, and today they are defined by tuition increases, personnel cuts, increased class sizes, cutting programs, and institutional mitigation. Connecticut's universities and colleges need to be fully funded. Just recently, we heard that the newly christened Finish Line Scholars Program, which expanded the PAC program into the CSUs, has had its funding cut in half by the governor, from $7.7 million to $3.85 million. And cutting the program by 50%, the governor is ignoring data from the 4 CSUs, which indicate that the proposed funding covered less than 40% of the anticipated enrollment for the 2026-2027 academic year. HB 5133, SB 103, and SB 104 would generate revenue that benefit our higher education institutions and students. We should pass them. Like others who will appear before you today, I hope this committee will move forward HB 5187, an adjustment of our state's fiscal controls. Given the lunacy coming out of Washington, we need the economic flexibility to respond to federal cuts to our safety net programs. The only way to secure that flexibility is to reform the fiscal guardrails.
You've reached 3 minutes. If you could please summarize.
Yep, they need to be adjusted. If we care about our neighbors, if we care about our students, we need a fair and more equitable revenue system. The Connecticut for All, Stand Up for Connecticut, Fair Share policies help move us to that place. Thank you for your time and your work.
Thank you. Not seeing any questions here online. So thank you, Mr. O'Connor, and have a good day. Next, we have Stuart Savalcool.
Very well done.
Huh, good. Thank you. Go ahead.
For a first timer, I gotta say. Good afternoon, Senator Fanfara, Representative Horn, and members of the Finance Committee. My name is Stuart Savalcool, and I serve as Chief of Staff for AFT Connecticut, a diverse state federation representing more than 30,000 public and private sector employees, including state workers, healthcare workers, public school teachers, paraeducators, and higher education faculty and staff. We are also a proud member of the Connecticut for All Coalition. I am here in strong support of House Bills 5187, 5133, and Senate Bills 101, 103, and 104, because what is happening right now at the federal level is not theoretical, it is destabilizing our communities. Our nurses are seeing patients lose coverage and delay care. Our school staff are managing escalating student mental health needs with inadequate staffing. Our members are paying more for groceries, childcare, and housing while watching billionaires receive historic federal tax breaks. And here in Connecticut, one of the wealthiest states in the wealthiest country in the world, nearly 40% of families cannot afford basic necessities. That is not an economic inevitability. It is the result of policy choices. For years, we have allowed an upside-down tax system to persist, one where working families pay a higher effective state and local tax rate than the wealthiest households. At the same time, we have constrained our own ability to respond to crisis through rigid fiscal guardrails. Let's be clear about the choice before us. When budgets get tight, the pressure rolls downhill. It lands on classrooms, it lands on hospital staffing, it lands on property taxpayers. It almost never lands at the very top. The bills before you begin to change that. They ask the highest earners, those with extraordinary capital gains, and owners of multi-million-dollar properties to contribute a little more so we don't balance budgets on the backs of working families. And on the other side of the equation is the child tax credit, direct relief for families who are working hard and yet are still squeezed by the cost of living. For our members, that means help with childcare, groceries, and basic stability. This isn't about punishment, it's about balance. If we refuse to rebalance at the top, the cuts will come from the middle. They always do. If we do nothing, the pressure will not disappear, it will shift onto local property taxes, onto school districts, onto hospitals, and ultimately onto working families. We can either ask the ultra-wealthy to contribute slightly more, or we can continue asking nurses, teachers, and municipal taxpayers to carry the load. That is the choice before us. Connecticut has the tools to provide stability in
You
an
reached 3 minutes.
unstable
Could you please
moment.
summarize?
Okay. Connecticut has the tools to provide stability in an unstable moment. We should use them.
Thank you. Any questions? I don't see any in the room, so have a great day. Thank you
Thank you
so
very
much for your
much.
testimony. Next we have Kylie Kelsey. No, I don't see them in the room, so we'll move on and we will go to Canarita Soto.
Katarina needs to approve being promoted to a panelist.
Hello, do you see me or hear
I
me?
can see you. Go ahead.
Perfect, thank you. Hello to the members of the Finance Committee, and thank you for the opportunity of me speaking to you today. My name is Katarina Soto. I am a student at Capital Community College in downtown Hartford and a proud resident of Hartford. And I'm part of the Connecticut for All Coalition, along with the Working Families Party and the Four Cs Union. I urge you today to please pass bills to tax the rich and invest in our underserved communities. Specifically, I'm testifying in support of HB 5187, HB 5133, SB 101, SB 103, and SB 104. Throughout history, underserved communities of color have been systematically starved of resources for education, health, and safety, while communities of white residents live lavishly. Our roads and sidewalks are usually broken. Students who leave our district for better education are being tokenized to boost diversity numbers in majority white schools. Poverty and houselessness affect our lives and communities deeply, and for people who do live in apartments, their housing is owned by slumlords from out of state who have no regard for their health and safety of their tenants. In one of the richest states in America, still the richest country on the planet, Connecticut has one of the biggest wealth disparities between the working people and the wealthy class that benefit from our back-breaking labor. Our high schools and college students struggle with homelessness, food shortages, and supporting families that are barely scraping by. You can see the impacts of decades of divestment in our community colleges. Many students rely on food pantries for their daily nutrition. Our elevators serving the 12 floors of Capitol are often broken. Students have no access to fresh air or nature and no place to relax or take a private moment or take a walk. And support services whose hours and staff are constantly declining due to budget cuts. Students come to my school to pursue their education as fast as possible so they can provide for their families, not even able to take advantage of the opportunities available. We are taught as children to help those in need, to share with anyone who is not as fortunate, and to make the world better for everyone, not just those in your social circle or economic class. The wealthy in the state live lavishly with designer cars and mansions. They are far away from the realities I see and experience in my community. Wealthy people do not even realize their privilege or cannot fathom that students need to pay for college by themselves, that people like me save up for their first cars by working in fast food, that many people struggle to even get through high school. It doesn't seem crazy to me that rich people should pay their fair share, so that those of us who aren't as advantaged can meet our basic needs. I believe with so much wealth focus at the top, we should tax the 1% fairly and to help our communities and strengthen our society, not just for ourselves, but for our children, our elders, and the working people who make Connecticut. I hope you could take my words to heart and that the values of the working people and students like me will be reflected when you vote on the passage of Stand Up Connecticut's Fair Share bills. Thank you for your time, and I will be happy to answer any questions.
Thank you, Katarina.
Thank you.
Don't see any questions here online. You did a great job. It's always nice to see students testify before us. So you have a good day.
Thank you, you too.
Okay, next we have Megan Curran.
Yes, hello.
Go ahead, Megan.
Thanks. My name is Dr. Megan Curran, Policy Director of the Columbia University Center on Poverty and Social Policy. Thank you for the opportunity to testify on SB 103, the Child Tax Credit. I also have a written submission. Our research shows that a well-designed child tax credit can generate as much as $10 to $15 in economic and social gains for every $1 spent each year over the longer term. Connecticut's proposal meets a critical principle for poverty reduction, a refundable credit fully available to children in low and moderate income families. A small tweak to remove the family cap can ensure it maximizes its full potential. Some brief federal context is helpful for why a state-level credit is so important. Many people know that the 2021 federal expansion cut child poverty by close to half, but historically the federal credit was a modest one for middle-income families. The 2017 tax reform gave it to families up to $400,000 with no gains for children in lower-income families. 1 in 3 children were left out, half of Black and Latino children, 40% of young children, 3/4 in single-parent families. Hardly any state child tax credits existed to fill gaps at the time. 2021 made 3 major changes. It increased benefits with an extra boost for young children, gave a full credit to children historically left out, and it did monthly payments to make it something families could count on. The evidence was clear. Incomes rose, child poverty fell, hunger dropped, and employment remained steady. When it expired, these gains were lost, but states have picked up the mantle with rapid growth in state-level credits, and Connecticut's efforts are more timely than ever. Because of H.R. 1 passed by Congress last summer, there are now 1 in 4 Connecticut children left out of the full federal credit, 160,000 children statewide, all in families below $60,000. These same children are at highest risk of losing food assistance and health care due to H.R. 1's other changes, but they would be covered by this state credit. Best practice in state credit design include full refundability, indexing to inflation, equal per-child benefits without caps, inclusivity for children and immigrant families, and boosts for young children. Connecticut's design is fully refundable, the most important way to reach those who would benefit from it the most. One piece I respectfully draw attention to is the current 3-child cap. Research is clear that equal per-child benefits without caps are important for positive outcomes, as are meaningful benefit amounts. Over 1 in 4 children in Connecticut are in families with 3 or more children, and caps often affect the youngest kids. A 4th child welcomed through birth or adoption is never recognized at exactly the time that a family needs it the most. And all children in the family will get less because the family will share a smaller credit amongst more people. Such features are easily tweaked and can help a strong policy proposal realize its full potential. In closing, Connecticut's efforts place it among momentum that is fast growing around the country and worldwide. My colleague David Harris, speaker number 114, who is unable to join, would have me note that the proposal is a move towards what UNICEF and the ILO now call the foundational policy for all children that already exists.
You've reached the time. If you could please summarize.
Yep. These types of benefits already exist in 60 nations worldwide with decades of robust positive evidence, and Connecticut's proposal is a worthy investment. Thank you very much.
Thank you, Megan. Do we have any other questions? Megan, I actually have one quick question for you regarding the cap that we're recommending here with your first 3 children on the mother of 4. I'm just curious what other comparable states are doing around caps.
Yeah, so, this has arisen in some other states that have considered it. Earlier versions of Minnesota's proposal did have a cap, but they actually did reconsider, and the final proposal actually went through unrestricted, and that's actually been one of the most important pieces that's helping them, help realize some of the child poverty reduction in addition to their full refundability and very meaningful benefit amount.
Thank you. We have one more question with Rep. Constantine.
Hi, Megan. Thank you. As you're looking and comparing to other states for the child tax credit, have you noticed if they also offer universal free breakfast and lunch? Have you noticed any correlation?
In terms of just whether or not they're proposing them or the impacts?
Whether they're proposing them or have them.
There's quite a variety of states now. So before 2021, there was just you could count on one hand or less the number of states that had it, but there's now 15 states, and including DC, which has a very active proposal that just kind of lost its funding, that have refundable credits. There's another 3 that have non-refundable credits, and there's active proposals in another close to 20 states. And so by the time you get up to those numbers, you actually have a wide variety of the other existing policy landscapes. So some, like a Minnesota might also have, a lot of other child related benefits, but other states, actually have quite different landscapes, and they see this as a way to fill the gaps. Montana had a very active one because they were trying to fill childcare deserts and things like that. So this is actually something that you see quite a lot over a very diverse landscape.
Thank you.
I think we're all done there, Megan. Thank you so much for your testimony.
Thank you so much.
And next we are going to Nadalyn.
Hi, can you hear me?
Yes, go ahead.
Okay. Dear members of Finance Committee of the Connecticut General Assembly, my name is Nadalyn Chica, and I live in Connecticut. I'm a member leader with C4D, Connecticut Students for a Dream, and I'm part of the Connecticut for All Coalition. I support Connecticut for All Stand-Up City for Share Policies, HB 5187, HB 5133, SB 101, SB 103, and SB 104. I'm a young immigrant fighting for a better life, but it's very hard because everything is expensive right now. The 1 trillion in federal costs will make life even harder for people like me, while the government cuts funding for healthcare and food to give tax breaks to billionaires. Families in Connecticut are struggling just to survive. Almost 40% of our residents can afford basic needs because our tax system is really unfair. It forces the poorest people to pay much higher tax rate than millionaires. I have lived this struggle since firsthand. I don't qualify for Medicaid and I can't afford health insurance. Living without health insurance makes me feel so anxious all the time because I don't know when I'll get sick. Recently, I got an ear infection. It was so painful and it made me cry a lot. And I paid $150 out of pocket. Then I had to return and pay it again because the medication that I also paid out of pocket didn't actually work. Also, I'm still suffering of ear pain, and I cannot afford another appointment. My mother has also suffered. She has an illness that requires constant consultations that cost her over $2,000 every time that she sees the doctor. Health is a right, it's not a privilege, and I don't want anyone else to suffer the way that I have suffered. They lose their insurance. In addition, I cannot focus on my college assignments because I have to work long hours to help my mother to pay the bills. The rent has increased so much that my mom and I cannot afford an apartment just for ourselves that we have shared a place with another 5 people. This is the reality for many people in Connecticut right now. This situation impacts me deeply, causing constant stress and having anxiety. I'm always worried about having enough money for rent, food, or medical fees. If we have the funding that we need, my life will improve because I finally could prioritize my education and my future. And for my community, it will mean that health and housing is going to be treated as rights, not privilege. Families will be forced to live in overcrowded homes, and no one will have to choose between a doctor's visit and a meal. Fully funding our services will create a Connecticut that is stable, fair, and healthy for everyone, not just the wealthy. To protect working and middle-class families, I urge you to support HB 5133 and HB 5187, which will tax to alter rates, wealthy, and reform states restrictive fiscal withdrawals. Connecticut must bring in more revenue and changes its spending rules so we are actually allowed to use those funds to replace the federal cuts threatening of our safety net. By prioritizing people or billionaires and fully funding healthcare, housing, and education.
You've reached the time. If you could please summarize.
Sorry. I say that Connecticut must prioritize people, working class people, instead of billionaires, and help us to allow the students like me focus on our education and a better future instead of just trying to survive. I strongly support Connecticut for stand-up city fair policies, and I hope you will make us city's tax system more fair. Thank you for your time.
Nadalyn, I want to recognize how extraordinary your testimony is because I see you riding a school bus right now. So I am so impressed with your diligence and your patience and waiting to testify today. So I don't see any other questions online or in the room, but I hope you have a safe trip and we are so grateful for your testimony. Have a good day. Is she gone? Okay. Next we have Tashiana O'Connor.
Yeah. Hold on. Yes. Good afternoon, Chair, the members of the Finance Committee. I'm here to testify in Bill HB 2256 and SB 1553, Child Care Tax Credit. I'm a child care provider in Waterbury. I'm here to testify how not funding Care for Kids is affecting me financially and other providers alike. For example, I have a child that I charge $100 per week for, and he's here over 10 hours a day. Another one, a father that's working $15 an hour, I charge him $150 a week. The average cost per child in the state of Connecticut for child care is over $18,000. I am making per kid per year, for one, for the 5 is $7,200. For the 1 is $4,800 a year that I'm making. I have a mortgage, I have a family to feed. I choose this career because I loved it. I love what I do. I enjoy every moment of it. I enjoy knowing that I'm helping my community. And I do the best I can by lowering my price. Not that I'm not worthy of it, not that I'm not worthy of more, but the lack of funding and Care for Kids is what I have to do just to keep my community going. And as far as the child care tax credit goes, I have parents that's telling me, listen, can you hold on for me? Watch the children for me until I get my credit, till I get my taxes. They look forward for this. They look forward for their taxes. The funded child care tax credit help parents out to pay their car note and even help me out who have children under the age of 18 to be able to pay my mortgage, to catch up on bill that we also have behind. We have from last year can't pay. So under federal state, it's 40% Connecticut have for child care tax credit. Connecticut is one of the only states that do not allow a fair wages of child care tax credit for deductible and for parents alike, right? To deduct what they pay in child care. Parents are complaining, and I'm here as a provider, as a citizen of a resident of Connecticut to ask you guys to fund HB 556, I'm sorry, 256, I'm sorry, I'm still working, 256, and the child care tax credit.
Thank you so much for your testimony. I'm looking to see, I don't see any questions in the room or online. So thank you so much. Next we have Willie Medina.
Thank you very much. Good afternoon, Chair and co-chairs and committee members. My name is Willie Medina. I'm a husband and a father of 3 wonderful daughters. And my entire household graduated from Bridgeport Public Schools. We are in strong support of HB 5187 to make things make sense and use common sense to reduce the guardrails constraints so we can properly fund education in our state. Underfunding mandates and foundations have caused our local funds not to be enough to keep proper classroom levels and staff levels. Our students don't have the same chance to rise above the standards they have been given. Community thrives with strong public education and universities, a robust and affordable childcare system, quality and affordable healthcare, lower rents, and good housing options. This makes our economy better and businesses thrive in our environment. So our best is still to come. While our state has shown limited improvement, it has been on the backs of our educators and students, where there have not been funded justly for over 13 years. ECS formula has not used COLA to reflect rising costs year after year, while the last 7 years, everyone got a raise, as the governor said. Corporations rake in record profits and billionaires pay less in taxes than our teachers, our educators. This system is rigged. Let's make it make sense. Let me be clear. Equity is not a slogan. It is a legal, moral, and constitutional obligation, just like my colleague Sheila Robinson said. As structured, Connecticut's so-called fiscal guardrails place restrictive controls on the budgeting process, leaving lawmakers with limited to no resources or flexibility to respond quickly to the needs of our communities, especially students' education. Let's put the funds that has been missing in many districts, especially Bridgeport, where I serve as a Bridgeport Board of Ed member. Our families today are being asked to pay off faster than required over 100 years worth of unfunded debts and liabilities that they did not create. Over 15 billion has been at our hands, but nothing has been done about the ECS formula, and that isn't just or moral. You didn't create this problem, but you have the power to make it make sense and use common sense, and let's fix it. Underfunding majority Black and brown districts while praising new education initiative is like putting fresh paint on a crumbling foundation. Bills aimed at improving literacy, mental health, and curriculum reform are well-intentioned, but without fully funding the ECS formula by adding COLA and raising it now while we have the funds, there are promises without power. We have the funds to fix the ECS formula by adding COLA now, moving forward, but also putting it into place, adding the foundation to be a total of $17,000 per student now, and give our students a fighting chance to
Your 3
accomplish
minutes are
what
up. If you
God.
could please summarize.
I would end with this. Thank you for that. Now let's do this, and let's give the students a fighting chance to accomplish what God has planned for them all. Thank you, and God bless you.
Thank you, Mr. Medina. Don't see any questions here online, so you have a good day.
Same to you. Have a great weekend, y'all.
Thank you. Next, we have Mindy Gold.
She's online. She should be coming in.
Okay, thank you. There she is.
Dear members of the Finance, Revenue, and Bonding Committee, my name is Mindy Gold, and I am here to strongly support HB 5187, HB 5133, SB 101, 103, and 104. I am not here because I am a policy expert or an economist. I am the mother of 2 young children. I'm a local leader serving on my town's Board of Education, and I'm the board chair of a nonprofit childcare center right across the street from where you are now. I'm here because I'm someone who cares about their community and because I believe Connecticut's budget choices should reflect their realities. Every day I see early childhood educators, the people who hold our babies, teach our toddlers, and make all other work possible, leaving the field because they cannot afford to stay in it. My family paid over $26,000 in childcare costs last year, and yet I still see directors running programs on impossible margins. And most importantly, I see what happens to children when that infrastructure is unstable. The developmental delays, the family stress, the ripple effects that reach across schools, employers, and communities for years to come. And this is not a new crisis, but it is getting worse. The federal threats to SNAP, Medicaid, and other supports are adding fear on top of an already precarious foundation for so many Connecticut families. Meanwhile, Connecticut has a rainy day fund at a historic high, and it is right now raining, pouring on working families in this state. The families I know cannot wait while we hold back dollars that could stabilize childcare, fund a child tax credit, clear the Care for Kids waitlist, and protect the housing and healthcare supports that keep families intact with dignity. Updating the guardrails to reflect today's realities instead of the economic assumptions of when they were written is not reckless, it is responsible governance. I also sit in school budget meetings where we're told there isn't enough money to invest in early literacy because the ECS formula hasn't been updated since 2013. One unexpected special education placement can cost a district over $200,000. In a budget environment where $10,000 is a meaningful surplus, that is not a line item, that's a crisis. When the state can't meaningfully invest in public education, the burden falls to local property taxpayers and hardest on towns like mine that don't have big commercial tax bases to absorb the gap. And I see the same pattern playing out across every area of public investment. These fiscal guardrails are the foundation from which all other good policy in the state either flows or fails. What were once designed to build stability now prevent us from responding to Connecticut's very real and immediate needs. So I'm not asking you to choose between fiscal responsibility and supporting families. I'm asking you to recognize that leaving children without stable care, leaving educators unable to make rent, and leaving families one emergency away from crisis, that also has a cost. It's just not one we put in a budget line. I'm so appreciative of your work on this issue. I'm so grateful to be in coalition and solidarity with everyone else testifying, and thank you for letting me be heard.
Thank you, Mindy. I don't see any questions here or online, so thank you for testimony, and you have a good day.
Thank you.
Next, we have Ruth McDonald.
I'm here. Can you hear me?
We can hear Ruth. Go ahead.
I'm Dr. Ruth McDonald of Charter Oak State College, and I'm a union delegate, and I'm in favor of taxing the billionaires, adjusting the fiscal guardrails, and funding higher education. We're the opportunity infrastructure in higher education, and we support working families. At Charter Oak, here's an overview of the working folks who are in my class this semester. One student from our community college partners looking for part-time work, studying social work. One unemployed single father of teenage girls who just started his own insurance business while he studies to be a counselor. One nurse seeking advancement through a bachelor's degree and a move out of the city where she works. Several staff of healthcare agencies and hospitals looking to upgrade their credentials, two early childhood educators, two para-educators, two students who require learning accommodations for their learning abilities, two public safety officers, one a dispatch officer looking at joining the police academy after graduation, one looking at the sergeant's exam, one school bus fleet dispatcher who must have had the week from hell, one funeral director, one staff member from Connecticut Food Chair, one documentary filmmaker, and one student who wants to start a cake baking business. 87% of our students at Charter Oak are from Connecticut, where they work, vote, and pay taxes, and will benefit from all of these policies. These adult students are seeking opportunities, and that's what higher ed provides for them. But all of our higher ed unions are seeking long overdue improvements in our working conditions and compensation. We support your students and families, and we need the working conditions for success. At Charter Oak, we're seeking $1.4 million for pay equity with our state college, university, and college partners across the state. The needs of other faculties and staff need support too. In Connecticut, we're sitting on historic reserves of funding that need to be allocated, and yet these situations arise in one of the wealthiest states in the country and in the history of the world. Tax the billionaires, lift the fiscal guardrails, and fund higher education. It'll be worth it in the money and the effort. We don't live in a Dickens novel. Higher education shouldn't be in the position of Oliver Twist begging for more, and I shouldn't be in the role of Christmas yet to come. Thank you.
Thank you. Just trying to see if there's any questions. No, thank you, Ruth, and you have a good day.
Thank you.
Next, we have Julia Pistel.
Yes. Hi, I'm here with my personal panel of little girls.
Looks great. You guys go ahead.
My name is Julia Pistel. I'm speaking as a small business owner, and I own a home here in Connecticut, and I have 3 daughters born at Hartford Hospital. I own a small theater in downtown Hartford in the shadow of luxury apartments and corporate buildings. And I'll just summarize because that is the life of a working parent. We are here to support the entire agenda of CT for Stand Up Connecticut, especially HB number 5133, taxing the ultra wealthy. In our business, everybody does better when families have a little bit more. They can, we can employ more people, we can serve more people, we can get better childcare. That's my testimony. Thank you.
Julia, you still there? Or are you done?
I am still here. Sorry, my husband
Go ahead. Go
jumped
ahead.
in.
You've been relieved. Go
Hopefully
ahead.
providing some comedy for you guys today. That is our business. So I just wanted to add that small businesses really cannot thrive without our fellow citizens, collaborators, employees, and customers being fed, safe, healthy, and educated. They need reliable transportation simply to serve small businesses and visit the downtowns that we want to be thriving. And I truly believe that if everyone paid their fair share, cities would, and towns, and every level of place where people live would be better for those residents, including the ultra wealthy, and we wouldn't have to ask for so much personal charity. So in conclusion, please support any legislation that just asks the wealthy to pay their fair share. We will all benefit and thrive together. Thank you so much for your time and for putting up with a little bit of a real working family in this hearing.
Thank you, Julia. I'm looking around. I don't see any questions, but thank you for a little levity with your adorable daughters this afternoon, and you have a good day.
You too.
Thank you. Moving on, we are going to go to Michael Mishno.
Hi, can y'all hear me?
Go ahead.
Okay. Hi, good afternoon. Thank you for letting me speak today on the issue of the several bills. My name is Michael Michno, and I'm a proud resident of Hartford, a volunteer organizer for Connecticut Working Families Power, a part of the CT for All Coalition, and I'm also a part-time staff member at CT State Manchester. I've spent the past 8 years in the higher ed system, both as a former student of CT State Manchester, a current student of CCSU, and also as a staff member for the past 6 years. I can say with absolute certainty that the problems that exist within higher ed are a direct result of the erosion of funding year after year after year that the state has done. Currently, this erosion is being made worse with the current planned cuts and already cuts made by the federal regime to things like higher education and public services. These are services that I've seen just about every single student walk into on campus rely on, whether it's food stamps, health insurance, so on and so forth. Services I've relied on myself to grow up and to even be here today speaking. And these cuts are all coming in saying that there's no money for it, while the federal government refuses to provide funding, but also will overfund ICE to terrorize our communities, to transfer wealth to the rich who frankly do not need this extra wealth, and to fund a current genocide in Gaza. It is crystal clear that the government refuses to fund and does not and is any way able to fund us, and thus we must take on that mantle ourselves as the state. We are one of the richest states in this country, and one of the richest countries on the planet. It is truly unacceptable and rather disgusting, the fact that we have to fight year after year to just get basic public services enacted. And policies and ideas that are not new. Our neighboring states of New York and Massachusetts has a 9% tax rate on the ultra wealthy. New York has a 10.9% tax rate. These are not new policies, and they're policies that have been shown to work, shown that this extra money can be funneled into public services like higher education, like K through 12 education, like health insurance, to not only keep these programs afloat, but to expand them, to further upon them, and to build an actual foundational future in investment in our state. That's why, once again, I am in strong support of CT for All Stand Up Fair Share policies. Because if y'all want to actually care about the working class people and help the people within the state, this is the very least that we can do to start to turn the boat around and to actually provide foundational changes that will help everybody. And keep in mind, everybody that is directly working, keeping this economy afloat. So we are the ones that are keeping things going. Thus, we need the assistance to survive and to continue to run our lives. Thank you.
Thank you, Michael. I don't see any other questions, so thank you for your testimony and have a good day. Next, we have Linnea Moore.
Can you hear me?
Yes, go
Hi.
ahead.
Okay. Hi. Good afternoon, honored members of the Finance, Revenue, and Bonding Committee. My name is Linnea Moore, and I'm a direct support professional at Oak Hill. I've been working in the group home setting for over 35 years now. It is an understatement to say our work sites are struggling and need additional funding from the Department of Social Services, and that requires revenue. So I stand before you today to say, please support and pass Senate Bill 100, Senate Bill 101, Senate Bill 103, 104, House Bill 5187, and House Bill 5133. These bills will all offer real solutions and will bring additional revenue into our state, but not on the backs of the workers who are here today. Instead, we are asking the top earners in the state, the ultra rich, to just pay their fair share. While the ultra wealthy are benefiting off the significant tax cuts at the federal level, thanks to the so-called Big Beautiful Bill, much of the working class is being hit with rising household costs and almost doubled healthcare costs while our wages remain stagnant. Oak Hill is a group home setting. We care for residents with a variety of disabilities. Our residents are loving, friendly, and fun to work with. We get the chance to see them grow, prosper, and enjoy life. However, we all face challenges on the job. We struggle to provide the wraparound care our individuals deserve. This can be a very difficult population to care for, and consistency is key. Unfortunately, our employer has started bringing in more temporary staff to provide direct care. These temporary staff do not know our individuals or how to care for them. They have not built relationships with individuals, making the administration of our care more difficult and less effective. Additionally, many of the temps are not trained to do or able to do a number of the tasks, from documentation to medication dispersion or driving residents. It leaves employees like me to pick up extra work, but with no extra compensation. Instead of hiring temporary staff, our group homes need to hire more permanent staff and increase the wages offered to both new and current staff to address recruitment and retention. Many of my coworkers work 2 or 3 jobs to make ends meet. For community programs like Oak Hill to be fully funded, we must start taxing billionaires at an equal level to the rest of the state. Working people are being crushed while the richest in our state continue to get richer. The solution to this is to support these bills and get them passed to give the working people of Connecticut a fighting chance. As a 62-year lifelong resident of Connecticut, I always find it so difficult to wrap my head around why one of the richest states in this country can't figure out how to support fair compensation for those who take care of the most vulnerable residents in our state. This should not be an annual fight. They are experiencing substandard care, and that is not right.
Your 3 minutes are up.
Thank you.
Please summarize.
Thank you so much. Thank you.
Thank you, Linnea.
I appreciate your time.
I don't see any. Oh, we have a question right now. Representative Haynes.
Thank you, Madam Chair. Just a question in regards to the group home employees. Are you guys state employees?
No, we are private providers under DDS. Oak Hill Connecticut Institution for the Blind is a private provider.
Okay. Are all the group homes private providers?
Yes, except for the state, of course.
Okay.
Yeah.
Okay. Thank you so much.
Yeah, you're welcome.
Thank you, Madam Chair.
Thank you. And thank you for your testimony, and you have a good day.
Thank you. You too.
Next, we have Michaela Emlison.
Can you hear me? Can you hear me?
Hi, Michaela. Go ahead.
Okay, thank you. Good afternoon, everyone. My name is Michaela Emelson. My pronouns are
Michaela, can you turn up the volume from your end at all? It's hard to hear you.
I think I'll just try to speak a little bit louder, if that's okay.
You're very low, but you go ahead.
My name is Michaela Emelson. My pronouns are she, her, and I live in Bristol, Connecticut, territory historically stewarded by the Tunsis, Mohican, Pagusset, and Wappinger peoples. I currently volunteer with CT 5051, and I am here to share my story to encourage you to ensure that Medicaid retains its funding by reforming state tax and spending structure in order to compensate for the decrease in federal contributions. On April 27th, 2022, I was the victim of a hit and run. I broke both arms, both legs, 6 vertebrae, my pelvis, and 3 ribs, and had several internal organ injuries, including a traumatic brain injury that left me with memory issues for several months. For 8.5 months, I lived in several different medical institutions. At one point, I was in a nursing home, bedbound, unable to bathe myself, unable to sit up, stand, or walk, unable to use a toilet or even a bedpan, forced to use adult diapers and requiring nurses and CNAs to change me. United Healthcare decided that I was recovered enough to go home and decided that they would stop covering my inpatient care. My parents, doctors, and physical and occupational therapists fought them for days on end, but they wouldn't budge. Medicaid is the reason that I was able to continue receiving the care that I desperately needed. Medicaid is the reason why I was eventually able to transfer to one of the best rehab hospitals in the state. My parents made good money in great jobs. My mom as a public school teacher and my dad as a social worker, both dedicating themselves to serving Connecticut residents for more than 20 years each. That being said, even for them, if I didn't have Medicaid, they would have had to burn through all the savings they had and then some. On paper, my medical bills were in the millions. Medicaid is the reason why my family was not financially ruined. Medicaid is the reason why, even though I am permanently disabled, I still have a decent chance at a happy, successful life. I hope that you will join me in working to make sure that all Connecticut residents are able to access the care they need by reforming state tax and spending structure in order to compensate for the decrease in federal contributions. Thank you for the opportunity to share my story.
Thank you, Michaela. Just looking to see if there's anyone, and we're grateful you're here and that you're healthier. And thank you for your testimony. Up next, we have Costanza Segovia, joined by Norma Martinez and Ed Hawthorne.
Dear members of the Finance Committee, my name is Norma Martinez Hosang, and I live in Hamden. I am the director of the Connecticut for All Coalition, and I'm happy to be sharing the stage here with Ed and Constanza. And we are testifying in support of our fair share policies that include HB 5187, HB 5133, SB 101, SB 103, and SB 104. And we thank you for hearing from us today. We shifted stuff around so that we could do panels as you suggested. But as you could see, our coalition is passionate about the issues because for years now, we've been working on similar proposals because our coalition partners come year to year asking for more funding for public schools, for higher education, for healthcare, for mental health supports. And this was before what we're seeing now with the Trump tax giveaways and tariffs. And we are very, very worried about what that's going to mean for communities that were already struggling before these cuts were announced. So I will pass it over to my colleagues, but I just wanted to say that just to end, that the people who are showing up today here in person and in Zoom represent hundreds of thousands of people who are feeling the same across the state. And that we are offering, you have in front of you, you all have worked on these proposals, a menu of choices that we could choose from. One of them, the HB 5187, doesn't require raising revenue. It's the policy to adjust the state fiscal controls, and the others do. But they would capture some of the money that the ultra wealthy are getting after the benefiting from the Trump tax cut. So I'll pass it over to Constanza. Thank you.
Hi, everybody, and thank you for your time. I'm Constanza Segovia, Organizing Director of Connecticut for All. I wanted to share, besides what you've been hearing from everybody, we've really been organizing in every corner of the state. We've had a series of regional meetings that I know many of you participated in your towns and districts. And we have been hearing very clearly from everybody, truly every corner, that day-to-day life in the state is becoming truly unaffordable and just plainly not livable. And a $200 one-time rebate does not get us where we need to be. We want life to be affordable, and what we've heard from members is that people want to just spend time with their kids. They want to take care of the aging parents. People who are having 2 or 3 jobs because they can't make ends meet just want to be able to take a vacation. And that's what people are experiencing. People want to be able to have access to retirement. We really think that these sensible policies at this critical time, where a lot of policies that are not sensible are being put in front of us, and we're having to deal with ICE taking over our neighborhoods and people with disabilities looking at potentially losing their healthcare coverage that is truly life-saving. Like, people will die if they lose their Medicaid. We really need to consider what our state can do. These policies are not a force of nature. They are not an inevitable hurricane that is devastating our communities. We have the power to stop this. You have the power to stop this. And we can do this by creating new sources of revenue or by choosing to spend more of the budget surplus and modifying the guardrails. These policies, especially the tax policies that we've been talking about today, are doable and they're popular. They've already been passed, similar policies in Massachusetts, New York, Vermont, and New Jersey. California, Hawaii, Illinois, Michigan, New York, Pennsylvania, Rhode Island, Virginia, and Washington State are looking at proposals in their own legislatures right now to confront the same problems that we're confronting here in Connecticut. It's just something that makes sense. The last thing I'll say is that that hasn't come up, right? Other than the cuts, it's not just the decimation of our social safety net, but Trump's tax giveaway to the billionaire class has made it so that every family in our state is expected to pay for these reckless tariffs that they've put on, right? So with every purchase, we are paying more and more. So again, we don't all feel it the same way. I think there's something that we can do to make things a lot more equitable in our state. And I hope that after hearing from all of us today, you'll take action this session.
Good afternoon, everyone. I know it's been a long day already. I'm Ed Hawthorne. I'm proud to serve as the president of the Connecticut AFL-CIO, Federation of Unions representing approximately 250,000 union members here in the state of Connecticut. I'm proud to stand with the Connecticut for All coalition here. Connecticut's tax system asks the most of people who have the least. Lower middle income households pay a far greater share of their income in taxes than the highest earners, and that imbalance shows up in our schools, our neighborhoods, and the opportunities that people have to move up in the world. Working families cannot thrive when a zip code determines their future. When we ask the ultra wealthy to contribute more, we are not punishing success. We are investing in the stability and the future of the entire Connecticut community. Recent federal tax changes delivered enormous windfalls to billionaires and high-income households, while working families have once again been left behind. Connecticut has both the responsibility and the opportunity to recapture a portion of this windfall and put it to work, because DC shouldn't determine the opportunities that we have here in Connecticut. Right now, our tax code treats money making money more favorable than people making money, taxing capital gains at a lower effective rate than wages. We don't have a shortage of resources in the state. We have billions of dollars in surplus. We have billions of dollars in a rainy day fund. We lack the will to actually do something with that money. And I understand the fiscal guardrails. I do. They're necessary. We're asking to tweak them in this proposal. We're not asking to wipe them away. We're asking you to realize that there is a need, because concentrated poverty is a policy choice. We push our poor into the cities. And if you look at the mill rates of the cities, you can see that. It's in black and white. Hartford, 74. New Britain, 53. East Hartford, 50. Darien, under 17. Greenwich, under 12. Salisbury, approximately 11. Equity requires revenue. And that's what these policies do. But without adjusting those fiscal guardrails, we never get to the equity that I think that we all agree that we're seeking here, which is equity and fairness in our tax structure. So thank you all for your time. We'll be happy to answer any questions that you might have.
Thank you, Norma, Costanza, and Ed. I'm just looking to see if we have any questions. I don't see any online. Thank you for waiting for your time here in the room, and have a good weekend.
Thank you too.
Thank you. Next we have Jade Thomas. No. Okay, we're going to move on, and we're going to go to Isabel Barber. No. Okay, we're gonna keep moving. This is fine. Sina Wazer. Okay. Sina, can you join us?
Hi, yes, apologies about that.
It's okay, go ahead.
Thank you. Good afternoon. My name is Sana Weezer. I am from Mansfield, Connecticut, although I'm currently based in New Haven, where I'm pursuing my master's degree at Yale School of the Environment. I'm here today to testify in support of Connecticut for All's Stand Up Connecticut Fair Share policies. Together, these policies would begin to correct the structures and systems that make Connecticut the second most unequal state in the entire nation, allowing the ultra-wealthy to profit while much of the rest of the state struggles to get by. That disparity is deeply alarming to me as someone who believes in justice, but also as a young person who wants to stay in Connecticut. Connecticut, as it is now, penalizes the working and middle class while rewarding the rich. Under the Trump administration, those divisions have only become deeper, from the administration's actions cutting SNAP to cutting Medicaid. And so Connecticut must step up. We need action at the level of the issue we face. That means addressing urgency in this moment, as well as the long-term issues that have created deep and systemic inequality. The fair share policies would begin to do that. I spend most of my time in my education and outside of it focused on climate change and what we need to do to avert catastrophe. I do that work because of the family farm I grew up on and my concern for how climate change will impact it. I do that work because of the fear I felt at 14 when I first understood that this was an issue that would fundamentally shape the rest of my life and the world that I live in. But the thing about climate change and its impacts, which we are failing to control appropriately, is that they also fall along lines of inequality. From how income determines people's ability to respond to extreme weather, to race and class determining the kind of air that we breathe. And so when I look at a state like Connecticut, I wonder what kind of future, what kind of present we are creating. Is it one where a school teacher like my mom, a family farm, or the 40% of Connecticut families who are struggling to make ends meet have to wonder what the future looks like if they'll be able to afford it? You all have a chance to meaningfully move Connecticut in the right direction and stand up to the Trump administration, or to allow these inequities to continue to deepen. I strongly support Connecticut for All's Stand Up Connecticut Fair Share policies and hope that you will join us in making Connecticut's tax system more fair. Thank you.
Thank you, Sana. Don't see any questions here online, so thank you for your testimony and you have a good day.
Thank
you. Next, we have Erica Vladimir.
Hello.
Go ahead.
Good evening, Finance Committee members. My name is Erica Vladimir, and I am the Legislative Manager at the State Revenue Alliance. We're a national organization that supports a network of state policy, grassroots, and labor organizations that are looking to build winning campaigns for equitable tax policy on the state level. And I'm here today as a 2009 UConn alum, I wanted to add, testifying in support of Connecticut for All Stand-Up CT Fair Share policies. And look, it's really no secret that states across the country are facing major funding challenges as a result of HR 1. But the good news is that state legislatures are in a unique position to go beyond piecemeal plugging of funding holes. And this is actually already being done nationally. And I know some folks who have testified have, rattled off some states. I want to go into just a little more detail. Colorado has held a special session over the summer to close tax exemptions for businesses and increase revenue by selling deferred tax credits. Maryland enacted new personal income tax brackets for high income earners and a surcharge on capital gains for the top 1%. Maine, Montana, New Jersey, and Rhode Island all took steps to increase revenue from high income homeowners. Washington added a small increase to their successful capital gains tax for capital gains incomes over $1 million. And some states, including New England neighbors, have disconnected their tax codes from the Internal Revenue Code. We call this decoupling. And this helps them avoid losing state revenue due to new tax cuts and deductions that were built into HR 1. And more states are already reviewing and advancing similar bills that are in the Stand-Up CT agenda, like New York, which is considering raising the top marginal personal income tax rate and corporate taxes. There's also a ballot initiative in California to tax the net worth of billionaires. Washington's Governor Ferguson, supports a tax on incomes above 1 million, and Rhode Island's Governor McKee, is open to a surtax on incomes over 1 million. And look, we know that these policies work. In 2001, New York slightly increased personal income tax marginal rates and corporate taxes, and this has generated $3.6 billion in new revenue each year. Massachusetts' 2002 Fair Share Amendment is generating $3 billion a year. That's increasing money for public education, roads, bridges, and public transportation. And so all of the examples that I just pointed to, they're very similar to what the Stand-Up CT policies will do, which is help generate new stable revenue to fund communities all across Connecticut. So I'm happy to take any questions, but really appreciate your time. And I hope everyone's drinking water. It's been a long day.
Thank you, Eric. I think we're all staying hydrated, I hope. At some point, we should all probably stand up, which we'll probably do soon. Does anyone have any questions for Erica? No, I don't see anything here online.
Okay.
So thank you for your testimony.
Of course. Have a good night.
Thank you. Next, we have Tara Volpe. No. Okay, we're going to move on to Nicole Nelson. Nicole, unmute yourself, please. It's okay.
Hi, can you hear me?
Yes, go ahead.
Okay. Dear chairs and honorable members of the Finance, Revenue, and Bonding Committee. By way of introduction, my name is Nicole Nelson, and I am a city councilwoman in the city of Bridgeport. I am also an adjunct professor for Connecticut State Community College Norwalk campus, and a proud 4Cs SEIU member. I write to you to respectfully urge you to fully release and allocate sufficient guardrail funding under the House Bill 5187. Sufficient allocation of the guardrail funds would be a transformative investment and a foundational effort in pre-K through higher education reform, affordable housing development, and expanded healthcare options for working and middle-class families in our state. HB 5187 reflects a recognition that fiscal guardrails must not become barriers to long-term economic stability and shared prosperity. With rising housing costs, childcare and tuition expenses, and increased healthcare premiums, Connecticut families are working harder than ever to sustain. I believe that a responsible use of the surplus funds presents a critical opportunity to strengthen our communities. without compromising fiscal discipline. First, meaningful education reform requires sustained funding support, investments in early childhood education, continued support for special education cost sharing, equitable ECS distribution, and expanded funding support of our public higher education systems directly strengthen the pipeline to college, career, and workforce development, which leads to long-term economic stability. When we underinvest in our schools and colleges, we limit opportunity for the very families striving to remain in Connecticut. Second, the housing crisis continues to strain working families. Affordable housing shortages drive up rent costs, increasing the risk of unstable housing, which then threatens to place our children under McKinney-Vento status, which then also makes it harder for families to maintain employment. There needs to be a strategic allocation of the guardrail funds toward housing trust programs, which provide incentives to small-scale landlords and municipalities that would then stimulate the economy while creating attainable pathways to home ownership and even stable rental options. Expanding health care for working and middle-class families is not only morally imperative, but economically sound. This so-called big beautiful bill has put Connecticut taxpayers at a disadvantage. Insufficient fiscal support at the federal level has driven up premiums, forcing families to make the decision of either paying out of pocket or delaying care altogether.
Your 3 minutes are up. If you could please summarize.
Sure. Recognized as one of the wealthiest states, we are one of the most divided economically. Connecticut has already demonstrated fiscal responsibility. Now this is the time to ensure that those gains translate into tangible improvements in our communities. Again, I respectfully ask that the committee prioritize sufficient allocations to support education reform, affordable housing initiatives, and expanded health care under its implementation of House Bill 5187. Thank you all in advance for your leadership and your service to the people of Connecticut. I appreciate your consideration. Any questions?
Thank you, Nicole. I don't see any questions here or online, so thank you for your testimony and you have a good day.
Thank you.
Thank you, Representative Rader. I'll give you back the helm in a moment. I just would like to say it's been brought to our attention that there may be 2 folks in the room who have been patiently waiting to testify. And while those who are at home or at work have been equally patient, but I think it's important that we recognize those that have been sitting here for a good part of the day, that we give them an opportunity, even though it may be out of turn, to testify now. And then, I mean, we know that there'll be people coming back into the room. That's just the way it works, but we'll do our best to balance those as fairly as possible. But Representative Rader, I think you know who the 2 are.
So we have Carol Williams, and then that would be followed by Karen Caffrey. Okay, great. Thank you. Thank you, Mr. Chair.
Good evening. Good evening, everyone. Thank you for that consideration. I'm Dr. Carol Williams, and I'm here to speak in favor of the Senate Bill 103, the child tax credit. But having heard all the voices from Connecticut for All, I'm persuaded that the other bills that are before you are also incredibly important. Before I retired, I was Associate Dean of Continuing Education at Eastern Connecticut State University. And our students in continuing ed were just like the ones you heard about from Charter Oak, working adults, working families. And so I know the financial struggles that they face. In my written testimony, I spoke about why our state income tax is not a family-friendly one, because families with one person in them, 2 people in them, are paying the same tax as families with 3 or 4 kids. And that's a problem that I think we need to address. But today, given the hour, I thought I would just share the struggles of a family that I know quite well. And you've heard many of those lived experiences today. This is just one more, but you've heard from quite a few single parent moms. And this happens to be a single dad who is a neighbor of mine and has become a friend. I live in Willimantic, by the way, I should have said. This man has shared custody of his 3 children. He's in his mid-40s. He's a skilled metal worker. He's been working full-time every day since he graduated from Windham Technical School. And his gross income now is about $45,000. He has been paying $1,200 a month for a 3-bedroom apartment in Willimantic. But recently the building was sold. And a month later, he got a rent notice that his rent was being increased to $1,500 a month, which is a 25% increase in his rent overnight. So he and I both looked for other apartments in Willimantic, which is not a high rent district. There's nothing, that apartment is a bargain. There's nothing in that price range that's available. So now he's paying $1,500 a month. That's $18,000 a year, which is 40% of his gross income. And he has 3 kids. He's struggling very hard to give his kids a stable family life. But you've heard today, you know, how much it costs to feed kids and after school care and all of that. So far, he's never missed a rent payment. But when people like him are short of money at the end of the month, what is it they do? They end up charging food and charging other necessary expenses, car repairs. And then you know what happens. If you don't pay that whole bill at the end of every month, then you have credit card debt that over not that long, they're charging 26% interest on that credit card debt. So you just never are able to get out
You
of
reached
it.
3 minutes. Could you please summarize?
Yeah. So a child tax credit would not solve this person's financial problems in any way, but it might provide a vacation for his kids. Maybe he could pay down his credit card or send his kids to summer camp. So I urge you to consider all of the proposals before you very seriously, and I hope to see some progress. Thank you so much for your time and persistence and patience.
Thank you so much for being here and waiting and testifying. I appreciate it. And I misspoke. The other individual in the room is Michael Barry. If Michael would like to come up and testify, and then we'll get back to our continue our list.
Hi, good afternoon, chairs and ranking members of the Finance, Revenue, and Bonding Committee. My name is Michael Berry. I am from Manchester, where I was born and raised, and I am the coordinator for the Connecticut Coalition for Retirement Security. I'm here to speak today in support of proposed Senate Bill 114, an act eliminating the qualifying threshold for personal income tax deductions for Social Security benefits. My coalition represents the concerns of retirees across the state, and Social Security continues to be a primary income source for many retirees. Our current law exempts up to $75,000 for a single person, $100,000 for a married person, for entire AGI for a retiree. Eliminating the income threshold for Social Security would put a lot more money into Connecticut's economy and provide help for residents who are on fixed incomes, have health issues, prescription drug costs, and could enable more people to stay in their homes. Although I understand that this bill will not affect the overall retirees' AGI for purposes of Connecticut state income tax, it will greatly affect retirees to keep many of them in Connecticut, as well as protecting our most vulnerable residents who rely on Social Security as their only retirement income. The retirees I meet with around Connecticut are very concerned about retirement security. Retirement security makes them feel safe in their homes and their communities, and our quality of life is diminished if we do not feel safe. I originally thought that this would affect the overall AGI for state income tax, but I learned in the last 8 hours that it doesn't. But I included some information on pensions in Connecticut. And I thank you for raising this important bill and for allowing me to be with you today. And I'd be happy to answer any questions you might have.
Thank you so much for your patience and your testimony today. And Representative Doucette would have a question for you.
Thank you, Mike. Thanks for your patience and being a great constituent of mine. Bringing this issue to us. We haven't heard as much about it today, but it's an important one. And since I've been here, it's been a constant one. And I have a lot of constituents who contact me about this. And we've chipped away at it, as you know. And there are, different ways to go about it. We had what we called a cliff, and I think we now characterize it as a slope or something of that nature, because there is a graduated schedule up to 150 now for married filing jointly. But there's a variety of ways that we could go about this. You pointed out something again with respect to pension income. The bill, which is just a proposed bill, mentions Social Security, which obviously is important and probably the largest percentage of retirement income in terms of who's collecting it. But your testimony, as I understand it, is also to apply to all other retirement income that we currently exempt below those thresholds. So that's a pension income, also IRA income. Is that fair to say? So basically you want us to expand what we already have and to expand the thresholds.
Yes, if possible, of pension, 401ks, annuities, those sorts of things.
Yep.
Would be very valuable to retirees.
Yep.
And keep them in Connecticut and keep them secure.
Okay. And I mean, we treated them with different policies over the years too, but I think another thing that's happened as we worked on this is to kind of treat it uniformly as, those forms of income sort of diversify and have changed over time, right? Pension income is not as prevalent as, the IRA income is as means of support for our seniors. So it's important to hit them all. So thank you again. Thank you for your patience. Thank you, Madam Vice Chair.
Thank you, Representative. And I do see that Senator Rahman's online. I'm not sure if he has a question for our guest. Senator Rahman, go ahead.
Yes, Madam Chair. Thank you. I really appreciate it. Michael, Good Friday. Thank you. Thank you for being there. And actually, I left. I had a number of other meetings, 3 public hearings. So thank you for your outstanding testimony, my friend, and thank you, and happy Friday. Okay. Thank you, Madam Chair.
Thank you, Senator. And thank you for your testimony today.
Yeah, thank you all so much. Thank you.
You're
very
welcome.
much.
Have a good day. Okay, so I think everyone in the room has been heard from. So we're going to go back to our online community here, and we are going to go back to Tara Volpe.
Hi, everyone. Can you hear me?
Yes, go ahead.
Okay, perfect. So I will be very brief. I am in support of 5187 and 5133 and Connecticut for All's fair share policy. People are hurting. You've heard it all day. I've been listening and people are hurting. And safety nets are really, they're critical. I can remember when I was in college and I had to pay my own rent. I was working 2 jobs, and I can remember standing in a grocery store with like $5, and that's all I had. And I was making decisions in the grocery store about what am I going to do? This was, back in the Stone Ages. There weren't any safety nets then as well. And now we're even feeling it. Our own family is feeling it because our health insurance has gone up $1 gazillion. But people are experiencing these things all over the state. We need to generate more revenue. We need to help people, and we need to create more safety nets. And quite frankly, like we knew this was coming from the federal government, and we could have prepared sooner. So I hope that we can do what we need to now to help folks over these next several years. That's it. Thank you so much.
Thank you so much for your testimony. Just looking to see if we have any questions. No, thank you. And you have a good day.
You too. Take care.
Thank you. I'm just going to move on and we're going to go to Audra King.
Hello, can you all hear me?
Yes, go ahead, Audra.
Awesome. So good afternoon, members of the Finance Committee. My name is Audra King. I'm a professor at Central Connecticut State University, a member of CSU AUP, and a part of Connecticut for All. And I'm here in strong support of the Stand Up CT Fair Share package bill. I want to speak plainly about what I see every day. I teach in New Britain and I live in Hartford. And every day I move between these communities that expose the economic fault lines of our state. Connecticut is one of the wealthiest states in the country. We've heard this, all day. Yet in Hartford, more than 1 in 4 residents live in poverty, and child poverty is even higher. Home ownership is out of reach for most families. Meanwhile, extreme wealth continues to be protected and reinforced by public policy. So this is essentially inequality by design. I'm a full-time professor with a doctorate. I did what we tell young people to do: study hard, earn advanced degrees, work in public service. And I do not have a realistic path to homeownership. Rent consumes a significant share of my income. Student loan payments make saving difficult. And I do my best to provide financial assistance to my parents and my niece amidst rising food and healthcare costs. Meanwhile, every month I build someone else's equity while my own long-term security erodes. And so if it's true for me, imagine what it looks like for the cafeteria worker, the paraprofessional, or the adjunct faculty member earning a fraction of my salary. Working class people are doing the labor that keeps this state running. They staff our hospitals, they drive our buses, they stock our stores, and they teach in our schools. They produce all of the value. They generate all of the wealth, but they are not the ones who capture its benefits. And then there are my students. Many of them are first-generation college students working 25 to 40 hours a week while attending CCSU full-time. Some help their parents pay rent. Some are raising children or caring for siblings. When rent increases, when hours are cut, when childcare collapses, it is their education that suffers. And they're struggling because the cost of living rises faster than wages, because housing has become an asset class instead of a human necessity, and because public policy continues to prioritize capital over labor. Connecticut has effectively manufactured austerity. Our policies shield wealth at the top while shifting the burden downward onto working families. And in a state governed by a Democratic trifecta, that contradiction deserves honest scrutiny. Policies that protect concentrated wealth while underfunding communities don't reflect progressive values. So the fair share bills, I feel like, begin to actually correct that imbalance. A refundable child tax credit delivers direct stability to families. Raising the top marginal rate and establishing a capital gains surcharge asks those who have accumulated the most to contribute proportionally and responsibly. That's what reciprocity is about.
You've reached 3 minutes. You could please summarize.
Yep. Working people already pay. The question before this committee is whether wealth will pay as well. So I urge you to support the Stand Up Connecticut Fair Share agenda, and I thank you for your time.
Thank you, Audra. I don't see any questions here or online, so thank you for your testimony and have a good day. Next, we have Himani Pattison.
Hi, can you hear me?
Yes, go right ahead.
Thank you. Good afternoon, members of the Finance Committee. My name is Himani Patisam, and I'm a student in New Haven, Connecticut. I'm a member of the Husky for Immigrants Coalition and part of the Connecticut for All Coalition. I support Connecticut for All's fair share policies, HB 5187, HB 5133, SB 101, SB 103, and SB 104. I'm currently a graduate student at Yale School of Public Health studying health policy. My research has focused on adverse childhood experiences and the role of law as a structural determinant of children's health and well-being. Adverse childhood experiences, also known as ACEs, are negative experiences during childhood that affect children's growth and development and can lead to physical, mental, and behavioral health problems. ACEs are a public health crisis that contribute to reduced life expectancy and increased healthcare costs. And we know that population-level social policies have been shown to be a protective factor that reduces the likelihood of these experiences from occurring. In my written testimony, I've included additional information on the risk factors and the detrimental health effects of ACEs that can transcend generations. The good news is that there are community protective factors that can support children's well-being and decrease the likelihood of children experiencing ACEs. These factors can include access to economic and financial help, access to medical care and mental health services, safe and stable housing, and access to safe childcare and high-quality preschool. Families that have the social safety net that supports them in meeting basic needs of food, shelter, and healthcare are better able to empower their children to learn, grow, and contribute to their communities. Funding social safety net programs is critically important, not only to support Connecticut families today, but for generations to come. These policies will build stronger support infrastructures to recognize the opportunity for all Connecticut residents to live safe and healthy and happy lives. In our current federal climate, it's even more crucial for people in power at the state level to use the law to build better systems to serve the people. Connecticut for All's Stand Up Connecticut Fair Share policies have the potential to generate more revenue that could be used to fund what Connecticut families need: housing, childcare, healthcare, public education, food assistance, and transit systems and infrastructure. Raising revenue is necessary to meet the needs of hundreds of thousands of people in Connecticut in an equitable and sustainable manner. And if we seek to replace some of these federal investments with new revenue sources, we must be able to spend it. We must reform the fiscal guardrails in order to respond to the attacks to our safety net from the federal administration. I strongly support Connecticut for All's fair share policies, and I hope that you will join us in making Connecticut's tax system more just. Thank you for the opportunity to testify today.
Thank you, Himani. I'm just looking around. I don't see any questions. It's always nice to have students coming to testify. So thank you, and you have a good day.
Thank you.
Next, we have Ogbi Idrovo. No. Okay, we're going to move on. We're going to skip to Joelle Fishman.
Good evening.
Good evening. Go ahead.
My name is Joelle Fishman. I live in New Haven. I'm submitting testimony on behalf of the Connecticut Communist Party and with the Connecticut for All Coalition in support of HB 5187, 5133, and SB 101, 103, 104, the Stand Up Connecticut Fair Share Agenda, shaped to address the extreme inequalities of wealth and race in our state, and that have now come to a huge crisis as a result of federal policies. Already, as we know, 40% of families are living on the edge. Now, as a result of H.R. 1, Connecticut will lose $1 billion in federal spending, while the top 1% will continue to gain. Already, under the last Trump administration, Connecticut's top 1% saved $1.2 billion in federal taxes. These 5 fair share bills become an immediate imperative. It's urgent the fiscal guardrails be lifted. It's urgent the windfall the wealthiest few are gifted be redirected so our state collectively can not only survive but also flourish to benefit everyone. When the federal government fails the needs of the majority, it's the responsibility of state government to intervene, as many states are doing. We're being hit by a cruel manufactured disaster. As a state, we must pull together to avert an unprecedented level of devastation. That is the front line to defend democracy. The middle and low income working class majority of our state, whose work creates the wealth, are looking to the General Assembly. Is Connecticut going to allow our neighbors to go hungry without medical care, without public education? Or are we going to come together and protect families and communities and our economy? 30 years ago, we in the Coalition to End Child Poverty in Connecticut showed the result of regressive tax policies is to disallow our children and families the opportunity to flourish. We proposed a surtax on the wealthiest to provide the funds to end child poverty. During the pandemic, when the child tax credit was implemented, child poverty went down by half. The child tax credit before you today will benefit 75% of all Connecticut families, more than 550,000 children. How shocking. Low and middle income families, many essential workers struggling to survive, they're paying a much higher percentage of their income in taxes than the percentage of income paid by billionaires and multimillionaires. Let's flip the script. Let's become a model state for tax fairness and budget priorities dedicated to economic and racial equality. We have the duty to uphold our democracy and say no to policies that rob ordinary people to benefit a few. A first step to address the wealth and racial inequities in our state are the fair share bills, which I urge you to pass. And thank you very much.
Thank you, Joelle. I don't see any questions, so thank you for your testimony and you have a good day.
Thank you, you too.
Next, we're going to move on to Jafet Gonzalez. No, okay. Then we're going to move on to Rob Traber.
I'm here.
Yes, go ahead.
Thank you. My name is Rob Traber. I am a former parent and current grandparent of a child in the Bridgeport Public Schools, a former union organizer, and a former Bridgeport teacher, and a current member of the Bridgeport Board of Ed. As a member of the Connecticut for All Coalition, I speak today to support the bills to adjust the guardrails and create new sources of revenue by increasing taxes on our wealthiest residents. Many speakers today have explained why these positions are justified economically. I'd like to speak to the moral imperative in honor of my father, a Republican. I'm an Army brat. My father, a graduate of West Point in 1946, met my mother through her brother, who was a D-Day graduate at West Point. They both taught there later, my father economics and political science. Ours was a bipartisan household. My mother, the child of Irish immigrants in Boston, was a good Democrat. My father from Natchitoches, Louisiana, was a good Republican. Though I have been a registered Democrat since I qualified to vote in 1971, I credit both of them for the values that guided my life. My father was an old-fashioned Republican, fiscally conservative and socially liberal. Before he left us, we used to go visit him every February out in California. As a vice president and president of the BEA, I'd spend hours on the phone while he napped, working to figure out how to get more money into the budget for our schools. It was very frustrating for me, and I remember venting to him when he'd wake up from his naps, and he listened, and then he explained to me. The problem we had in Connecticut was that we only had one source of government by which we could redistribute wealth, the state legislature. In most every other state in the country, there were two forms of government to redistribute wealth, a state legislature and a county government. We lacked the latter in Connecticut. And so he said, it was something that I had never noticed, having lived here almost my entire adult life, that we lacked that second means of redistributing wealth. And from his point of view, as a Republican, he thought it was a moral imperative of government to redistribute wealth. And that we lacked one of the ways to do that. And so he was very matter of fact about it with me, that it was government's obligation to redistribute it and that we didn't have the way to do that properly. And we had one arm tied behind our back. And back then, this was about 15 years ago, Connecticut was stumbling out of the economic downturn in 2008. And as we did, when we finally recovered, we didn't deal with the 2013 freezing of the baseline for ECS, but we have recovered now.
You've reached 3 minutes. You could please summarize.
And so it is time to increase. I believe that it is our obligation, our moral obligation, to support the package that's being pushed by Connecticut for All. So I would urge everyone to do so. The governor has said we don't need money, but we do need money, and money is at the baseline of that. And so I believe these bills deserve your support. And as my father would have said, it's the job of government to do that because we can't count on the wealthy people to do it themselves. Thank you.
Thank you, Mr. Traber. I don't see any questions, so thank you for your testimony and have a good day.
Thank you.
We have one other person in the room that we are going to elevate to testify now, so they can get home safely, and that's Christopher Davis. I can't hear you. Yeah.
Oh, thank you very much for the opportunity to come and testify before the Finance, Revenue, and Bonding Committee. My name is Christopher Davis. I'm the Vice President of Public Policy for the Connecticut Business and Industry Association, the state's largest business organization with thousands of member businesses, of which 90% are small businesses here in the state. I wanted to testify in support of House Bill 5060, an act concerning the apprenticeship tax credit. I think Representative Acker did an outstanding job earlier here today talking about this bill, and it's a critical and overdue adjustment of increasing the apprenticeship tax credit to an amount that better reflects the costs incurred by employers when training apprentices. And I concur and encourage the committee to ensure that pass-through entities, especially in the construction trades, have access to this tax credit as well, as they are currently ineligible. I also wanted to testify in opposition to House Bill 5187, an act adjusting the fiscal guardrails. As we all know, that Connecticut's fiscal guardrails, particularly the volatility cap, are foundational to restoring the confidence in the strong state's long-term fiscal health. Predictability and stability are so critically important for our economy to be able to grow here in the state and for businesses to make investments here in Connecticut. The cap proposed here actually sits above the projected revenue in the out years based off of OPM's projections, which means if this cap was to be adjusted as proposed in this bill, we would actually have zero savings, zero, no money going into the rainy day fund, no money going to paying off pensions, no cushion for when revenues fall. And under the current cap, our state can weather a mild recession. But as you can see in the detailed data that I provided in our written testimony, even in the most mild of recessions with this cap adjustment that's proposed, we would be left needing to fill a massive state budget deficits if this were to go into place. 5187 replaces this current threshold, and it's important to recognize that we have seen significant growth under the volatility cap. Originally was based at 3.15 billion. Now it is projected to be significantly more than that. And a 5-year average would actually allow for over $2 billion in additional spending over that time to be available under the existing current cap. So by making this adjustment, we're actually putting the cap above revenue projections in the greatest of times, let alone what could possibly happen over the next few years that could cause those revenues to significantly decrease. So I would suggest that it is not in the best interest of the state of Connecticut nor this committee to move forward with this legislation, for that it would create significant budget shortfalls in the out years and leave little money going into the rainy day fund and expose us to potentially significant budget cuts in the out years if a recession were to hit in even the most mild of recessions.
You've reached 3 minutes. Please summarize.
With that, I'm happy to take any questions.
Thank you. And I think there are a few questions for you, Representative Horn.
Thank you, Vice Chair Ritter, and thank you for the work you're doing. Hi, Chris. Nice to see you. I wanted to ask you, follow up a little bit on your testimony on House Bill 5060, the apprenticeship proposal. And I'm guessing I know your answer to this, but I want to give you an opportunity. When Representative Ackert was talking about this, he, in addition to the proposal to change the credit from 4,000 to 7,500, he also noted some additional conversation he had about extending it beyond, C Corps to pass-through entities and such. And I wondered whether you had a position on that.
Yeah, in fact, it's actually part of CBIA's policy solutions agenda this year to allow for these apprenticeship tax credits to expand to pass-through entities. And the importance behind that is that currently only manufacturers that are pass-throughs have access to the apprenticeship tax credit. So they were carved out a few years ago and given access to this. All of the other trades and industries in the state, plumbers, electricians, you could name it, hairdressers, everything that falls under the apprenticeship tax credit program, if they're pass-throughs, they do not have access to this tax credit currently. So those small businesses, especially that are structured as pass-throughs, do not have access to this tax credit.
Thank you for clarifying that. I wasn't sure about the status of the tax credit for manufacturing that passed. that
But I'll
applied to
say,
past years as
and
well.
if I could add to that,
Yeah.
to that point, within the tax credit itself, the apprenticeship programs only cover a certain number of apprentices or training jobs that would be in those manufacturers. So not every manufacturer, whether they're a C Corp or a pass-through, would have access to this if their employees aren't a CNC trainee, a tool and die trainee, a plastics molding trainee. If there's something else, they wouldn't have access to the apprenticeship training program, and thus they wouldn't have access to the tax credit that's associated with it.
Great. Thank you. Thank you.
Thank you, Representative Horn. Do we have any other questions on the panel? Representative Claris Teacher.
Thank you very much. Thank you, Chris, for being here today. And as former ranking member of finance, you understand exactly what goes on in this committee. As far as I'm sure you've been listening to the testimony today, have you heard some misinformation on what people are saying just about the volatility cap and what can happen if these numbers are changed in this bill here today?
I think some of the context of the testimony today in describing that somehow we have been handcuffed as a state and incapable of spending additional revenue or additional money in general is just not true. Over the last 5 years in the general fund alone, the state government has increased spending by almost $3 billion. And total funds, including all the federal funds that came in, has been over $7 billion over those 5 years. So the idea that the volatility cap somehow has restrained the spending to the point where we're incapable of funding these core services is inaccurate. There's been significant increases in revenue available for spending under the general fund over the last 5 years alone, let alone looking back to when the volatility cap was put into place. So I think the idea that this cap needs to be adjusted again after only being adjusted last year and rebased going forward to the tune of $600 million in an increase in the basing for this current fiscal year there is significant spending increases already built into the existing cap as long as personal income growth continues to grow.
Thank you for that explanation. So you feel this would be a severe disservice to the state of Connecticut if we change this volatility cap at this point?
Especially under the proposed formula. So if you take a look at my written testimony, there's a chart in there that kind of lays it out pretty clear that if you were to do this, you would have zero transfers to the rainy day fund, zero, and that's under the existing cap. The bill actually proposes raising the cap on the rainy day fund, which would be unnecessary because you would have no additional revenue going into it. And you would actually put Connecticut at a real challenge if we were to face even the most mild of recessions, where we would have to backfill potentially hundreds of millions, if not billions of dollars worth of services that would be funded out of the general fund. And that's after you already get rid of the $4 billion in the rainy day fund that currently exists.
Okay, thank you. I agree. I don't think we work so hard to get these caps where they were. And it's because of those caps and that true bipartisan budget in 2017 that got us to where we are today. So I don't think it's would help the state of Connecticut financially or fiscally to weather those bad days that we know will be ahead of us at some point. But thank you again for your testimony.
Sure. And to your question, if you were to look at what the projected revenue coming in for 2030 is, which is only a couple of years away, which is as far as fiscal years go, which is quite interesting, we'd be talking about an 85% increase in that volatility cap from 2018 when it took effect until 2030. To me, an 85% increase in the revenue that's available to be spent is quite significant, and one that is not some arbitrary number, as some conversation has been here. I was in that room. We did not pick an arbitrary number. It was a very calculated choice to set it at 3.15 billion based off of the trends of the volatile revenue. And then looking at how it's been structured going forward, we're talking about $2.7 billion in additional spending that's available under the current formula that's in place, with no need to adjust it here today to drain the rainy day fund and drain all of that revenue coming in if we were to go forward with it.
Thank you. I believe we have a question from Senator Fonfara. Oh, we'll move over to Representative Mashinsky first.
Hi, Chris. I wanted to ask you about 5060, the apprenticeship training tax credit. Will that actually fix Representative Ackert's problem, or will he still be losing apprentices and just getting some economic benefit?
Well, first, Representative Mushinski, congratulations on your announcement the other day on your retirement, forthcoming. I look forward to working with you still for the next few months, for the rest of your term. It's always been a great pleasure working with you, especially when I was here on the Finance Committee. But to your answer, to answer that question, I think it's still going to be a struggle to maintain and keep those apprentices here in Connecticut. Right now, it is a severe shortage or workforce shortage here in Connecticut. We have about 70,000 job openings here in Connecticut, several thousand of which are within the trades, which is what I think Representative Ackert was speaking to earlier here today. So to fill those existing jobs is going to be incredibly difficult because we have 10,000 kids applying to get into our technical education system each year, and only 2,000 of them allowed in. Because of just a number of spots that are available. So we have thousands of kids that want to fill those jobs, that want to enter into these apprenticeship programs, but because of some of the rules and regulations around apprenticeship ratios, which thankfully the legislature adjusted last year in a very positive way, and we're very thankful for that in a unanimous way, that more and more young people will be able to access those trades through these types of programs, but I think it will still continue to be a struggle. And then as Representative Ackert mentioned, and I do in my testimony as well, those pass-throughs, those small businesses don't have access to the credit. So they don't get to take advantage of this type of savings that they get, or offset, should I say, of the costs associated with training these individuals to take these jobs.
That was what I was thinking too, but I wanted to get your opinion, but thank you for answering.
It would certainly help. I'll say that, but it won't necessarily solve the issue until we get more young people in those training programs.
Thank you, Representative Mushinski. Senator Fanfara, did you have a question?
Thank you, Madam Chair. Hi, Chris. Good to see you.
Always a pleasure.
Just some history here that there, for the longest time on the income tax, not volatility cap, we could talk about that forever, but on the issue of the apprenticeship, the reason there was such resistance for so long of not doing anything in that regard, administration after administration saying no, is because just like the sales tax, once you start down that path, you will never go back. You know, try to get a sales tax exemption returned. Impossible. And we all know, well, maybe we don't all know, but it's true that if we did not have any exemptions, I think we'd be under 4 on the sales tax. I think only Hawaii has a policy of no exemptions. But so, not that I don't disagree with anything we can do to get more people in the trades. And the income that you can make as an electrician, plumber, what have you, host of other areas, you can make a very good living. But I just want to say here that as we take this step and we begin to chip away at, and that's what happens is you do one, you do another, and then others come back and say, well, we did it for those. That's revenue that will be lost forever. And just be aware of when you do that, you're squeezing more out of fewer taxpayers.
So in response to that comment, so in this particular case, the apprenticeship tax credit is paid for by the employer after incurring the costs of training the individual in that position. So it doesn't go to the individual taxpayer, it goes to the business themselves. And currently right now it's structured as a corporate tax one. And that's why, you know, myself and others that had testified in favor of it are saying it should be allowed for pass-through entities to also take advantage of getting
But that's an income tax deduction.
It would be on
or
the
reduction.
pass-through to entity tax, which then
Right.
passes through to them on their income taxes eventually.
Correct.
Yes, correct. So that would be on the business owner side for the expenses that they incurred in doing those training programs. And I would argue that those individuals that are now into that workforce are not just getting a job, they're getting a career. that allows for them to be able to create generational wealth for their families and potentially work their way up from that apprenticeship level to a journeyman to a master so that they can open their own business and be entrepreneurs themselves. So the short-term costs to the pass-through entity tax, if you were to extend it to pass-throughs here, I think would be more than made up for, if not, significantly so, by getting more and more of those individuals into those high-paying careers in the trades. So I think it would be a temporary reduction in that additional revenue that's coming in under the volatility cap in most cases, because it would be pass-throughs, and that's where a significant portion of that money goes. It would actually be, in the long term, a much more stable source of revenue for the state through the income taxes paid by those individuals in the apprenticeship program.
My point is not that there isn't value in this. It's that it sends a message that the income tax is now open for something that we have been able to avoid for many years. And I don't know where that ends.
I respect that concern, and I know it has been one for a long time. And this committee especially has been very diligent in making sure that the door doesn't open too wide on this. And I appreciate that for sure. I think in this particular case, the idea that these small businesses would be making that type of investment up front and getting that return, which is a small one, in this case, is far outweighs any potential issues that come from opening that door just a little bit more for these pass-throughs to be able to take advantage of the apprenticeship tax credit.
Thank you. Thank you, Madam Chair.
Thank you, Senator. And I believe we have a question from Representative Doucette.
Thank you. Hey, Chris.
Hello.
Good to see you. Welcome back.
Always
Must be like deja vu, coming back, getting in the weeds on tax policy late on a Friday night in here for you.
I hope somebody ordered you all pizza at least.
I was wondering the same thing, actually. Okay, so a couple of things. I was going to ask if you had submitted written testimony. I see that you had, so I'm just digging into it now. And initially, I would note that the numbers are dramatically different than the similar submission from Connecticut Voices for Children. So I just note that there's a huge discrepancy. I think that they were estimating about 900 million in extra revenue under the cap, and you guys, if I'm reading this correctly, have close to like 1.5 billion. So when you're talking about the zero savings, I guess that is significant to that assertion. And I'm just, so I would just ask for some follow-up on that. I'd love to hear some more about, maybe I'm misreading it. Maybe there's some fundamental assumptions that are different, but it is a very different estimate. So I don't know if off the top of your head, there's something that is a discrepancy in there, or if obviously we can follow up and.
I heard their oral testimony earlier. I did not get the chance to review their written testimony.
Yeah.
So I can certainly do that and see where their sources are. As you can see in my written testimony, our sources, at least on the projected revenue, is attributed to the OPM estimates that just came out a couple of weeks ago.
Okay. All right. But it is dramatically different. So we would have to kind of get to the bottom of that to really know what we're talking about. And then the second question is, is CBIA's position, what is CBIA's position on the recent adjustments to the guardrails? I don't recall last year if CBIA had an official position. And does CBIA support going forward what is already being proposed this year, which is another potential one-time adjustment to the volatility cap? And continuing that policy potentially going forward?
I believe we were one of the few organizations that actually opposed any change to the volatility cap last year, and we continue to oppose attempts to adjust the volatility cap calculations this year, even if it is a one-time adjustment. Understanding that there is significant growth that is available under the existing cap to address many of the needs, like the early childhood endowment deposit that was made with the adjustment that was made last year. we can look at ways to enhance affordability without necessarily having to adjust the volatility cap this year as well.
Well, it's good to be consistent because that would, continue to erode and go to the premise of, having a deleterious effect on the budget. But again, would like to follow up on and crunch some of these numbers with you because they're very different than what was already presented today. So, and it's complicated stuff, I understand, but there are some assumptions in here that certainly looks like are different than what Connecticut Voices has offered.
Sure, I'd be more than happy to review their testimony
you.
and connect with you.
Thanks.
Thank you, Representative. And I see we have Representative Farrar online.
Thank you, Madam Chair. Apologies for not being in the room, but Chris, I just wanted to grab you while I could. Great to hear all your comments and thoughts. And I just wanted to follow up, particularly in understanding your testimony today. I know we've worked together on so much of what CBI cares about addressing the needs and costs of early childhood education. And I believe in some past reports of CBIA, there has been discussion about supporting efforts such as a child tax credit. And I wanted to know if CBIA supports the child tax credit proposal this year.
We did not submit testimony on that bill in particular here today, but anything that provides for individual families to have relief when it comes to childcare, we are open to those conversations. As long as the tax credit, and I know we have in the past advocated for any tax credit that gets passed to be directly tied to the costs associated with childcare itself as the most responsible way of trying to tie that tax credit to the actual costs of childcare and trying to address that need. So we're open to those conversations about whether, this childcare tax credit and tying it to the actual costs related with childcare so that families can receive that additional savings. We're happy to have those continued conversations.
Thank you, Chris, and look forward to those as well. So thank you for being there tonight.
Thank you.
I don't see any other questions online or in the room, so I think we're done for the night. But thank you for coming and waiting and for your testimony.
Thank you all very much.
Okay.
Appreciate it.
Does everyone want us to take a minute and just stand up and stretch for a second? I think it'd be a good idea. Give ourselves a little break in this long day of important testimony. Everyone in the room, that means everyone. Give it a good stretch. Oh, thank you. Thank you. I'm trying.
They can't tell you this.
I have. Thank you.
Dare I suggest we were just made aware that there's one other individual in the room, and I want to make sure that he can testify before it gets too late. And that is Ramon Garcia. Okay, great. All right. I'll invite you up, Ramon. Sorry, that stretch wasn't long enough, but we do have a long list. Just turn on your microphone.
Hello, could you hear me?
Yep, go ahead.
Greetings to the chairs, vice chairs, ranking members, and other distinguished members of the Finance Committee. My name is Ramon Garcia, a resident of Hartford, and today I am testifying in support of House Bill 5133, increasing the highest marginal rate of the personal income tax, as well as HB 5187 and Senate Bills 101, 103, and 104, as contained in the 2026 legislative agenda for Connecticut for All and Stand Up Connecticut. Considering the cuts to funding from the federal government for essential services such as food assistance, medical coverage, etc., now is the time for Connecticut to take care of Connecticut. For me and many others from the working class and marginalized communities, it's not about political parties and party affiliations. It's about having leaders, elected officials that truly care about all of Connecticut's residents and will provide opportunities for them to get on their feet and be able to provide for their families and loved ones. Everyone that is poor or struggling financially isn't lazy or just looking for government handouts. On the contrary, many of us work and pay state and federal taxes, and we want our taxpayers' dollars to work for us, our families, and our communities. I always say that the more money I have, the more money I give. And it is beyond me that in such a wealthy state, we have to try to pass laws for the ultra rich to contribute their fair share towards improving the state and the lives of their fellow Connecticut residents. This is about morals and ethics, not politics. And certainly a time will come when we will be held to account on how we acquired our wealth and how we spent it. It is my hope that as a state, we can continue to progress and make a better Connecticut for all of its residents and the generations to come. Thank you all for your time and your service to the people of the state.
Thank you, Mr. Garcia. I really appreciate that. And thank you for waiting to testify.
Thank you.
See if anyone has any questions. No, but thank you for your words.
Thank
And
you.
have a good night.
all.
Take care. Okay, so we're going to get back to our list here. And we have Angie Idrovo. And I hope I
Yes.
said that correct.
No, it's Angie, but that's
Angie.
okay. Yes.
Beautiful spelling. Okay, you go right ahead.
Thank you. Dear members of the Finance Committee, my name is Angie Drobo, and I'm the Organizing and Policy Director at the Connecticut Black and Brown Student Union and a member of the Connecticut for All Coalition. I'm here in strong support of the Stand Up Connecticut Fair Share policies, including SB 103, establishing a refundable child tax credit. At the Connecticut BBSU, we organize Black and Brown high school students across Connecticut. Every week, I sit with young people who are trying to focus on school while their families are struggling to afford rent, groceries, childcare, and healthcare. When 40% of families in our state cannot meet basic needs, that shows up in our classrooms. It shows up in students working late hours to help cover bills. It shows up in young people missing school to care for siblings because childcare is unaffordable. It shows up in housing instability, anxiety, and chronic stress. And now, with over $1 trillion in federal cuts to SNAP, healthcare, and housing supports, our communities are being asked to survive even more with even less. At the same time, Connecticut is one of the wealthiest states in the country. Yet our tax system asks proportionally more from working families than from the ultra wealthy. The top 1% earns millions annually, while families at the bottom are surviving on less than $20,000 a year, and is still paying a higher effective state and local tax rate. This is not accidental, this is policy choice. SB 103 will establish a permanent refundable child tax credit reaching about 75% of families, more than 550,000 children. Because it is refundable, it will reach families who don't owe income tax but still pays sales tax every day. For every dollar invested, more than $1 flows back into our local economy. For our members, this is not abstract. This is the difference between a stable housing and moving multiple times in a school year. The difference between a parent affording after-school care and a teenager giving up tutoring to watch younger siblings. The difference between constant financial crisis and a measure of stability. If we're serious about protecting Connecticut families from the harm coming from the state federal cuts, we must raise revenue equitable and be willing to reform fiscal guardrails so that we can actually invest in our communities. We cannot continue placing the burden on working families while leaving billions untouched. Connecticut has the resources. It is a matter of political will. On behalf of the Black and Brown students that we organize across the state, we urge you to support the Stand Up Connecticut Fair Share agenda and pass SB 103. Our young people deserve stability, they deserve investment, and they deserve a state that chooses them. Thank you.
Thank you so much. Just looking to see, I don't see any questions. And again, I've said this before, but it's really nice to see students testifying in our committee today. So thank you. You have a good evening.
Thank you.
We're going to jump back to one of our original testifiers who's now online, Rob Burrill.
Thank you so much. Good evening, Representative Horn, Senator Fonfara, and the rest of the members of the Finance Committee. My name is Rob Burrill. I'm president of SEIU 1199, and we represent about 30,000 caregivers across the state of Connecticut in nursing homes, hospitals, group homes, home care, and state service. Basically, all of our members are publicly funded, whether they are public sector or not. State dollars in Medicaid provide the funding for the services that our members offer to the community. And, I think that all of us know that really for the last 20 years, what we've seen is a race to the bottom in funding. And the consequences of that race to the bottom are seen really everywhere in the places that our members provide services and far beyond. In DEMIS and in DCF, our members are short-staffed. They are often unable to provide the safe and healing environment that folks need to recover from psychiatric issues and addiction. With our seniors, we see that care is rationed in nursing homes and in home care. And with our disabled population, again, often the workforce is forced to work two and often more jobs simply to survive. We see the consequences of funding cuts over decades now in our public schools and also in our higher education system, where tuition fees are going up, classroom sizes are expanding, and many are struggling, again, just to get the basic needs in terms of their preparation for the future met. We all know that Connecticut, as the last speaker said, and as many speakers have said, is the most unequal state in the country. It is also the wealthiest state in the wealthiest country on planet Earth. So we are making policy choices not to fund our future, not to take care of our seniors, and not to educate tomorrow's workforce. The Trump tax cuts, of course, are targeted at the ultra wealthy in our state and our country. And so what we're asking for is the reform packages that have been put forward both by Connecticut for All and the Stand Up Connecticut agenda, which would start to reverse the decades-long descent into greater and greater inequality. We have an absolutely upside-down tax structure where the wealthiest folks pay the smallest percentage of their income. The lowest income earners are struggling to pay the highest tax rates in most situations. And people are being punished just for trying to work hard and advance their futures and their families' futures. So we hope that you will consider these proposals and for the first time, take a really strong stand in making sure that they are passed so that we can get the relief for working class folks, white, black, and brown, who have been struggling far too long in our state. And we know that the Medicaid cuts that are coming are going to have a devastating impact, both in terms of services, but also in terms of jobs. Medicaid is
You've reached 3 minutes. If you please summarize.
Sure. Medicaid is a huge funder in terms of tens of thousands of jobs across the state. So what we're asking for is simply that taxes are raised on the wealthiest in our state to make sure that those who are going to be losing coverage and losing employment in the healthcare sector are protected. Thank you.
Thank you for your testimony. I don't see any other questions. So thank you and have a good evening. We're going to move on. We have a panel of students, Jennifer Pilcarema, Obed Sierra, and Celise Mendez. Oh, wonderful. Okay. And then we'll go online. Okay, fine. Thank you.
Yes.
Let's see. Okay, Celise, I don't know if you're on the call. Hopefully you're able to go first, or if not, I can, in the meantime, I can go. Or Jennifer? Okay, I can do my testimony first.
Buenas tardes, estimados miembros del Comité de Finanzas de la Asamblea General de Conérico. Mi nombre es Jennifer y vivo en Tenbury, Conérico. Soy estudiante y también trabajo. Soy miembro de C4D Student for Andre, una organización que lucha por los derechos de estudiantes inmigrantes y sus familias. Hoy estoy aquí en apoyo de las políticas de Stand Up City Fair Share de Connecticut for Away. En mi comunidad, una de las necesidades que no está completamente financiada es el acceso a la salud. Muchas familias no pueden pagar un seguro médico privado y dependen de programas como Hoskin para recibir atención básica. Sin embargo, todavía hay personas que quedan fuera por su edad o estatus migratorio. La falta de financiamiento suficiente significa que muchas familias retrasan visitas médicas, no reciben tratamiento preventivo y solo buscan ayuda cuando la situación ya es grave. Estas experiencias me hicieron entender lo vulnerable que somos cuando no tenemos un sistema de salud accesible y estable. Muchas veces evitamos ir al hospital o a un médico por miedo al costo. Cuando alguien se enferma, tratamos de resolverlo en casa con remedios caseros, porque sabemos que una visita médica puede convertirse en una deuda. Eso genera estrés constante y afecta nuestro rendimiento a la escuela y en el trabajo. Es difícil concentrarse cuando existe el miedo de una emergencia médica. Si la salud estuviera completamente financiada y programas como Hoskin o Hoskin para inmigrantes se fortalecieran y ampliaran, las familias podrían recibir atención preventiva, tratamiento a tiempo y vivir con mayor estabilidad. Eso significa menos emergencias, menos deudas médicas y comunidades más saludables. También ayudaría a nuestras escuelas porque estudiantes saludables pueden concentrarse mejor y tener mejor desempeño académico. Una comunidad sana fortalece nuestra economía y nuestro estado. Ahora en los recortes federales que amenazan Medicaid o otros programas esenciales, Connecticut tiene un papel fundamental. Si el gobierno federal reduce fondos para la salud, nuestro estado debe actuar para proteger a sus residentes. No debemos permitir que miles pierdan acceso a atención médica, mientras existen recursos que podrían utilizarse para fortalecer nuestra red de seguridad. Por eso es urgente aprobar el HB 5187 y ajustar las fiscalías guardias. Actualmente estas reglas limitan la capacidad del Estado para usar fondos disponibles y responder a las necesidades reales de nuestra comunidad. No tiene sentido mantener nuestros recursos restringidos mientras familias se enfrentan la posibilidad de perder acceso a la salud, vivienda, educación y asistencia alimentaria. El paquete Fair Share permitirá invertir en las áreas esenciales como vivienda, cuidado infantil, salud, educación pública, asistencia, alimentación y transporte. También es necesario que las personas más ricas contribuyan de manera justa. No es justo que las familias trabajadoras carguen con el peso mientras quienes tienen más recursos aporten proporcionalmente menos. Connecticut es uno de los estados más ricos del país. Tenemos la capacidad de proteger nuestras comunidades si existe la voluntad pública. Les pido respetuosamente que apoyen HB 5187 y HB 5133 para que Connecticut pueda proteger el acceso a la salud, mantener Hoskin y Hoskin para inmigrantes y garantizar estabilidad para nuestras comunidades. Invertir en la salud es invertir en el futuro de nuestro estado. Gracias por su tiempo y consideración.
Good morning and good afternoon, esteemed members of the Finance Committee of the Connecticut General Assembly. My name is Jennifer, and I live in Danbury, Connecticut. I am a student. I also work, and I'm a member of Connecticut Students for a Dream, an organization that fights for the rights of immigrant students and their families. Today, I am here in support of the Stand Up Connecticut Fair Share policies of Connecticut for All, including bills HB 5187 and 5133. In my community, one of the needs that is not fully funded is access to healthcare. Many families cannot afford private health insurance and rely on programs like Husky to receive basic care. However, there are still people who are left out because of their age or immigration status. The lack of sufficient funding means that many families delay medical visits, do not receive preventive treatment, and only seek help when the situation has already become serious. This type of experiences made me understand how vulnerable we are and when we do not have an accessible and stable healthcare system. This creates a constant stress and affects our performance in school and at work. It is difficult to concentrate when there is a fear of a medical emergency. Now, with federal cuts threatening Medicaid and other essential programs, Connecticut has a fundamental role. We cannot allow thousands to lose access to medical care while resources exist that could be used to strengthen our safety net. For this reason, it is urgent to pass HB 5187 and adjust the fiscal guardrails. I respectfully ask that you support HB 5187 and HB 5133 so that Connecticut can protect access to healthcare, maintain Husky and Husky for immigrants. And I guarantee stability for our communities. Investing in healthcare is investing in the future of our state. Thank you for your time and consideration. Celise, if you're on the call, please go ahead.
So we're all set. I just want to make sure there was another name on the panel. Do you see her joining us?
Celise Mendez. Oh, please. Oh, you're muted, Celise, just so you know. I can go ahead and read my testimony then. Dear members of the Finance Committee of the Connecticut General Assembly, my name is Obed and I live in Stamford. I am an organizer with Connecticut for All, the coalition, and member organizer with Connecticut Students for a Dream. I support the overall Connecticut for All stand-up Connecticut share policies. Today, I'm here as a mortgage holder, as an immigrant, as a worker, and as a Connecticut resident. For a couple of years now, I've had the privilege to meet people from all over the state, and one thing is clear, we're struggling to afford our necessities. For every passing day, our families and our communities are struggling and do not have the ability to thrive. For the past 2 years that I've been working alongside the Connecticut for All Coalition, we have kept coming back to demand more funding for public schools, more funding for public higher education, affordable healthcare, and accessible public transportation. So I wonder, where do we stand in 2026? When are we going to start treating these services for what they are? The lifeline for people all over the state of Connecticut. People shouldn't be starving to have access to food. People shouldn't get to homelessness to get a low cost or affordable home. For example, just like cancer, the earlier we're able to detect and provide care for a patient, the higher the chances they have not only to survive, but to thrive. The stronger our safety nets are, the more funding goes into our public services, the better our prognosis for our future as a society and state can be. I emphasize on public services because I have seen that our state and cities continue to give my and our tax dollars to charter schools and private entities, to another middleman that shouldn't exist. And existence is the blatant evidence of the lack of investment in our public schools. Adjusting the guardrails and taxing the ultra-wealthy with the intention to robustly invest in our services is the only solution. We continue to endure the biggest percentage of our wages going to necessities, while the ultra-wealthy in the state of Connecticut somehow pay fewer taxes every year because of the tax cuts and on top of existing loopholes that they used to not pay their fair share of taxes. Connecticut for All fair share policies stand as one of the many solutions you can take for a better future for our communities. If we seek to replace some of the federal investments with the new revenue sources, we must be able to spend it. We must reform the fiscal guardrails in order to respond to the attacks of our safety net from the federal administration. A better future is possible. Thank you for your time. My name is Obed.
Thank you, Obed, and gracias, Celise and Jennifer, for your testimony today. Don't see any questions, so thank you. Moving on, we're going to go to Sarah White. No? Okay. And we will move on to the next page. Very exciting. And we have Dom DeGennaro.
Thank you so much.
Go right ahead.
Good evening, members of the Finance, Revenue, and Bonding Committee. My name is Dom DeGennaro, and I am a proud resident of West Haven. I am also a campus student organizer for CT State Gateway for the Fourth Seas Labor Union, and I strongly support Connecticut for All's stand-up CT fair share policies. The federal government has made their intentions clear. They want to take from the most vulnerable people in the country and give to the ultra-rich. I grew up in New York City and came to Connecticut when I was 19. And one of the things I love about Connecticut is that we are a state that's not known to cower to the unjust actions of the federal government and what they want to inflict on us. But let's be real. The federal government has and will continue to take from the poor and give to the rich. As people of the great state of Connecticut, we need to adjust to this harsh reality. There have been so many amazing resources here for me and many others like me that are significantly at risk due to a lack of insufficient funding. I'm a musician. I also have a significant psychiatric history. There's a sober community music space in downtown New Haven called Musical Intervention, where people like me, I'm a mentally ill, transgender, low-income individual, we can go to express ourselves in a safe, welcoming environment. At Musical Intervention, we quite literally have starving artists. A large percentage of the people we serve are unhoused or have unstable housing. The reality is that creative people fit into society differently. We don't benefit from capitalism in the same way the billionaires do. Musical Intervention seriously lacks the funding it needs to simply operate. And we need the resources the ultra-rich have so we can continue to serve people not only through the donated food and clothing they need, we need to feed their souls. And I'd also like to add that our very own Governor Lamont came to Musical Intervention in 2023, and he actually played our piano, and he actually played it quite well, if I may add, on stage with some of our musicians who were unhoused, formerly incarcerated, or addicted to substances. They deserve to continue to be able to not only survive, but thrive in a world where they fall through the cracks. Society functions best when all people are set up to succeed. And the way to do that is to make sure all people have what they need, whether that's food, housing, clothing, or a place to express themselves fully and authentically. How do we do that? Invest in the things that really matter. Because if we tax the rich and give to those who need it, Connecticut as a whole becomes richer. Richer in creativity, richer in spirit, and richer in diversity. Thank you for your time so much and for your continuing service to our state.
Thank you, Dom. I don't see any questions, so thank you for your testimony and you have a good day.
Next, we have Alicia Strong. No? So we will be going to Benjamin Scudder, who will be on a panel with Leslie Leto, Dario Salzman, and Jenny Graves.
Ben, do you want to start us off?
Absolutely.
Okay.
Good evening. First of all, thank you, Finance Committee, for sticking it out through what I know is a long testimony session. My name is Benjamin Scudder. I'm a high school teacher in New Haven, Connecticut. I work at high school and community, teach 10th grade history. And I'm here as part not only of our public school system, but also as a resident of New Haven and as a member of the Connecticut for All Coalition. Every day, teachers, administrators, school districts have to make impossible decisions in our schools because of the chronic underfunding that we've been dealing with for years. We have to choose between fixing leaky roofs and moldy classrooms or hiring enough staff to adequately meet the needs of our students. These choices often affect our most vulnerable students the most. The students whose needs aren't met are students who need extra support because of special ed or English language learning needs. The students who have to deal with broken facilities, leaky roofs, moldy classrooms. These are the students that are often come from low-income communities. Frequently, these decisions fall on our most vulnerable students to deal with. They don't care where the money comes from to fix their schools. They don't care if it's from a district budget, a city budget, a state budget. They just know that they deserve better. Some of those students have come to testify today. And I've got to say, if things are getting so bad that kids are starting to come to the Capitol to talk about what's going on, I think we need to reassess what's going on in this state. Now, we've got a chance here to do something very different in Connecticut than we have in the past. In light of what's going on at the federal level, where we're seeing an administration that is one of the most anti-working class, pro-billionaire we've ever seen in the history of this country, and that's saying something. We have a chance to decide as a state if we want to follow in the footsteps of our federal government and be pro-billionaire, or take care of working class folks and their kids who right now are getting the short end of the stick because we're not fully funding not only their schools, but their communities. So I want to encourage you all to please support and pass the fair share bills. We're talking about increasing the marginal tax rate on the highest earners. We're talking about making sure that our fiscal guardrails provide as much funding as possible to address the issues plaguing our community right now, today. And we're talking about making sure that our most vulnerable students and the schools that they go to every day are provided with not only the financial resources they need, but also the communities, fully funded communities they need to be able to thrive in school. Thank you, and I'll pass it over to Jenny Graves.
You're on mute.
So sorry. Good evening, members of the Finance Committee. My name is Jenny Graves, and I live in North Haven. I am a preschool special education teacher in New Haven. I am Vice President of New Haven Federation of Teachers, and I am part of Connecticut for All Coalition. I support Connecticut for All stand-up Connecticut Fair Share policies. Our educators in New Haven are financially stretched in ways that are completely unsustainable. They are struggling to afford childcare for their children. They cannot purchase a home in the very community that they serve. Others are unable to keep up with the rate of their rents increasing each year. Some call me looking for resources such as food assistance and mental health support, as the stress of living this way is completely overwhelming. This year, even after the raises that our union was able to negotiate, most of our educators saw a decrease in their take-home pay due to dramatic increases in our health insurance premiums. We need to stabilize and fund our public schools and support working families here in Connecticut. And we can do that by addressing the revenue side of the equation. And that means modernizing our tax structure, implementing a mansion tax, adjusting the fiscal guardrails, and increasing the top marginal income tax rate on the highest earners so that we can sustainably invest in public education and the public services that working families rely on. Thank you so much for listening and for your service. I will pass it to Leslie, or Diana, sorry.
Yeah, and actually, a New Haven student who is an intern with New Haven Federation of Teachers, she is the Leslie Blateau without a number. There she is, and she can introduce herself. She's part of our panel.
Hi there. My name's Diana Paola Robles Manso. As Leslie had mentioned, I'm an intern for the New Haven Federation of Teachers. Ben Scudder is actually my teacher at HSC, and I wanted to talk about my experience being a New Haven student. Every day that we go into these schools, we experience overcrowded classrooms. Teachers are forced to work multiple jobs. We can't afford textbooks. Textbooks are outdated. Technology breaks and we can't replace it. Extracurricular programs are disappearing, and mental health support is not there. When I went to my school today, we experienced many leaks in our roofs, and we have trash bins all over the school collecting water from the roofs. Something I had mentioned before was in my chemistry class, there is multiple leaks in that room, and it's a very dangerous space to have water leaking from the roof when we are dealing with chemicals. And these are things I hear all the time from other students, things that so many students across the district are experiencing every single day. And this is something that should not be normalized. And I don't understand why it is. I want you guys to understand that investing in students is not an expense. You are investing in our futures. You are investing in our lives and lives of generations going on and on. I want to say thank you for this opportunity to speak, and I hope that you take this into account when you're dealing with these budgets and numbers. Please listen to the voices of students who are experiencing these things every day and who care so much about their education and who care so much about the teachers who are putting so much effort into our futures.
Thank you, Deanna.
Thank you.
And I'll close us out here. Thank you.
I'm sorry, ma'am, but you've reached the 5 minutes, so if you could please summarize.
Yeah, I absolutely will summarize. You've heard it. You've heard it from our members. You've heard it from our students. Our schools, not just in New Haven, but throughout our state, are under-resourced. We're understaffed. After school programs, before school programs, that should be a necessity for working families, they're an anomaly at this point. The cycle of unmet need is really exacerbating families' ability to survive. And the policies of the federal government are a slap in the face of working people and a give back to billionaires and corporations who have more than enough. So we can agree the feds are at fault here, but we can also agree the state government has to take action. Let's Trump-proof our budget. We can do that with common sense fair share policies. We can restore dignity and affordability to the lives of working people and demonstrate that government can play a role in improving people's lives. Please don't ask for our vote in November if you're unwilling to take real steps now. So that's the mansion tax, the capital gains tax, a child tax credit, and a capital gains surcharge. We can remind our children.
Excuse me, if you could
teach our
please
children
summarize.
that a
You
better world
passed the time.
is possible. Thank you so much. Appreciate the time.
Thank you so much for giving us a perspective from teachers who are on the ground in one of the biggest districts in our state. I see a question from Rep. Supkis.
Thank you, Madam Chair. Thank you for coming. Leslie, I know I see you. I always perk up when I hear your name because my name's Leslie. So, and I see you in education. And there was a young lady, I apologize, I missed your name, that spoke right before you.
Diana.
Oh, great. Thank you. Diana, you did a great job. And because I'm ranking member on education, and so I really perked up listening to you about your school buildings and all those things. And that is a big concern. You should not be going to school with garbage cans everywhere, your school leaking all the time. What school do you go to?
I go to high school in the community, or HSC, in New Haven.
HSC. Great, thank you. And I just wanted to let you know, because this falls in another committee on education, but we are looking to put more money into your schools, into helping the district. And we are looking to see how we can help with teacher shortages. And we are looking to help parents and their health care. I understand and know it's so hard for people, for a long time and depending on their circumstances. But I did want to let you know that in the education committee, we are looking at these things, and there is going to be some things done this session. So I encourage you to watch that committee also, and what's going to be going on and helping your school. So thank you. I just wanted to let you know that. Thank you.
Thank you very much.
Thank you, Madam Chair.
Thank you. Any other questions? Well, thank you so much. And now we will be going to Justin Farmer. Justin, I think you are rejoining us.
Can you hear me?
Perfect. Yes. Thank you so much. Go ahead.
Thank you. My apologies. Good afternoon. Good afternoon to y'all. I know it's been a long evening for you. Thank you for your service, time, and commitment to the good people of Connecticut. My name is Justin Farmer. I am a community organizer in New Haven, Connecticut. I am here to speak to you on a number of bills, HB 5187, SB 104, on the capital gains surcharge, on fiscal guardrails, on the ability to have a refundable child tax credit, SB 103. The bold and brief, right? The issues that we are facing, we are in a crisis and we need help and support. And when neighbors who have more means and ability to take care of themselves, take care of their families, have gotten a great tax credit from the federal government. It's up to us at the state level and our local communities to do more on behalf of our communities to hold us down. So, we will talk about class, but we barely tax millionaires and billionaires, right? We have multi-billion-dollar corporations, right, that also sit upon billions and billions of dollars, right? We have $4 billion in our rainy day fund, and we're saying that we are in a crisis, in a flood, and yet for some reason we will not, put up floodgates. And so whether we're talking about, having the wealthiest people pay a little bit more so we can have schools that give dignity, or we're talking about public services, we just need to hold each other down and do more. And so the child tax credit, right, giving $600 to families, right, of three goes a long way. But for my family, when I was growing up, my single mother of five, right, that wouldn't have stretched all the way. And so it's great that we are having these conversations and talking about these policies, but I think it's important that we actually follow through, right? And so it is the bare minimum that we can do in this time. We cannot ask working families and people of Connecticut to continue to do more and more and more in the land of steady habits without getting a little bit more back. And so I can tell you about my family walking and collecting cans every day so that my mom can make sure that we put food on the table. I could talk about my mom working 3 jobs, right, as a nurse's aide to hold down people. I could talk about working multiple jobs to be able to pay for school and put myself through school as a student right now.
You've reached
at
3
Southern
minutes. Please summarize.
State University, but I think you've heard enough stories. So I'm asking you to support working families, support the people in our community. And I thank you for your time, safe travels, and have a nice night.
Thank you so much for your testimony. Are there any questions? Not seeing any. We will be going to Brian Chung, who's here with us in person. Thank you for sticking around. Turn on the button. Perfect.
Testing. All right. Members of the Finance Committee, I'm Brian Chong, co-chair of Connecticut DSA, the Connecticut chapter of Democratic Socialists of America. I'm testifying in support of Connecticut for All Stand-Up CT Fair Share Package. Across the state, Democratic Socialists are tenants, canvassing their neighbors who are one missed check away from eviction. They're union members on strike lines, organizing their coworkers who are choosing between co-pays and groceries. They're bus and train riders commuting 2 hours to jobs that don't pay enough to live nearby. These conversations are the only honest account of what Connecticut actually is, underneath the rosy picture of a budget surplus that never reaches the people who generated it. The truth is, Connecticut is a state where working people are being slowly bled systematically so the rich can keep feeding at the top. The truth is, we already have socialism in Connecticut. It's just for the wealthy. That has been true since before Trump or Biden, before anyone in power found it convenient to call it a crisis. So the question before this committee, frankly, isn't whether to raise revenue. The real question is whether you believe our economy should serve the vast majority of people who build it or the small minority of people who own it. If you believe the working class of Connecticut is owed anything at all, then the fair share package is just. It is accountability for the 1% already pocketing Trump's new handouts. It is relief for working families paying down over a century of debt they did not create while their neighbors go hungry. The fair share package is the minimum. Our neighboring states have found the political will to do this, but we keep finding reasons not to. Yes, you cannot stop what's happening in Washington, but you can decide whether working families will face this onslaught alone. And I want to speak directly to Democrats in this room, because Connecticut has a Democratic trifecta supermajority right now, and the bills are sitting right here. Nearly every Democrat in this building probably has something to say about Zohran Mamdani, the Democratic Socialist mayor of New York City. You know his name. You probably find him exciting, inspiring, maybe a little alarming. But Mamdani is not magic. He's simply a politician who decided that people deserve the truth about who owns this economy and who doesn't, and that speaking that truth to power was worth the political risk. The response from Democrats up and down the ballot has been uniform: to admire the energy but oppose the policies, to praise the courage but refuse to demonstrate any. That ends here, or it doesn't. When the money exists, the coalition is here, and the need is staring at you from hours and hours of testimony. Inaction is not caution. Inaction is complicity, and it is a choice made deliberately about whose interests this legislature protects. Is it the tenant, the striker, and the bus rider? Or is it billionaires, corporations, and Trump's allies? That choice is yours. Thank you.
Thank you so much. Not seeing any questions. We thank you. And we will be going to Sharon Toppin. No, so let us go to Lisa Bergman, who is online. Lisa, are you there?
I am here. Thank you so much.
Go ahead.
Thank you very much. Good evening, members of the Finance Committee, and thank you for your service today in a very long day of hearings and hearing testimonies. So thank you for hearing mine at this late hour. My name is Lisa Bergman. I live in New Haven, Connecticut. I am a member of the New Haven People Center and part of the Connecticut for All Coalition. I support Connecticut for All Stand Up Connecticut Fair Share policies. I am a part-time teacher in one of New Haven public schools with 19.5 hours of work per week. Because I am part-time, I do not qualify for health benefits through the city. I pay for my own healthcare benefits through the Connecticut Marketplace Exchange, which was established as a result of the Affordable Care Act. Last year in 2025, before Trump slashed the funding for the ACA, my insurance premiums were $821 per month for a single plan. This past November in 2025, I received a notice that I would no longer qualify for any assistance with my premiums for 2026, and that my healthcare costs were likely to go up. Indeed, to enroll in the same plan as I had last year, the cost went up to $1,050 per month in January 2026. This is what I paid in January and February. Thanks to the work of the Connecticut for All Coalition and the legislators that have been advocating to release state funds for human needs like healthcare, I received another letter in late February stating that my premium would be getting reduced again by $222 per month. So I would really like to thank and appreciate the legislators that have been fighting for our state funds to go back into healthcare, because it is having a direct effect on people like me whose assistance was cut. And thank you for fighting so hard to lessen the devastating effects that Trump's budget is having on our local communities. As a teacher in the schools, I also witnessed firsthand the ways that the federal cuts have affected our children. The national cuts to the education budget have forced school districts to make challenging choices regarding staff levels. The number of paraeducators in my school has decreased significantly, and we no longer have a regular librarian in our school. One of my students who has special needs and struggles with physical balance while walking fell and hit his head on a locker because there's no longer a paraeducator assigned to him throughout the day. I was responsible for taking him to the nurse that day, and he eventually had to be brought to the emergency room. I pray that the Finance Committee and our elected state leadership will do the right thing and fight for our state funds to be allocated to human needs and not stay locked up by fiscal guardrails or in private funds where they are not helping anyone. I strongly support Connecticut for All Stand Up Connecticut Fair Share policies and hope that you will join us in making Connecticut's tax system more fair. Thank you so much for your time and attention this evening.
Thank you so much for putting a face on the effects of the big, beautiful bill and the everyday effects it's having on you, healthcare, and in the schools. Joyce, are there any questions? No. So we will be going to Sarah McCoy.
Thank
Who's
you.
online. Thank you. Thank you, Lisa. And Sarah.
Thank you. Members of the Finance Committee, my name is Sarah McCoy. I am a Hartford resident and one of the owners of Story and Soil Coffee, located just up the street from you at the State Capitol building. When my husband and I opened this space, we envisioned it being a place where leaders would share their ideas and that lawmakers would frequent as they mulled over their next votes. In our nearly 8 years, those individuals make up some of our customers, but most of our customers are local residents who are eager to connect with one another and who prioritize our business because it adds to the quality of life and their community. It is critical for me as a business owner, as well as a human being, that Connecticut prioritize the health and access to basic services for all of our residents. Because of this, I am asking you that you support the Connecticut for All Stand Up Connecticut agenda. Bills like House Bill 5187, House Bill 5133, Senate Bill 101, Senate Bill 103, and Senate Bill 104 are sensible policies that will ensure that all Connecticut residents can live better. In addition to my customers, I also think of my employees, many of whom are young professionals who desperately want the same things that I did in my 20s: access to safe and affordable housing, healthcare, childcare, and opportunities for quality education. Currently, I am watching some of them postpone these things solely because of the costs. The policies supported by Connecticut for All ensure that barriers to employment are removed, individuals can attain an education to be successful, and that Connecticut can have an active workforce. Investments like this make sure that businesses like mine have the staff and customers they need to thrive. Thank you for your time.
Thank you so much. Any questions? Thank you, Sarah. Now we'll be going to Jonathan Miller.
Good evening, esteemed co-chairs, ranking members, and members of the committee. Good evening, and my sincere thanks to you all for listening to our testimony for the past 7 hours or more. My name is Jonathan Miller. I'm an assistant professor of Hebrew and Judaic Studies at UConn Storrs, where I have been teaching since 2023, and I'm also a member of UConn AAUP. I am a Connecticut taxpayer and private citizen, and with these remarks, I speak on my own behalf. I'm here today to support HB 5187, which would make common sense changes to our system of fiscal guardrails and take an important step towards bringing our state's budgetary disbursements in line with our actual budgetary needs. Much of what I would like to say about this topic is in an op-ed that I wrote entitled "The Fiscal Guardrails Are a Tax on the Public Good," and I have submitted that to the committee. And for tonight, I just have a few brief remarks. The guardrail formulas adopted in 2017 were not concerned with good governance, let alone the public good. Quite the opposite. What was signed into law effectively tethered Connecticut to a small government ideology that views public service as a liability, public servants as a burden, and the public good as handouts. This ideology is wildly out of step with the electorate as it is reflected in the composition of the representative body to which you were elected. We hear a lot of talk in the state about fiscal responsibility. It's difficult to see how it is fiscally responsible to underfund our schools, our healthcare, and our social programs. And it is certainly not fiscally responsible to feign ignorance to the inevitable repercussions of these cuts for the generations to come. Franklin Delano Roosevelt, whose New Deal got America out of the Great Depression, famously said, and I quote, "Better the occasional faults of government that lives in a spirit of charity than consistent omissions of a government frozen in the ice of its own indifference." HB 5187 is not perfect, but it begins the much needed process of returning our legislature to that spirit of charity of which FDR spoke. Thank you for your time.
Thank you so much. Not seeing any questions, we will be going to Jose Miranda.
Hello. Thank you, Honorable Chairs and esteemed members of the Finance Committee. My name is Jose Miranda. I am a National Deputy Political Director.
Would you be able to either speak closer to the mic or increase your volume? I'm sorry.
My apologies. Is this better?
Yes, thank you.
Hello? Okay. Thank you, Honorable Chairs of the Finance Committee. My name is Jose Miranda, and I'm the National Deputy Political Director for 32BJ. I am speaking today on behalf of Rochelle Palachi, our Connecticut Director and Vice President. We are in support of Connecticut for All stand-up CT fair share policies, especially want to highlight SB 103, 104, and HB 5187. 32BJ represents around 40 members and over 185,000 members. Our members are the backbone of the property service industry, providing the essential janitorial, security, and other services that keep Connecticut's offices and schools, event space, and other facilities running. Our members are predominantly workers of color and immigrants who have worked tirelessly to improve job standards in industries characterized by low wages and high turnover. As a union, we are committed to making life better for working families, and we fight for a world where everyone is treated with fundamental respect and dignity. The Trump administration's sweeping budget cuts have crushing effects on working families, like those of those which our union represents, and serve to only benefit corporations and the very wealthy. A recent report from the Nonpartisan Congressional Budget Office, the Office of the Joint Economic Committee, estimated that over 173,000 residents in Connecticut could lose their health insurance under the Trump administration's new tax and spending law. Meanwhile, the budget for ICE has nearly tripled. Taxpayer money is being used to terrorize our communities and sow fear and distrust. Connecticut must do what it can to counteract these cuts at the state level to protect working people from the worst effects. Relatively to many other states in the same position, Connecticut is in a strong financial position. Comptroller Scanlon projected that $164 million surplus after a record stock market performance, given that it is unacceptable that 40% of the families in Connecticut are struggling to meet their basic needs. Due to restricted controls on the budgeting process, lawmakers find themselves unable to direct support for Connecticut's most vulnerable. The CT for All Fair Share package sets out a pathway for making much needed changes to the current system to allow greater flexibility and responsiveness to federal cuts. This alone is not enough. Connecticut's tax system is deeply broken. The lowest earning 10% effectively spent almost 40% of their income in 2020 to cover the state municipal tax burdens, more than 5 times the rate faced by Connecticut's highest earners. This bill package would bring Connecticut in step with neighboring states by increasing taxes on the ultra wealthy and crucially by establishing a child tax credit. Child tax credits are proven and effective ways to combat poverty and inequality. Connecticut remains an outlier despite this policy being highly popular with Connecticut residents, even among those not raising children. At 32BJ, we see firsthand devastating effects that financial precarity has on families and communities. We also know that even modest improvements to material conditions like those won through a union can make an enormous difference in people's lives by creating stability. That is what investments from the CT for All Fair Share package can do, create a sustainable safety net to protect our state's most vulnerable families during
You've reached 3 minutes. Please summarize.
Thank you for your time, and I appreciate you having us, especially on such a late night on Friday.
Thank you so much for your testimony. Not seeing any questions, we'll be going to Ambrosine Bennett. No, we will be moving on to Ava Zimmerman.
Thank you, Madam Chair. Honorable members of the committee, my name is Ava Bermuda Zimmerman. I'm here representing Child Care for CT, and we are also a member of Connecticut for All. We're here to talk about, we're here to talk about, you've had, like 8 hours of this, and you've heard it over and over and over again. I think the most important thing that I can say from the perspective of Child Care for CT is that in order to fix the childcare crisis and honor the work that the endowment has built last year, you need funding. And in our conversations right now, that funding is extremely difficult to find when things are so tight, which is understandable. We applaud Connecticut for All and the champions of the very diverse bills that have been put in the table for being creative, for really trying to push the edge of opportunity of funding, knowing that the crisis that we have in childcare and in other housing, healthcare, the same subsidy programs that help the same families that have small children are only going to be met if we have that funding. Earlier today, there are comments from some legislators and also other advocates who are testifying about balancing the budget, finding flexibility, and making sure that we were paying our bills, paying our pension debt down, while still taking care of those who are in most desperate of need. And I do want to recognize that these bills that are being put forward are bills to give an opportunity and an option. It's not automatically, you as legislators have the power and the authority to then determine what can happen with this money through a flurry of other bills that can help increase money in the subsidy programs. But it's not like these bills automatically give handouts or freebies to families. These families need help, and this bill gives us an option to balance a budget, keep the rainy day fund, but also tap into money that's accessible and very much needed. The fair share policies here give us options. The fair share policies here can rescue lives and really create some opportunities that families just don't have. Lastly, I want to say again, thank you to those on this committee for supporting the endowment, and that continued support again really is dependent on funding. So I hope you consider these bills and the connection to childcare and the childcare crisis, and make these proposals a possibility. Thank you so much.
Thank you for your testimony, Ava. Not seeing any questions. We'll be going
Um,
to.
I do have a question.
Oh, okay, perfect. Thank you. Go ahead.
Hi, Eva. Nice to see you.
Likewise.
So I was just at a policy presentation this morning about the early child care endowment and how transformative it will eventually be when it gets to a place where it's universal. It's able to have enough slots to cover all the children in Connecticut, and provide that support to all the families under $100,000, and limiting the cost of childcare to 7% of income above $100,000. But I know that we put, I think, about $270 million into the early child care endowment last year. I'm wondering how much money is needed in there in order to really be universal and really be transformative for the state.
So right now there's 300 million that was deposited last summer, and through already interest, we have over $7 million that has been created of new generated revenue, which is exciting. Unfortunately, the timing between being able to draw fully that amount down is going to take years, right? And the legislation that was passed is at a 10% cap of what you could draw down in order to allow compounded interest. The money that we need now and the gap that we have with just the program that started is approximately another $60 million in order to continue the slots that exist, right? So starting in January, 1,000 slots are created through Early Start, the program that's connected to the endowment. And those slots are real, they're happening, and they require to pay educators their fair share, their competitive rates based on the market. And in order for us to really support those rates and make sure that the parents who make less than $100,000 that do not pay a dime for this program and make it universal and not have a parent fee, we are missing right now $60 million in that endowment that we created. So we're scared as advocates. I am in year 14 of advocating and supporting education and childcare, and I can't even imagine the providers and owner operators who have been at it for more than 14 years, that they've spent literally their whole career advocating for this moment, because childcare has never had any funding. This is the first time in history we've seen it in the state, and we're starting already in a deficit, and we're starting already with conversations by legislators of we don't have the money. So we are not, we're really depending on the conversations of you and the other legislators of find creative solutions. Let's keep our promises. Let's make it happen. And a reminder that the return on investment in education, especially in early education, for every dollar that you invest, you're going to get $14 back. That is quantifiable. That is research, 3 decades of research through Heckman and other studies. So if we're talking about those question marks of rainy day and the $4 billion and waiting for a crisis mode of a recession, well, it's raining right now. And in addition to it being raining right now, the easiest way to avoid economic downfall for the state is to invest in programs that have a return on investment and can secure the money that we need in the future.
Well, thank you very much for that answer. And thank you for all the work that you do on behalf of childcare. It's a really important issue, and you know, it really makes a difference in people's lives here in Connecticut. So thanks again. Thank you, Madam Chair.
Thank you.
Thank you so much. Now we will be going to Andrea Celli. Andrea, welcome.
Can you hear me?
Yes.
Oh,
Thank you.
hello, distinguished members of this committee. My name is Andrea Celli. I would like to recognize that it's humbling to hear so many stories of struggle and courage as we have heard today. And I would like also to acknowledge that I speak from a place of relative privilege. I'm the father of 2 children who are currently in the school system. I'm also an associate professor at UConn, where I have taught and chaired the Italian language program for the past 10 years. And I am a member of the AAUP executive committee. I would like to share my brief testimony as both a parent and as an educator to show anecdotally the correlation between the strict spending caps and cuts to public education from the pre-K level up to college in this state. I witnessed in real time the damage that cuts inflicted on K-12 schools, teachers stretched thin and undermotivated, music and language programs closed down for lack of funding, aging buildings, and so on. This is the reason why my wife and I have been faced with the difficult and expensive decision of considering enrolling our children in private schools, despite the burden that places on our family budget and despite our belief in the mission of public education. As a resident of Fairfield County, I also know of very wealthy parents moving their children out of top public school districts into expensive private schools, because that is where real investment in education is happening. The guardrails are incentivizing exit from the public system and segregation by income. On the other hand, as a faculty member at the University of Connecticut, in recent years I have witnessed the dismantling of several graduate programs. UConn was the only public university in the state where students could receive master's and PhD degrees in areas such as Italian or medieval studies. Neither Hebrew nor Latin, the language of the state motto, are taught at UConn anymore. There are still 70 programs being monitored with the goal of reducing spending. I, like all my colleagues, am also being asked to teach increasingly larger classes with halved instructional support, while specialized courses with low enrollment are being closed down. Adjunct professors and administrative staff are being let go. This is happening at a time when the university is experiencing enrollment growth, and it has a negative impact on the quality of teaching. Professors are not able to teach the most advanced aspect of their research and encourage first-generation students toward the path of careers in teaching and research. In my view, these cuts are intrinsically connected to the strictness of fiscal guardrails and to the unwillingness to invest in an ambitious future for our children and our communities. Now more than ever, with the additional threat from federal cuts and policies, the guardrails are leaving families on their own, creating growing disparities between those who can afford sending their children to selected private schools and those who get what they
You've reached the
can.
3 minutes. Please summarize.
Yes, raising revenue is necessary to meet the needs of hundreds of thousands of people in Connecticut in an equitable and sustainable manner, but we also must modify the spending cap formula to allow investment in education. For this reason, I strongly support Connecticut for All's fair share policies and hope that you will join us in making Connecticut's tax system fairer. Thank you so much for your work.
Thank you so much. Not seeing any questions. We will move on to Faith Sweeney and Bobby Brown.
Bobby will speak first. Thank you.
Good evening, chairpersons of the Finance Committee. My name is Bobby Brown. I'm the president of the Greater Bridgeport NAACP and the CEO of 100 Girls Leading, a mentorship program in the city of Bridgeport. I'm here today because I realize what takes place in this room will impact not only schools, but neighborhoods and households. Right now, Connecticut families are facing instability fueled by federal cuts, raising costs and economic uncertainty. 40% of families in our state are struggling to make ends meet at the same time, they are being asked to shoulder decades of unfunded liabilities that do not create or support them. When families struggle, schools feel it. When schools are strained, the community organizations step in to fill the gap. But nonprofits like mine are not only compensating for structural limitations in our state fiscal framework, it is also reminding us that our schools deserve more than what they are getting, especially in a city like Bridgeport. Education is a civil rights issue, and fiscal guardrails are holding resources back from our students' future. House Bill 5187 provides needed flexibility, increasing the budget reserve fund to 20% will create an additional $510 million in available protection against recession and federal instability. Adjusting the cap allows Connecticut to respond to real-time economic conditions that are being constrained from outside data thresholds. Fiscal responsibility does not mean fiscal responsiveness. This is why House Bill 103 establishes permanent refundable child tax credit and why it's essential. This policy would reach 75% of our families in Connecticut, impacting more than 550,000 children. It will provide immediate stability for households facing immediate needs, groceries, childcare, and transportation costs. Every dollar invested in the child tax credit, 38 cents is returned to the economy. When families are stable, children thrive. When children thrive, schools and communities grow stronger. We are encouraging each of you in this room to invest in our schools, invest in our communities, invest in our children, because when our communities continue to invest, we strengthen our communities and we strengthen our families. Now I'll turn it over to Faith.
Thank you and good evening, and thank you for this opportunity to speak. My name is Faith Sweeney, and I'm a Bridgeport resident and a Westport Public School teacher. I am here because the decisions you make determine what students experience every day in our classrooms. I am in my 30th year of teaching. I have seen what happens when funding is strong. Schools are able to offer innovative programming, teachers have access to resources that they need, and students receive the supports that help them grow and succeed. I have also seen what happens when funding is depleted. Programs are canceled, class sizes rise beyond what supports effective instruction, and teachers stretch limited materials and time to meet the needs of every student sitting in front of them. I would like to ask the committee to consider these questions as you make very important decisions about the financial well-being of Connecticut. Are we giving towns and cities enough room to keep schools stable? Or are we forcing them to constantly cut their budget? Are we asking those who can most afford it do their fair share to support our communities? Are we helping families stay steady at home before those struggles show up in our classrooms? What happens to our state years from now if putting off investing in our children by putting off our investments in our children today. And most importantly, when students walk into school Monday morning, will the fiscal decisions we make today expand their opportunities or narrow them? I am in full support of HB 5187, 5133, SB 101, 103, and 104. These policies can positively impact the support Connecticut schools need, families need, and our communities need. Thank you for the time.
Thank you so much. Very good to hear from you. Not seeing any questions, we will be moving to Jim Paris.
Thank you.
Do we have Jim Paris?
You do.
Perfect. Thank you.
Great, thank you.
Go right ahead.
Great, thank you. Chairpersons Horn and Funfair, ranking members and members of the Finance and Revenue and Bonding Committee. My name is Jim Paris. I'm the CEO of the Home Builders and Remodelers Association of Connecticut. And I'm here today in strong support of House Bill 5060, which increases the apprenticeship tax credit for wages paid to apprentices in the construction trades from $4,000 to $7,500 per apprentice. Connecticut is facing a well-documented housing crisis, and one of the most significant and often overlooked constraints on housing production is a severe workforce shortage in the construction trades. And simply put, even when projects are approved and financed, homes cannot be built without skilled workers. This workforce challenge is not theoretical. Our industry is aging rapidly, retirements are accelerating, and too few people are entering the trades to replace them. As we told this committee when the similar bill was before you in 2023, workforce shortages are directly limiting housing supply and driving up costs. What was true then is still true today. House Bill 5060 helps to address this problem in a practical and targeted way. Apprenticeship programs work, but they come with real costs for employers, especially small construction businesses. Most contractors in Connecticut are small, locally owned companies operating on tight margins. Hiring an apprentice means paying wages while also absorbing training time, supervision, and productivity impacts. By increasing the credit to $7,500, this bill provides a meaningful incentive that can move employers from hesitation to action. It helps offset real costs and encourages more businesses to take on apprentices and invest in the next generation of skilled workers. I'd also respectfully urge the committee, as this bill continues to be developed, to consider including a pass-through provision similar to the manufacturer's apprenticeship tax credit. Many construction employers are pass-through entities and do not have sufficient corporation tax liability to fully utilize the credit. A pass-through mechanism would ensure this incentive reaches the employers who are actually training the apprentices and would significantly strengthen the bill's impact. Workforce development, housing supply, and economic growth are all inseparable. If Connecticut is serious about building more housing and improving affordability, we must also be serious about growing the construction workforce. And for these reasons, the Home Builders and Remodelers Association of Connecticut strongly urges support for House Bill 5060. Thanks for your time. Happy to answer any questions.
Thank you. Not seeing any questions. Are there any online? Thank you so much for your testimony. It joined a few other people who testified on the same bill, asking for the same expansion. Thank you
Great.
so much.
Thank you.
Next, yep, thank you. Next, we have Ariana Gonzalez. Oh, Ariana, if you could unmute yourself.
Hello.
Okay, go ahead. We can hear you.
Hi. Hey.
Hello. You can go ahead and give your testimony now.
Hello.
Ariana, go
Yeah,
ahead.
Hello, you all can hear me?
Yes, yes, we can hear you. Go ahead.
Hello.
Yes, Ariana, can you hear us?
Yes, you can hear me right now?
Yes, yes, we can. So just go ahead.
All right. Hello, good night. My name is Ariana Gonzalez. I live in New Haven, Connecticut, and I'm a member organizer with Connecticut Students for the Dream. We are part of the Connecticut for All Coalition. I've been living in my own for some time, and now I have to be responsible for all my expenses. I'm a student and I'm a worker. And now I understand what it means work from sunrise to sunset. I have to leave my home at 6 a.m. and return until 9 p.m., which means the cost of rent and food has forced me to work 2 jobs to cover my monthly expenses and still try to save money for emergencies, especially medical ones. Considering that I'm not eligible for Medicaid and I can't afford health insurance, I have to pay all my doctor's appointment and prescription out of my pocket. It's all political issues. Connecticut must protect our state and provide stability for families facing federal government chaos. Elected leaders must take action and support Stand Up Connecticut's agenda. If CT funds for community needs to the level needed, there will be no need for look for another job to live. Parents will be able to spend more time with their families and take better care of themselves and go to the hospital when it's necessary. This way, we ensure the families in Connecticut keep together. My academic achievement will be improved, and I will no longer have to debate daily whether if I want to sleep 5 more minutes or I want to get breakfast. We must continue bring our community together and support young folks hungry to take a bite of the world. Do not limit the future of tomorrow, and mostly important, do not take away from us what we have worked so hard to gain. Raising revenue is necessary to meet the needs of hundreds of thousands of people in Connecticut in equitably and sustainable manner. If we seek to replace some of the federal investment with this new renewed source, we must be able to spend it. We must reform the fiscal wordings in order to respond to the attacks to our safety net from the federal administration. I strongly support Connecticut for All, Stand Up, City First, share policies, and hope you will join us to make Connecticut's tax system fair. Thank you so much.
Ariana, thank you so much for your testimony. Can I ask, are you a student and where, if you are?
Yes, I'm a student. This is my second year at Gateway Community College in New Haven.
Wonderful. Well, I hope you are having an excellent education and that you're enjoying your studies there. Well, thank you so much for your testimony. Not seeing
Thanks
any
for
other
listening.
questions. Yep. No, thank you so much. It's really important to hear from our youth here and how, they're being affected by all the different changes, tax codes on the ground, particularly on healthcare. So thank you so much for testifying. So next up, we have Randy Collins with the CCM. No. Do we have Corey Worrell? Oh, do we have? Oh, Thomas Connolly, 115. So Thomas Connolly, I think you're next.
Hi, can you hear me okay?
Yes, we can. Thank you. Go ahead.
Yeah, good evening, members of the Finance Committee. I know it's been a long one for everyone here. My name is Tom Connolly. I live in West Hartford. I'm a volunteer with the People's Center, a member of the Connecticut for All Coalition, and I submit this testimony in strong support of the Stand Up Connecticut Fair Share policies. The Trump administration has made its agenda unmistakably clear. Protect billionaires and large corporations, no matter what the cost of working families and communities. Connecticut has a responsibility to respond. The H.R. 1, the federal government enacted the largest transfer of wealth from poor and working people to the rich in a single law in U.S. history. At the same time, communities face over $1 trillion of cuts in essential programs, SNAP, healthcare, housing assistance, mental health for our students, while families lose their services they rely on. The ICE budget has tripled, $170 billion, and the wealthiest 5% receive massive tax cuts. These policies are not abstract. They destabilize families, deepen hardships, and terrorize communities, using money taken from those same communities. Working people and small businesses in Connecticut need stability and real relief, not more cuts and uncertainty. Without a clear response from our state leaders, federal policies will push our state toward a real humanitarian crisis. I want to reference a book I keep on my desk. It is a reminder of the kind of America many of us are trying to create. It is the last book that Dr. King wrote before he was assassinated. Where do we go from here? Chaos or Community, published in 1967. He writes about the idea of a guaranteed income. I am now convinced that this simplest approach will prove to be the most effective. The solution to poverty is to abolish it by a widely discussed measure, the guaranteed income. About racism, poverty, and militarism, he writes, for racism, poverty, and militarism to end, a new set of values must emerge. Our economy must prioritize human beings over property and profit. And Dr. King warns us, the segregationist agenda aims to undo all reforms, restate blatant oppression, or even a form of native fascism within our nation. Racism could well serve as the cohesive force that ends Western civilization. Dr. King's book is not just history, it is a challenge. This is a moment of choice. Connecticut can follow federal policies that deepen inequality, or we can choose a different path. We can act to protect our families, our seniors, our students.
You've reached 3 minutes. Please summarize.
Well, that is why we urge you to support the Connecticut for All share policies that have been discussed here today. They move us towards a community instead of chaos, and toward an economy that works for all. Thank you for the ability to testify, and thank you for all you're doing to help Connecticut. It's much appreciated.
Tom, thank you so much for testifying too. Not seeing any questions. We will be going to, let me just check. Yep, we will be going to Rosanna Ferraro. Welcome, Rosanna. Just unmute yourself.
Sure. Can you hear me all right?
Yes.
Great. Good evening, members of the Finance Committee. I'm Rosanna Ferraro. I'm a resident of North Branford and the policy director at Universal Healthcare Foundation of Connecticut. We are also a member of the Connecticut for All Coalition. I'm speaking today in support of SB 101 and 104 and HB 5133 and 5187. My colleague will be speaking on the child tax credit. One thing that I was struck by hearing the testimony today was that, one, I was definitely not a tax expert. But even though I might not be a tax expert, I am the expert in the future that I want for myself and for my family, my friends, and my communities. I've been reading this book called Imagination, a Manifesto by Ruha Benjamin. One thing that struck me is when she writes that we need to, quote, reckon with who and what currently monopolize the space to envision the future, hoard the ability to dream, and privatize the resources it takes to materialize our imagination. The fiscal controls monopolize the space to envision the future. Those who have the most in the state that don't pay their fair share hoard the ability to dream. When we prioritize paying extra on a debt over investing in our people, we privatize the resources it takes to materialize our imagination. I work for Universal Healthcare Foundation, so of course the world that I see as a place where we all have access to quality, affordable healthcare and all the things that we need to be healthy. And I see more than that. I see all of us living the lives we want to live, not just survive, not just struggling by. Passing these bills is part of the reckoning we have to do to be an equitable state. Miss Benjamin goes on in her book, quote, "After reckoning comes igniting the power to imagine other ways of organizing social life and building a world in which everyone can thrive." I and Universal Healthcare support the Connecticut for All Fair Share agenda because we need the freedom to imagine and build the thriving Connecticut I know is possible. Thank you for your time.
Thank you. Now I think your colleague Quinn Meehan will be on.
I am. Thank you. Sorry for the delay. Thank you, Rose. My name is Quinn Meehan, and I am a policy intern at Universal. Thank you for the opportunity to testify on the on SB 103, an act establishing a refundable child tax credit. I'm sure you've heard a good amount of testimony today on the impact this will have on families, and we know that families in Connecticut are struggling financially already to afford what they need. But I want to highlight the ways in which the COVID pandemic has intensified these challenges and exposed how fragile economic instability can be for many Connecticut families. Children experience disruptions to schooling, social development, and access to health and behavioral health services. Families face job loss, reduced hours, increased caregiving demands, and heightened stress. And we continue to see rising behavioral health needs, academic recovery challenges, and greater strain on families, particularly those already facing inequity and economic hardship. A refundable child tax credit would give families flexibility to afford the services that they might now need, such as therapy, tutoring, and care for new or ongoing medical needs due to long COVID, while providing caregivers greater stability to meet their children's evolving needs. Additionally, when caregivers must work multiple jobs to make ends meet, they have less time and energy for meaningful connections with their children. And financial precarity not only strains budgets, but strains relationships with patients and well-being. This is especially impactful for families raising children with disabilities, who often face higher out-of-pocket costs and reduced workforce participation due to caregiving responsibilities. These families may need even more flexibility, energy, and resources to meet their children's needs, and a refundable child tax credit provides stability that supports both care and health. SB 103 is not just an investment in families, it's an investment in Connecticut's future. Poverty drives higher Medicaid spending, increased emergency department utilization, and greater long-term public costs. Supporting families early is far more cost-effective than addressing preventable health or housing crises later. So if we're serious about controlling healthcare costs in Connecticut, we must address the economic conditions that drive poor health in the first place. So Universal urges the Finance, Revenue, and Bonding Committee and the Connecticut General Assembly to pass SB 103. It's time for Connecticut to invest in caregivers, children, families, and workers, and to recognize economic stability as foundational to family health. Thank you.
Thank you so much for your testimony. Not seeing any questions, we will move to Christina Barman. Christina, would you be able to promote yourself to a panelist? Accept the invitation? Perfect. Go ahead, Christina. So we're having issues with Christina's connection, so we will be going to just 1 minute. Celise Mendez?
No, they testified before.
Okay, so first we will be going to Louise Williams. Welcome, Louise.
Hi. Good evening, members of the Finance Committee. I'm Louise Williams. I'm a history professor at CCSU and president of CSU AUP, the union that represents faculty members at the 4 state universities. I'm also vice president for higher ed for Connecticut AFT. We are all proud members of Connecticut for All Coalition. I'm here to encourage you to find a way to fully fund the public services that do so much good for our residents. I have worked in Connecticut at a state university for almost 30 years. In that time, I have seen what was once an excellent system of public higher education that was affordable for almost all residents be gradually eroded. 3 decades of state underfunding has led to an almost continual crisis in our colleges and universities and has closed off opportunities for so many residents because of ever-increasing tuition costs. This is very sad to me. I came here from New York City. While finishing my PhD there, I worked 3 jobs, one of which was as a part-time faculty member in the CUNY system. When I got a job at CCSU and moved to Connecticut in 1997, I was thrilled. This was not just because I had a steady full-time job, but because I no longer had to face the constant drumbeat of uncertainty about funding and lack of resources in deteriorating buildings. At Central, we had a working photocopying machine, small class sizes, time to innovate pedagogically, and funds to conduct advanced research. I couldn't believe my luck to have ended up in a state that really cared about education. Well, all that is gone. I find myself back in the New York City of the late 1990s. In fact, Connecticut is even worse than that now. 35 years ago in New York, as a part-time faculty member, I got health insurance through CUNY. Here in our CSCU system, we don't even have sick days for our adjuncts. They must come to work ill, even with infectious diseases, or they don't get paid. Last year, I thought there might be some hope for the future of higher education in Connecticut when the Finish Line program was established to extend the PAC tuition assistance from the CT State Community College to the state universities. But then I learned that not nearly enough money was appropriated to cover all eligible students. And a few weeks ago, our governor cut that funding in half. Only a few hundred residents will now benefit from the added income and skills a BA degree confers. Enrollments will not increase. There'll be no way to fill our huge workforce shortages in areas that require university degrees. I understand that underfunding of higher education in Connecticut began during decades of recession, but that is no longer the case. We've had years of huge surpluses. We have more millionaires and billionaires than almost any other state, and yet we refuse to provide opportunities for our middle and working classes to help themselves. New York has not done this. They have invested millions in higher education in the form of tuition assistance. New York is now home to the nation's first accessible higher education program, where almost 1 million residents can attend college and universities tuition-free for both 2 and 4 years. Connecticut is falling behind. So I urge you to find a way to adjust our guardrails and create a fair tax system to help all the people of Connecticut. I urge you to consider carefully Connecticut for All's Stand Up for Connecticut Fair Share policies. Thank you.
Thank you so much for your testimony. Not seeing any questions. I see we have Christina Barman back. So Christina, go ahead, unmute yourself.
Hi, thank you. My phone died just as you were calling me before. So my name is Christina Barman. I live in Hartford, and I'm a member of CSU AUP and part of the Connecticut for All Coalition. I support Connecticut for All's Stand Up Connecticut Fair Share policies. I've been here to testify in front of you many times. I study gerontology. Sometimes it's about public health, aging, or to express support for the long-term care workforce. But most often it's to beg for funding for higher education. And I can go on and on about the sorry state of higher ed in Connecticut again. It's worse now than the last time I was here. Now we are talking in my department about how to pay for paper. There is zero budget for the gerontology minor program. There is zero budget for our women's gender sexuality studies program, zero budget for African American studies. So what Trump started with ideology, we will be finishing with fiscal responsibility. I could go on. It's been a long day. I know that I've been popping in and out, and you all have been here for a really long time, and we're all tired, and you've heard most of it already. So I will be quick. I just want to emphasize a couple of things. The situation, what we're doing here now with the fiscal guardrails, it may have started as fiscal responsibility. We need to deal with the pension debt, but what we're doing right now is not fiscal responsibility, it's neglect. It's getting to the point, especially with the Trump tax cuts and the big beautiful bill. It's getting along the line with what Reagan did with the AIDS crisis, all in the name of fiscal responsibility. People are not going to make it through this alive. Higher ed is just one example of the many that you've heard today. The guardrails are not putting us in a better position down the road. It's going to cost us more down the road to fix our broken, underfunded institutions in the future. So this isn't responsible. It's not responsible to not pay for paper. In terms of our upside down tax system, it's not fiscally responsible to place the burden of taxes primarily on the middle and working class of the state. It's not trickling down. It's not going back into the economy. The gift that our federal tax system now gives to the ultra wealthy should not continue and should not be repeated on the state level. We need to do better. And these aren't charities. We're asking for the taxes we pay to go to the services that we need. We need to do better. We needed to do better before the federal government started the shenanigans they're doing now. But now it's an emergency. We're on fire. Anyway, I hope we can do better, and I hope we can think about what fiscal responsibility means. Thank you for your time.
Thank you so much. Not seeing any questions in the room. We will go to Maribel Rodriguez next. Hi,
Hello.
Maribel. Go ahead.
Hi. Dear Senator Fonfara, Representative Horn, and members of the Finance Committee. My name is Maribel Rodriguez, and I live in Waterbury. I am a mother and a grandmother. Today, I testify in support of Senate Bill 103, an act establishing a child tax credit. I have a 5-year-old child that I started caring for when she was only a week old, and I have since adopted her. She is so loved, and my dream for her is to have a healthy and successful life. I want her to be a kind and educated woman. I want her to know that whatever her dream is, I will always support and encourage her. I want to always provide different opportunities so she can thrive. She is currently in dance school, and it is very expensive. I know she also loves gymnastics, but that is also very expensive. So I have to pick something less expensive. I want to fill her life with experiences so she can find what she loves the most. I want her to learn to swim and to play an instrument, but all those things cost money. And as a retiree, I live on a small pension to pay my mortgage. And the high cost expenses like electricity, heat, and my cell phone is a challenge. A $600 tax credit would help a lot for those extra activities and to enrich my child's childhood. I believe the more experiences children have, the more well-balanced and informed they will be. They are our future. The cost of living in this state and across the country is too expensive. I was lucky enough when I bought my home, it was affordable for me at the time, but the rising cost of utilities is making everything much harder. I have higher bills and less money to do all the things I would want for my child. I also took in another grandchild a year ago. So she is 16 and I also have to provide for her. I also support House Bill 5187, an act adjusting the fiscal guardrails, and 3 bills to ensure that the wealthy pay what they owe in taxes. HB 513 and SB 101 and SB 104. The taxes we pay are higher than millionaires and billionaires, and they need to pay their fair share. We've had enough with their tax breaks. It just helps make
You reached 3 minutes. If you could please summarize.
Yes, it only take it helps make millionaires into billionaires. Well, while the rest of us have to deal with deciding which bill to pay which month and which will have to be paid later. We must invest in our families. We must invest in public schools, healthcare, food justice, and clean energy if we want to build a society for all and for all children to thrive. I strongly urge this committee to vote in favor of those 5 bills. It's time for Connecticut to invest in women, children, and families and workers. Thank you for your time.
Thank you so much. Next, not seeing any questions, we'll go to Josh Mitchum. You want to go ahead and unmute yourself?
Here I am. Thank you. I'll try to be quick because pretty much everything I was going to say is what Ms. Rodriguez just said. I wanted to support the same bills: House Bill 5187, House Bill 5133, Senate Bills 101, 103, and 104. And I'll just speak generally as an elected city councilman for the city of Hartford. It's been too long that the poor and working class people of my city and of the other cities have subsidized the good life of wealthy people in this state. And it frustrates me every day, also as a lawyer who represents children, mostly in those cities, to see young people who have the potential to thrive, to see families that have the potential to thrive, stifled under the burden of so much privation, of not having the basic things that would let their work turn into success. And so it's time for us, the cities and the working class, to stop subsidizing the rich in this state. I would just like to see them pay their fair share. And, we know that this won't drive the very rich away. We've seen this happen in other states, and they stay and they start to pay their fair share. It worked in Massachusetts. It can work here. So I urge you to support all of those bills. It's been a long day. I can be done.
Thank you so much for your testimony. We do have one question from Representative Zupkis.
Thank you, Madam Chair. Thank you for testifying. I believe I heard you say that we give subsidies to the rich and pay more in taxes than they do. Is that what you said? I just don't want to put in your mouth.
Between me, I certainly believe that. I think between me and Ms. Rodriguez, I think we covered those points. Yes.
Yeah, great. Thank you. Could you tell me how?
Sure. From the perspective of a city councilman in Hartford, a big way is that we host this building that you're sitting in, that we don't get taxes on to support our services. We host hospitals, drug treatment programs, all manner of social services for folks who live outside our borders, who are much wealthier than we are and don't contribute to that upkeep. And of course, as you well know, the legislature never fully funds the pilot money designed to reimburse that. So that's just one.
Yeah, I agree. It doesn't fully fund, and this building doesn't pay taxes, and the hospitals, and I totally get it. But I wasn't connecting how you were talking about subsidizing the rich, or that we pay more in taxes than they do. So that was really, I completely understand about Hartford and the tax base and not being able to collect taxes on a lot of property, this building, of course, and others. So that was my question.
Well, and I'll add, if I could, another example is that, when the rich pay a smaller percentage, or even just the same percentage as the poor and working classes pay, practically speaking, that's a subsidy, because we all need the same thing to live. Milk costs the same for me as it does for a millionaire. And so if they're paying the same percentage of taxes as me, or a lower percentage, effectively, in real world terms, I'm paying more. They should pay a much higher percentage because they don't need any more to live than I do.
Right. Well, I just was curious about what you were talking. I just wanted to question your thoughts on that. Absolutely. A gallon of milk is, costs the same for everybody, and gas costs the same for everybody, and all of those things. I think one thing that this state needs to look at is what the taxes we put on the citizens in this state. And I'm sure the 1% meal tax that went on, and the highway tax for trucks, and people that we order something, whatever, or groceries or gas or mail, and all that is exported into the state and out of the state. And so we have taxed those, which cost us all more money, and the working people and the poorer people, and it costs everybody, right? It adds to that gallon of milk or the price of a gallon of gas. So thank you. I thank you for your answer. And I just was curious about that question. Thank you. Thank you, Madam Chair.
Thank you so much, Josh. Not seeing any other questions, we will go on to our next panelist, Julian Schaefer. Go right ahead, unmute yourself.
Hey there. I was hoping to follow my student who just happens to be a couple of slots before me, I think. But good to see y'all. My name is Julian Schaefer. I'm a teacher I'm a teacher in Danbury, Connecticut. I'm a resident of Bridgeport, Connecticut. I'm speaking today in support of Connecticut for All's fair share policies. I grew up in Ridgefield, Connecticut, right? So I've seen what I think folks have called is like a tale of two Connecticut's, right? I went to well-funded schools. They were great, great facilities. I had guidance counselors who had the time to meet me when I was in crisis, or when even if I wasn't in crisis, right, and I just needed someone to talk to. I really was strongly supported by my schools. I teach in a school system, right, where our guidance counselors have caseloads of 350 students, right, and it's difficult for them to, take care of our students' needs, who really, when experiencing greater levels of poverty, right, whether it's, and especially due to the cuts in the big beautiful bill, right, that are happening to SNAP, that are happening to our community's basic needs. The needs that our students have are even greater, right, and we have less to service those needs. So I don't want to take too much time. I think a lot of the points have been made here today, but really, the inequality that we experience in our state, some of the greatest inequality in the country. We live in one of the wealthiest states in the country. We have the money that we need to provide for our students' basic needs, right? Those are, that's the lens as a teacher, as a union leader that I see, right? We need money for these things, and the money's there. Again, growing up in Ridgefield, Connecticut, I, had friends whose families had more rooms than they knew what to do with, right? The wealth is here in Connecticut. It's a choice on whether or not we are going to tax the wealthy and use that to support folks' basic needs and raise everybody's standards of living here in Connecticut. So thank you all for your time.
Thank you, Julian. And thank you for being here to advocate for your students, one of whom I think was having technical issues, so she is back. I don't see any questions, so we could go straight to Celise. Celise, can you unmute yourself? Perfect.
Yes, hi. Okay. Good evening, members of the Finance Committee. My name is Celise, and I'm a senior at Danbury High School. I'm a member of Connecticut Students for a Dream, an organization that fights for the rights of immigrant students and their families. And I'm also part of the Connecticut for All Coalition. I am here in support of Connecticut for All stand-up CT fair share policies. Communities across our state are facing devastating federal cuts to SNAP benefits, housing support, and healthcare. I am one of the many people directly affected by this. I grew up with 3 siblings, and life was not easy. After my dad passed away, my mom and my older sister were responsible for paying the bills and putting food on the table. In mid-2025, my mom's SNAP benefits were cut off. That is when everything changed for us. We started struggling more than I could have imagined. It became extremely hard to afford groceries, and when we did buy food, it was not enough to last the entire month. My little sister and I depended on school lunch as our only guaranteed meal of the day. My older sister worked extremely hard to provide for us because my mom cannot work due to her disability. When we had SNAP benefits, we didn't have to constantly worry about where our next meal will come from. It meant stability, it meant relief, it meant we could focus on school instead of hunger. Now, instead of thinking about college and my future, I sometimes worry about whether there will be enough food at home. Sometimes we ignore hunger. Sometimes my sister stretches her paycheck even further, trying to balance groceries with rent, utilities, and other rising bills. We are not alone. Tens of thousands of Connecticut families are expected to face similar consequences due to federal cuts. These are real students, real children, and real families. This is why Connecticut must act. If the federal government is cutting essential programs like SNAP and healthcare that also covers housing for immigrants, our state must step up to protect working families. HB 5187 is critical because the current fiscal guardrails limit the state's abilities to available resources to respond to crises like this. It does not make sense to restrict funds while families are going hungry. Adjusting these fiscal rules will allow Connecticut to invest in food assistance, healthcare, housing, and education when we need it the most. HB 5133 is also important because the solution should not fall on struggling families. The richest people in our state can afford to contribute more so that children do not go to bed hungry. The Fair Share package would allow Connecticut to invest in SNAP support, housing stability, healthcare access, childcare, and public education, the very programs that keep families like mine afloat. I respectfully urge you to support HB 5187 and HB 5133. No student should have to worry about hunger while trying to graduate high school. Thank you so much for your time.
Thank you so much, Celise. Not seeing any questions, we will go to Dylan Mary.
Good evening, folks, and thank you, Celise, as well for your testimony. My name is Dylan Darius Mary. I'm the founder of June Gardens LLC here in Newtown, Connecticut, where my family immigrated to from Iran in 1963. Here at June Gardens, we produce fresh vegetables, herbs, and flowers and make value-added products for the local community, as well as provide nature and outdoor education for families, youth, and adults on our farm and with local organizations around the state. I'm also a new member of the Connecticut Food Sovereignty Collective, and I'm here grateful to join the voices of community members and organizations urging our legislators to take immediate action to address the urgent needs of access to dignified food, housing, education, healthcare, transportation, and safety. There's no time to waste in the face of tyranny that we are facing in our communities. We need our leaders to act fearlessly, standing up with working people, small business owners, educators, healthcare professionals, people who grow and serve our food, maintain our infrastructure and buildings, people who make our lives function. We must not rely on contracts with weapons manufacturers who produce tools of genocide. We must break our ties with the system of corporate welfare. We have enough resources to feed, house, educate, and care for all who call Connecticut our home. And so we're urging that legislators take the Fair Share tax proposal seriously. At this critical time in our history, I'm asking you to answer the call, adopt and implement the policies proposed by Connecticut for All's Stand Up CT agenda. We have the solutions in front of us, but it takes all of us to lead us into a future that sustains life. This decision is ours. Thank you so much.
Thank you so much. Not seeing any questions in the room or online. Thank you so much. And our next testifier will be Sam Pudlett. Sam, go ahead.
Hi. Hi, I'm Sam Pudlett. I'm a resident of Hartford. I'm a founder of the Hartford Jewish Organizing Collective, which is the largest Jewish group and congregation here in the city. I don't know if we are actually formally a member of CT for All, but I'm here in support of them on the question of how we're going to be funding programs in this state. And I wanted to just drive home for people. I wasn't able to watch all however many hours it's been, unfortunately, so I don't know if this has already been said, but how funding cuts are affecting people right here, right now. In our town, we had for a few years a group of people, city employees, who would respond to mental health crises, right? So when you have something like that going on, you see it in your family or something, you call 211. They send someone to de-escalate, get that person whatever help they need. And federal funding for that is gone, of course. And our mayor decided that he didn't want to take money away from saying the word AI a bunch. I think that's where it went. And so he just scrapped the program. Technically, it still exists. It's just not functioning. And so this morning, a man who was unwell, wasn't really sure, it seemed, where he was shot by the police. He's in surgery, I believe, right now. And we hope he makes it through. We're all praying. Exactly 1 week ago, last Friday, they did the same thing. Someone called 211, said my dad's off his meds. they sent the police and the police killed him. And these services that we need funded are life and death. In this case, this just seems like the most obvious example of that. But everything, food, housing, that's life and death. And you can't count on the federal government to do it anymore. You can't count on city governments to use their resources effectively. You guys kind of need to be the adults in the room right now. And definitely people have been talking about how the rainy day is here. But the purpose of the state's budget is to keep the state running and keep people in the state alive, able to keep paying taxes. You have a budget for next year. It's not fiscally responsible to not use the money that's meant for that. You're holding on to it for no purpose. You're losing it. Thank you. Unless somebody has a question.
Thank you so much for your testimony. We do have one question, Senator Fanfara.
Thank you, Madam Chair. Sam, the last time I saw you, you were 5 years old with your father.
Yep.
Who I had the privilege of serving with and enjoyed my relationship with him very much. And I'm glad to see, and he would be very proud, he is very proud of you for taking up the mantle as you have and your family has. And we miss him. It's been a long time when we're in the house together, and he, as you know, he had a great sense of humor, but he also had a strong moral compass, and that's been passed on to you. So it's great to see you here today and testifying on behalf of the broader community.
Thank you.
Thank you, Sam.
It means a lot. Thank you.
Go ahead.
Thank you, Mr. Chairman. Appreciate it. I too served with your dad. I took some good walks around the park with him, and he was just a great guy. We got along very well, and every time I took a walk with him, by the end of the walk, he'd tell me that he's got a good opponent for me. So that's my memories of him. But they're fond memories for the most part.
Yeah. That is something he would do. Yeah. Right. Well, thank you guys.
Oh, there's one more.
Oh.
Do you want to call on? I believe, is Sam Summers online? She. Sam, can you hear us? Sam Summers?
Yes, hello. I'm so sorry. I wasn't sure. I got the notification to promote, but I'm out of order, but I'm happy to be heard.
Quite all right. The floor is yours.
Excellent. So my name is Sam Summers. I'm here tonight on behalf of the Connecticut for All Coalition, my union, Yukon AUP, and I'm also a member of New Haven Rising. And I wanted to testify with all of you today because though I absolutely hate public speaking, I wanted to get over my fear to just tell you and everybody listening and considering this legislation that the state of Connecticut needs change. I am a state worker. I'm a proud state worker. The reason that I'm able to be a professor at UConn is because my family is, my grandfathers were both union members and public employees. And so the legacy that I carry with me is one of understanding that a path to a good life involves service and taking care of other people. And it also involves fiscal responsibility and innovation, but also being paid what you're owed and being paid a living wage. And that is not happening for state workers in Connecticut. It's not happening for professors at UConn like myself. The sticker price salary for my position, a full-time position at UConn Waterbury, I make $68,000 a year as a full-time professor at UConn, but my take-home pay is less than $45,000 a year. And that is shocking. And I can't keep up. I'm actually having to leave academia and leave my position at UConn because there is no retirement calculator on the internet that shows a path to me and my family being able to retire with dignity before I'm 80 years old. And I can't plan to work until I'm 80 years old. So I have to leave this industry behind. I have to leave my state public service behind. And I have to be honest with you that I feel a responsibility to my students to be honest with them and not be part of a broken promise. And that broken promise, as I see it, is one that my family was part of. You work hard, you get your degree, you get a good job, you serve others, and you live a life of dignity. And that is just not happening anymore in the state of Connecticut for state employees and for too many others as well. And I have over a decade of experience teaching in higher education. I have a PhD from UCLA. This was working at UConn. Waterbury was the job of my dreams. Like, I couldn't believe my luck. And I have to leave because I can't keep up. And a good part of that is because of the givebacks that were negotiated in 2017, the same year that these fiscal guardrails came into being. And when I tell you the sandwich generation is not just about care for elders and care for children, it's in this state also about paying off debt that was not incurred by me.
Your
and
3
having
minutes
my-
are up. If you could please summarize.
Yes, absolutely. And paying off debt that was not incurred by me for benefits that I will never see while having that money taken out of my own paycheck. So we need change. We need to adjust the fiscal guardrails, and we need to be taxing the wealthy. We need to support the Stand Up CT agenda. It's past time. Thank you.
Thank you. I believe Representative Farrar has a question for you.
Hi, Sam. I just wanted to thank you for being here as your representative. I'm grateful, as you said, that you jumped through that fear of speaking and joined us tonight. And I think it's extra special. I think you might be our last one of this hearing. And I just want to thank you for sharing so personally what you're seeing. And it really hits home for us as we end this hearing. So thank you so much.
I appreciate it. Thank you, Representative Farrar.
Thank you, Representative, and thank you, Sam, for bringing us to closure. You will. Oh, yeah. Sorry. I believe you are our final speaker this evening. So anyone else that we have missed? No? Okay. Well, thank you to those of you who came both in person on Zoom and lasted with us through the day and stuck it out. And thank you for my fellow members who are up here, hearing the voices of those who are affected by the things we do. So, Mr. Co-Chair, thank you. Okay. I believe we are about to adjourn. Yes, stay tuned for when the next hearing is going to be. That's under some discussion at the moment. But I believe I can tell you with certainty that there will be no public hearings for this committee next week. So there you go. All right, we are adjourned. Thanks, everybody.
Thank you, Madam Chair.